Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday pre-market prep. Spencer Israel, Joel Elconin, and Dennis Dick with you for another exciting day. Hope you all survived the great meltdown, the great bear market of 2021. Lasted for like 40 minutes or an hour yesterday. We'll talk about that. Buy the dip works again. We've got a couple of earnings on our radar. We got some high-flying, low-price stocks on our radar. So a lot to get to. It's just a continuation of the same theme. The high flyers, the lower-price stocks are moving. The mega caps are really not. And that's just how it's been, and that's just how it's going to be until it's not anymore. So our guest today is Buck Andrews. He's the co-founder of Inform. Today's show is also sponsored by Inform. Their enterprise news productivity tool is designed to enable you to perform more thorough stock research by isolating the specific articles and headlines that are most impactful to your portfolio. To learn more, go to inform.info. It's IN4M, the number 4. It's on the screen there. .info. Hit that like button, hit subscribe, do what you do. Let's bring Joel on now. Joel, how are we doing in the pre-market session?
Doing well, Spencer. Good morning. We're up 11 handles at 39.14. A little overnight dip to 38.95. We rebounded as high as 39.1850. Crude 9-day winning streak in jeopardy here, down 41 cents at 58.27. Gold holding up in the mid $1,800 handle, up $2.50 at 18.4520. Silver joining the rally, that's up 15 cents at 27.24. And Bitcoin getting a little bank love, that's up $2,175 at 47,090. We're talking about the futures. Triple D, did you have any circuit breakers go off yesterday? Were we a full out alarm?
When the crash happened?
Oh, Jesus. I was hiding under my desk.
I was actually on the phone with a reporter when it started going down. And I was like, I got to go buy the dip. That's a joke, actually. But the buy the dip works again. I mean, we sold off about 30 points in, it felt like about 4 minutes. I know it was a little longer than that, but it felt like it was pretty fast. This is what happens. You're in the bull markets and you're going to see these violent little sell-offs as people, start paying, oh, this is it, I got to lock in my profits. And then they buy the dip again. I don't know what to say on this overall market. It's a very confusing market. I am a little bit nervous. Not so much that we're overinflated, but there's so much mania around these small caps that, we've been talking about it for a while. The mega caps, are getting forgotten. We're seeing certain sectors like utilities and staples getting actually sold so that money can fly into sundial growers or the latest pot stock. I mean, you've got the mania going so much. People are like, I don't want to be in Campbell's soup right now. I don't want to be in Coca-Cola when I can go get in sundial and make, double my money in 2 days. So, I mean, it's hard to argue with that. I mean, it's working. The penny stocks are working very, very well. I mean, I've been playing around with a few of the penny stocks as well, and they're doing really good. I don't know, when the party ends, or maybe it doesn't. Maybe Reddit can just keep the party going. They just keep moving from house to house to house, or from stock to stock to stock. And that's what we've kind of seen. I mean, they've left all the short squeeze stocks. If you look at GameStop and you look at AMC and you look at Revlon and you look at, the list of 60 stocks that we were talking about, almost all of those stocks are kind of right back to where they started. So they came in, had the party, squeezed the hell out of them, squeezed the life out of them, and then they just came back to where they were. I mean, GameStop isn't quite down to where it was, but I mean, the majority of the gains are gone. So at the end of the day, you got to be careful. You know, if you're the last person chasing and the party, you know, the cops show up to the party to break it up. Not necessarily, that's maybe a bad example because it wasn't regulation, but you know, that's gonna be an issue for you if you're the last person there. It's like hot potato. All these stocks are a hot potato because for the most part, a lot of these companies are still trash. But you know, you get in these, get the momentum going, and the breakout traders get in there, and the algos getting there, momentum ignition algos get in there, and the party can go for quite a bit. So, I mean, momentum is working until it doesn't.
Yeah, I think you have a lot of different participants in the market. Going in to see these moves and the capital moving around. So it's just it's really a confluence of different things that are contributing to it. But you know, you have to trade what's in front of you, what you see in front of you, and there's some good price action across the board here, from cryptocurrencies to marijuana. I mean, earnings. I mean, we don't talk about Apple, Microsoft, Amazon, Google. I mean, there's other returns in the market, and people are going where the quick returns are.
I mean, we you know, and this is we aren't even talking about earnings, like you said. You know, we're not focused. This was a mega cap market for a decade. So is this the small caps turn? Is this the penny stocks turn? Penny stocks, you know, there's always the odd penny stock that's having its day, but the majority of them are all junk usually. But right now, I'm telling you, across the board, they're just looking for penny stocks. So I don't know if we're early innings. I don't know if we're late innings. I don't know if Reddit started a whole new movement here that it's all going to be about penny stocks going forward. And maybe they're not going to want it, you know, being the Amazons. Like, I mean, you look at Amazon, blows the quarter away.
Absolutely.
The firing on all cylinders, and the stock doesn't move. It doesn't care. I own Amazon. I mean, I like owning good companies, but right now you're being punished for owning quality. You're being rewarded for owning trash. And that's could continue for a while. So you've got to be cognizant of that. I mean, I'm not jumping in here and buying the dip on Amazon yesterday. You got to look at, you know, the other Momo names. Those are the ones you're buying the dip. And there's some, you know, some growth is still working too. Like Kathy, stocks are still working. You know, growth at any cost is working. It's like if you've got a solid cash flow, stable business, they don't want that. And they're classifying Amazon as that now. Even though Amazon's growing like crazy, they don't care. They're looking at where can I make 50% on my money next week, not 50% on my money in the next couple of years. So it's a greedy market right now. That greed is going to continue until, you know, a lot of people get hurt. So, I mean, I guess you just got to play, you know, what's moving. So, you know, we can talk some of these smaller stocks. That's what the chat wants to talk is Sundial. They want to talk all these smaller stocks. I mean, it's an incredive move. I've traded this a little bit, like just playing around with it, but definitely not making 60% overnight. So congratulations to those who hold. Jokingly, I was saying to my buddy just at Bright Trading, it was like $3.20 last night. And I'm like, I don't know, it's went through 250. It's probably going to 5. I mean, that's the next logical stopping point, you know, because you think about 250 gets you 5, the whole Kenny Glick theory. I mean, I don't know if it hit 5 this morning, but it's 442. I'm kicking myself for not buying it.
Yeah, did just stop just shy of $5. I mean, still early in the day, early in trading, 487. That marks your pre-market high. Not quite a double yet, but liquidity coming into the issue and it got going from 50 cents, $1.50, and here we are trading at 440, 445. Some of these stocks yesterday too, it was interesting where you had the reversal, but then they came back. And you know, when you have a reversal like that and you come back and you finish near the highs for the session, that tells you something. And I was referring to Tilray. We talked about that late in the day yesterday.
It was an incredible sell-off, and you think that's it, but it's like GameStop all over again. Just when you think that the buying is done, they find another wave comes in, and that's what we saw in Tilray as well. I mean, that was an incredible fall. And, you know, you talk about that fall, you know, and the sell-off in the overall market. I mean, we were up at $67, and we fell to 47 in a half an hour. I mean, this is an incredible fall. And then, boom, it gets it all back. So just when you think, okay, that was it, that was upside capitulation, I tweeted out, you know, a day later, you're like, there's another wave coming in. So that's what you get waves. Like, I mean, trading in all stocks is waves to a certain extent, but you get in these penny stocks, it's really like waves, like where you get this rush of buyers, and then, you know, you get the sellers a little bit, you know, taking profits, you know, people getting caught. Oh, I'm caught, you know, it's the time I'm getting out. And then you get the next wave come in, and then, you know, and it's, I always say, you want to be buying on those dips. You find those uptrends and buying on those dips and buying on those dips. But, you know, I like to still, you know, I trade big caps, I trade mega caps, you know, and obviously I'm not making 200% overnight on any stocks here. I know some people, you know, like we saw Trader Stu there on Twitter, who's a great follow. He tweets out, well, you know, I like making, you know, 10-20% gainers as opposed to 200% gainers. And I'm like, well, I like 102% gainers going the other way. Take it to even more of an extreme, or you know, 1,000.2% gainers. That's the kind of the way I trade. I'm just picking up pennies, nickels, and dimes, you know, and sometimes a little bit more than that. But, you know, you're looking at momentum. But these penny stocks, I've never been a penny stock trader since like 1996. So it's kind of out of my wheelhouse. But I mean, you can trade anything technically. And if you are trading the stuff, it's the waves. So, but eventually that one wave will come down, and then you're like, okay, now I'm in trouble. And that's how, you know,
tidal wave.
I don't want to.
You just gotta watch out for the, you know, you can surf, you can, you know, go up and down and stuff, but tidal wave. And how app is, you know, when you on our introduction, I'll buy this stock for a penny, and boy, oh boy,
penny stock market. Like, we are in the middle of FOMO running.
Hey, can I jump in here with a stat?
Yeah, of course.
Anytime.
So full disclosure, I haven't verified this, but this is just a stat that I've seen. I'm seeing internally on Benzinga, and I've seen it on Twitter as well. And we definitely discussed this on our stream yesterday. Yeah. There are only two stocks that trade on the NASDAQ and the NYSE that are under $1. Two.
That can't be right.
But what you just spent 10 minutes talking about how we're in a penny stock market, and they're all going up.
Well, I know everything just works. I mean, every stock has been running here.
So
I bought a couple of these things, and I can't even believe, you know, like, you know, that the moves that these things are having. But I can't believe that there's only a couple that are under $1. I'll run a scan for that.
Here.
I'll give you What are the two stocks?
Yeah, don't say them.
Give them to you.
Don't say them.
Give them to you.
Don't say them.
You want me to give them to you?
I don't want them to give them to you. We can say it. We're not in it. I'll tell you, they're right there. It's DNN and GSV, and they're right there. DNN and GSV. I looked at this GSV yesterday just because I was like looking through trying to find what hadn't gone. I didn't buy any, but I don't know. That can't be right. I mean, I've got to go run the scan myself. I can't believe that that's right. But maybe it is. So I mean, yesterday, you know, when I didn't verify the information, I obviously misspoke, and maybe we could just take it to some correction with Robinhood, because it was originally reported like on CNBC, and you saw the report too, Spencer, so you could stay with me on this, that it sounded like Vlad was going to be for the transaction tax, the financial transaction tax. So we don't know what Vlad's position is. That's the bottom line. And it would be absurd to think he's for it. That's why I was so pissed off yesterday. I was like, how can that be? So, and the CNBC article headline even read like that. I was like, how can that be? Well, it's not. That's the case. I'm pretty sure it's not. I tried to reach out to Vlad. I actually tweeted a tweet just saying there's no way. Like, you're just thinking about it, you know, logically. There's no way he's for the trans. It would be big time trouble for retail brokers. And he liked my tweet when I said that. So he did my tweet, so he read it. So I don't think he would like my tweet if he wasn't, you know, if I wasn't on to that. So bottom line is Vlad is not going to try to blow up his own company here with a financial transaction tax. He's going to be against this. I'm going to predict right now. He hasn't officially said it, but I will predict right now and take back what I said yesterday about Robinhood, because it was CNBC reporting, and I was like, whoa, that cannot be right. But I thought, you know, I'm like, that's absurd. So I'll take back that part of it. Everything I said about the financial transaction tax, correct, but it does look like Robinhood will be against it. And that's a good thing. That's a good thing. But, you know, the financial transaction tax, I mean, when you see the speculation running rampant, you've got to be scared of that to a certain extent, because your regulators are looking at this and saying, you know, some people got burned in GameStop and people got burned over here. And I mean, we've had lots of speculative bubbles before. usually these things fix themselves. They don't need regulation. I mean, we have Andrew Ross Sorkin advocating for a financial transaction tax. He is a big voice. This would be a big mistake because it would not curb speculation. It would only hurt liquidity in the markets.
Sure.
And like I said, the regulators would realize quickly that they need to have liquidity, so they'd give a market maker exemption. So the only people that would be paying it would be the little guy. So make sure if this does start to get traction, you reach out to your representative and say, look, this is, something that's going to hurt my bottom line. 0.1%, like we said, a $10,000 transaction is going to cost you $10 in and $10 out. A $100,000 transaction, $100 and $100 out. All the work we've done for the last 25 years would be undone by that bill. All the work of getting commissions down to zero, getting trading cheaper for everyone to do, would be undone by that bill. So I hope that regulators wouldn't be that dumb to go through with it, but these proposals are coming, and the speculative bubble is bad timing for that proposal coming down the pipe. So just be careful.
All right.
Hopefully Vlad, though, we don't know for sure, but hopefully he's on our side.
All right.
So I think he is.
All right, S&P's just creeping higher here. We're off the high of the pre-market session, 1850. Currently trading at 39.17. Spencer, do you want to cover some earnings stocks, or we don't talk ratings changes
Do you even
anymore?
care about
Do we
earnings?
care about? Wait, here's one thing I wanted to say
Yeah,
though. About the FOMO market that we seem to be in, and this is sort of how plays into how different social platforms can influence behavior. So, there's a lot of stock market discussion on Twitter, obviously, right? But it's decentralized, right? If you were to tell someone, hey, go on Twitter and find where they're talking about penny stocks and find where everyone's talking about how much money they made, it would be hard to do unless you knew what you were looking for on Twitter, right? Reddit is a much more centralized platform. The conversation happens in one place.
Yeah.
Well, the Wall Street Bets community 6 months ago probably had, I don't know, 300, 400,000 subscribers at the most.
Mm-hmm.
It's got 9 million now.
Yeah.
9 million subscribers. And every day there are people posting screenshots of their massive gains. Yesterday there was a guy who posted a screenshot of his till rate call options that he's up like 1,000% in. And every day there's these screenshots of I'm rich now, right? It's 50 of them a day. And it's hard. It's hard to look at that and not think, oh my God, like that could be me. Why can't that be me?
Yeah,
It's so hard not to, and it's a psychological thing. It's human nature, and we're all guilty. We're all susceptible to this, of getting swept up in that feeling like, oh, I could do it. If he did it, I could do it. You know what I mean?
Yeah.
So I think that's definitely a factor here. Is the rise of Reddit as a platform to talk about stocks. Not that it wasn't there before. There's a bunch of places on Reddit where you can talk about this sort of things. There's different subreddits. There's the stocks subreddit. There's investing. There's a bunch of them, and I'm in all of them. Trust me. But they've all gotten bigger and like really big in the last month or 2 or 3. And I think that's a factor here because it's just every day there's more, and they call it gain porn, right? It's just gain porn. People just posting their gains, and yeah, it's just I think that's a factor.
How many people are posting their losses though? From like
some people, no, I mean they do.
They do
on Wall Street Bets.
I'll tell you one thing. I've looked, not just Wall Street Bets, but you look at like these different, Twitter accounts that are obviously pumping stocks as well. And I don't see a lot of losses. I mean, maybe everybody is winning, but I just look at stocks like GameStop, and I think there was a lot of losers there too. So, I mean, everybody's going to naturally gravitate to look how much money that person made on GameStop. That could be me. But there's also that person that bought it at $480 and $400 and $350 and $300 and $250 and $200 and $150 and $100 that lost a lot of money here. So, I mean, there's another coin. There's another side of that coin. So you got to be careful.
I'll tell you, it's called Dogecoin.
I just want to warn everybody that, if you were in the GameStop in the first 5 days, for the big move, you're kicking ass and taking names. It took a lot of heat, and maybe grew a few gray hairs in there, maybe gave yourself a heart condition because there was some wicked sell-offs even in those first 5 days. But now you're looking at it on the last 6-7 days, and the majority of people lost a lot of money. So you've got to be careful chasing. I mean, you want to play around in these stocks, by all means, go for it. But if you're taking all of your money and putting it in Sanddial or whatever the hell it's called, Sundial, it's dangerous. It's very dangerous. And I'm seeing people do it. I mean, you see people call to Jim Cramer, I put all my money in GameStop, or I put all my money in something else. I mean, and there's going to be huge winners. Some people are going to, some people, don't kid yourself, some people got rich. They definitely did. I don't doubt that. But you just got to be careful. You know, it's not my style to try to get rich overnight. It took me a long time to build the wealth that I built. And I don't want to just throw it all on Sundial and watch it all go up in smoke because I timed it wrong. So you've just got to be careful. That's all I mean, is you've got to be careful trading these things. Have fun. These are fun to trade with. And yeah, some people are getting rich, but I do believe that, you know, the core strategies here, you know, of just chasing, you know, there's so many rules being broken that eventually it all comes to roost. I don't know when that is. Maybe it does come to roost. It just keeps coming to roost in individual stocks, but then they move on to the next one. So now it's pot. So I don't know what the next thing's going to be. If you can get ahead of it, you can make a lot of money though. So, you know, look at it and figure out, you know, this Sundial they were talking about for days before it went. So there was an opportunity here for sure. But at the same time, if you're coming in it now, the person that bought it at $1 a week ago is probably selling to you. So you just got to be careful that you're not the last one holding the bag.
That's a great point. Yeah, Joel had
be careful.
Joel had said there are people learning such bad habits. Yeah, I mean,
everyone. I'm learning bad habits
for sure. We all are.
But maybe these are the habits. I mean, who's to say that this isn't the new market? And Reddit's going to control it, and they're not going to give a crap about Amazon going forward, and they're not going to give a crap about, you know, good companies going forward. We're seeing significant sell-offs in good companies. I mean, and obviously anything that's related to a dividend we're seeing sold. I mean, AT&T is sitting right near the lows. Not that it's, you know, Verizon has been selling off for a month here now. You can say, okay, well, that's related to the TLT, but the reason TLT is selling off here too is that people aren't sitting their money for 1%, 2%, 3%, 4%. So that's the trend. I don't know if that trend continues, but if it does, a lot of those stocks, the mega caps, the ones could start selling off as well as people just look to move it into the quick buck. So there's a lot of money hiding in Amazon. There's a lot. I've got Amazon. There's a lot of money hiding in Apple. I've got Apple. Is there? I'm just asking the chat. I'm asking you. Is there concern that those stocks could start selling off just like Verizon has, just like the TLT has, as people move out of those crowded mega cap trades?
I think people are running these stocks, Dennis. I think people are running these stocks, and they're doing it, you know, I think people are still having their core holdings, but I just think you have a lot
of... If they start dumping those core holdings as well.
If they start dumping, then...
To go into these speculative, to go into the speculative mania. Because this isn't an overall stock market bubble. Everybody says we got this big stock market bubble.
No, there's not.
Amazon's not in a bubble. I don't think it is. But that doesn't mean it can't go lower. That doesn't mean... I'm talking against my book here a little bit to a certain extent, but I'm actually kind of concerned about, you know, some of the bigger names. I mean, Tesla's selling off here now. You know, like quietly. I had an ugly day yesterday. It's not bouncing much. Been a lot of money made in Tesla.
We don't even talk about Tesla anymore. We hardly talk about Tesla.
That's it. I mean, so are these stocks now susceptible to sell-offs so people can raise capital to throw it into the next penny stock? Maybe there is no more penny stocks, like Spencer says. They got to go into the $1 and $2 stocks now because they've all ran up. But is this possible that there could be continued rotation out of safety and into these higher?
I just want to show you this is what we've talked about, right? That purple chart is the IWM. The purple line's the IWM.
Yeah.
SPY and the diamonds, the DIA are down here.
Yeah.
Okay, that's the Russell. This is the SPY and the Dow Jones Industrial. So, yeah, small caps.
Is this the small caps time? The small caps have underperformed for a decade.
Years,
and Ron's saying Amazon's still 3,300. That's my point. Is these stocks actually haven't sold off. But people sitting here maybe waiting. Maybe it is. Maybe the small caps continue. Maybe Reddit changes it. I'm just throwing out scenarios. I don't know anything. Nobody knows anything. I'm going to say it again. Nobody knows. nobody knows anything except maybe the original people who are on some of these pump and dumps, because they're going to come and pump them where they know which stocks are going to pump. But nobody knows anything. So I just look here and I think, man, Amazon can't rally on good reports. It can't rally, and unless this Reddit community, unless, the speculative bubble bursts quickly and then they're going to fly back into the safety trade, I wouldn't be surprised if Amazon starts selling off like Verizon has, like the TLT has, because people aren't getting rich there. So that I'm actually concerned about that. Those are my thoughts.
Aviator one wants to know.
That.
I'm not laughing. I mean, this is what's going on in the market, right? I mean, you're analyzing it. No one sees it more than you. You're looking at it on a daily basis. I mean,
we don't care about fundamentals. We're going into Bitcoin. I mean, the crypto trade, that money's got to come from somewhere. The money that's sitting in Bitcoin isn't going into Amazon. Last time I saw, you couldn't use Bitcoin to buy Amazon. So you can buy the Amazon with US dollars, but you can't buy with Bitcoin. So
I think you can use a platform like Square to convert it. So
you started to convert it over US dollars to go buy, because I don't see a Bitcoin price on Amazon. Money that's just sitting in Bitcoin is not being used to buy Amazon. Can you give me that?
All right.
All I'm saying is, as money moves into different types of assets and different risk assets, it eventually comes from somewhere else. And if the FOMO continues, I believe you will start actually seeing weakness in the place where everybody has hid for the last 10 years, which is the mega caps. Despite not trading at crazy valuations, it makes me nervous on the overall market. You could see a market that could start selling off, but you could see a penny stock market that continues to outperform, or an IWM that outperforms. Maybe this is just the small caps time. So maybe that's a good thing, the rotation. I'm just asking because I'm heavily in mega caps. They've been rewarded to be there for a long time. But maybe it's time to start adjusting a bit and not saying, just not being all in on Amazon and Apple and Google and Microsoft and those top 10 components. Because maybe they get left behind in this if this party continues. That's my concern.
It's a real concern. All right, 8:27. We're gonna have Buck Andrews on in about 8 minutes or so. Let's get to some individual stocks though, because we've been talking about this for 20 minutes, a little more. Let's bring up some charts and let's talk some individual names. Should we start with
Uber?
Uber? Yeah, Uber had earnings last night. Let's give you those numbers here. Q4 earnings per share. Uber. You know what? Why don't I do this? Let me just show you what I'm looking at in Benzinga Pro. You can read what I'm reading here. So Uber, Q4 EPS 54-cent loss, beat the estimate by a penny. Sales 3.2 versus $3.58 billion. Q4 gross bookings grew 16% sequentially, quarter over quarter, down 5% year over year. Gross bookings up 130% year over year. They talked about Uber Eats. There we go. You see members reached 5 million in Q4. How is the stock doing, Joel?
We're down 74 cents, had a little spike up to 64, then kind of changed their mind on it, but found support just under 60. Trading down 74 cents, as I said. Let's see what happens at the close. Let's see if we can get green on this. We saw what they did to Lyft yesterday, but on an earnings day, a stock before the actual report, it makes a new all-time high. All-time high 63.50, and that was up near the close. So definite more significance to that actual close, but keep an eye 63.18, 63.50 if you really want to see this thing rip. Coming on the downside, looks like it's been bid pretty well since that 4 a.m. open. So for now, it looks like that pre-market low of 59.91 is safe.
I don't have any comments on Uber is making new highs. I don't short stocks making new highs. Yes, right. Pulled back a buck or two, but I mean, this is a stock that's got momentum. It's, the opposite of what I was talking about, the old, the big mega caps. It's still got the growth. It's still got a story. So dip probably gets bought in something like this.
What about iRobot? This one's a mover on its earnings reports. It tends to really move.
It's a volatile stock.
Well, because they were squeezing it. So they're not squeezing it anymore, but one concern is there's a lot of people who got caught in this. So as you get up, you do have some overhead supply issues here now. I like the prospects here. I like the story. I had this stock at one time, but I mean, it went parabolic there. It went to 109.
I mean, they just reported they just gave some amazing numbers here, just to tell you what they were.
Yeah, sure.
EPS for the fourth quarter, 84 cents versus a 31-cent estimate. Big beat. Sales of $544 million versus $494 million estimate. So they beat that number as well. They gave some fantastic EPS guidance for the year. EPS guidance they gave in the low $3 range versus a $2.19. So they basically beat they came in with EPS guidance for the year $1 above the estimate. Sales guidance was also well above estimates, $1.6 billion in that range versus a $1.4 billion estimate. So they came in way above estimates for the quarter and on their guidance for fiscal year guidance for the EPS and sales. So just blew it away.
Dennis alluded to some overhead and supply in this when he got nearly to $200 and then came right back in, almost a uninitiated 2-for-1 stock split in 3 or 4 days. So you did get that pop over 150, 150.98, January 28th high. In the after hours, you got the 151.87. But when you pull back $20 off that, I think, or over $20, I think you gotta have to pick some intermediate levels. In the meantime, pretty hard when you have that back off like that. Maybe more people are caught long now. So iRobot, let's see.
It's not
here.
as easy as it was
No, yeah, there's a little bit of overhead supply. I mean, we'll see what happens. Still up, still trading up $10 up.
Hey, remember when we used to care about initial jobless claims?
No.
Yeah.
Time.
Yeah, it was last year.
Remember when we used to care about economic data? It's been a long time.
Anyway, jobless claims just came out, in case anyone cares.
Yeah, give it to us. Give it to us, please.
793,000 jobless claims filed for the week of February 5th. That was more than economists were expecting. They were expecting 757,000, so 793 versus 757. Prior week's reading was 779, so more people filing for unemployment last week than the previous week. And yeah, that's that.
I know nothing about the economy. I just trade Momo. Yeah.
Hey, maybe that's the way. This is the way, Dennis. This is the way.
This is the way. That's right from Mandalorian. This is the way.
Yeah.
This is the new way.
All right. 832, smash that like button. Wolf Buck Andrews on in just a second here. Gosh, there's so
couple more stocks. Zynga reported last night the dip.
Yeah.
But again, I still think this could get taken out, so that's why I stick with it here. I mean, I think people buy the dip last night on the earnings quickly because there is speculation that Zynga could be a takeout candidate now that Glue Mobile went off the board. So I'm sticking with that. What were the earnings though?
They were. Let me see here. Let me see if I can get in a real adjusted number, a real estimate for Zynga. Going to the calendar here. EPS was in line at 9 cents. Revenue was a slight beat. Just under $700 million in revenue, which was a smidge above the estimate there. So good earnings report. What they say about guidance? Did they say anything? They gave Q1 sales guidance. That was a smidge on the light side. Yeah.
We talked about this on the at the close show, kind of with a kind of like a hidden bid under this after.
I think so.
Yeah, after the takeout of Glue Mobile, right here, you're knocking on the door, folks. You actually already opened the door off the headline number. You broke, but then you came back up, hit 1189. But looking at the pair of highs on the upper right hand chart here, 1149, 1158. So we're already trading above the top of yesterday's range.
Next.
That was pretty much. I mean, as far as earnings, like that really was it. There's a couple more, but they're not interesting. Like Pepsi is this morning, and like AstraZeneca and Kraft Heinz and Kellogg's, and we don't really care.
Okay, all those earnings, Kellogg's, Pepsi. If there's a pop in any of those things, I think you sell it because they don't want these stocks. You have to just realize the environment you're in. It matters more than anything.
Yeah.
So you've seen the weakness. Coca-Cola had a great report. It didn't matter. You know why? because nobody wants their money in Coke right now. That matters. I mean, it matters. So this is just trading opportunities for you. I mean, you get a pop in Kraft Heinz here, you get a pop in Duke Energy, you get a pop in Pepsi. If you get the pop in them, even without looking at them, I think they're all selling opportunities. So until we start, getting the FOMO not running so rampant, I think all those stocks are sells on any strength.
Maybe a stock like Sonos is the opposite, right?
Well, that's the opposite. That's
right.
got a story.
Right.
That's sexy. That's making new highs. I had this. I thought it got overdone. We bought it when Andrew Leff came on the show at $13. He said he thought eventually somebody takes it out. Well, stock doubled at 20. I sold my last shares, I think, at $28 or $29. It was a good trade. I was in it for 3 months. Double your money, and you're regretting it because it's 37 now. I mean, every time you have these smaller names, they just continue to go. So it's the momentum market. If Momo starts going, I mean, it's you got the right stock and the momentum's on your side. These stocks go a lot further than you think that they should.
Blaze in the chat just asked if I know when weed's going to be legalized. Blaze, if I knew that, I wouldn't need to work here. Okay, I have no idea. You've got firms. I think it was Cantor Fitzgerald said yesterday that they don't expect it for like several years. So no one knows. I wish I knew. Anyway, all right.
Does it matter?
The weed
really
stocks. Let's go talk the weed stocks really quickly before we get buck.
Yeah, all right.
They've all went red.
Yeah.
So we started the show. Tilray is $73. It's 61. These things are so wild. Again, who knows? The next wave could come in, but I mean, they're going like this. So now you got a little wave down. Is this a buying opportunity for the next wave up? Well, you just don't know. You don't know if it's topped out or not. I mean, but they were all green big time here this morning. We got Canopy now turned red. Like this is a huge turn since 30 minutes ago. Tilray.
Whoa, Nelly.
ACB.
Yeah,
was way up and had earnings. Afriaz is still trying to hold green. I mean, across the board, you're looking even at MJ, you just want to see, and it's giving it all back. These things were up huge this morning. Where was Tilray this morning? Where was TL?
It's actually the entire trade because you look at like the chats all over this too, like Sundial in the last half hour, 20 minutes.
Yeah, it was almost 5. Now it's 4. I mean, this is
half hour.
What these things do.
Yeah.
So they don't go. None of these moves in GameStop were straight up moves. You had to take major heat.
No way.
You had to take major heat. That thing hit 157, then hit 60. I mean, you got major heat. These are not for, just, I guess if you're just closing your eyes and you say it's eventually going to go there and you throw out your price target, you might eventually get it. But I mean, it's not smooth sailing. And at the end of the day these all look like GameStop in a week. So, where do they top out? Does Tilray go to 100, 150? Or does it go straight back down to 25, 30 eventually? I think it eventually goes back down to 25, 30, but I don't know the path to get there. So I can't short it because it could go to 100 or 150. But if you stick in your long-term portfolio at 62 or 65 or 68, I think if you hold it longer than a month, you're probably going to lose money. That's my thoughts. So, but right now, I mean, they're wild. These stocks are really, really wild.
All right, let's get our guest on here, Buck Andrews. Let's see how he's approaching this market. Buck is the co-founder of Inform. Good morning.
Good morning.
Are you agreeing or disagreeing with our sentiment here this morning that we should just throw everything we know out the window and just buy penny stocks?
No, it's the market's rotated. I heard some earlier conversation about Amazon and whatnot, but there's been since the beginning of the year a rotation towards small cap stocks, right? And so then you've got the stuff like that happened earlier with GameStop and that kind of stuff. But the way that I'm approaching the market right now is I've really got 3 segments that I'm looking at, and we've actually laid those out in our platform. What's very interesting, it's definitely a momentum market, and for instance. Spence, I don't know if you can show this or if you want me to show it. I'm looking at, we've put together lists. I've got a Bitcoin stock list. And if you look at, the first time that we came on, we discussed MARA, Marathon Patent Group. And I said that that as Bitcoin goes up, there it is. So look at Bitcoin today, for instance, the BTC. Now go back to where you were.
I just zoomed in a little bit. Yeah.
Okay. Now go back to the pricing section. Right there. Just stop right there. All right. See Bitcoin BTC up 7.3%. Now look at the leverage that these stocks are getting off of that Bitcoin move. Look how much these stocks are off.
Mm-hmm.
So what we're doing is we've got, if you notice over here, I've got the ARC ads on the right. I've got Bitcoin and I've got my growth group. So these are the three areas that I'm playing. I play the Bitcoin stocks. When I think it's a commodity play, but it's like a leveraged commodity play, and you can play it small. You don't have to buy as much. So I'm playing these to the long side as I see Bitcoin come in and settle. I buy these stocks. I've got a growth portfolio right there that you can see all the growth stocks, which in our growth portfolio,
fast market,
you have to have a requirement of having at least 30% growth, and it's a long-term investment. 3 to 5 years out, these companies will perform fantastically. Over 3 to 5 years. So I sprinkle in some of that, and then I've got my ARC funds.
Yeah, let's talk about this. You're tracking which funds the ARC group is buying. Is that it?
Yeah. So what we do is, these are the three things that we're throwing up there, and we're throwing them up there because we think these are three areas that people can invest in and make money, right? And if you just invested in these three areas, this growth, this ARC ads, and this Bitcoin, you're going to make some money, and you're going to make good money, and you're going to be taking advantage of the leverage and the momentum and the cryptos. You're also going to be taking advantage of the ARC funds and what they're coming in and out of, and then the growth. I'm a technology growth investor, so these three segments right here, or sectors that we've created, will change a little bit here and there, but not that much. And so what we're doing is we're using the AI. When we get the ARC newsletter now, we're filtering through the newsletter, and the stocks that they're adding, we put into our ARC sector. Right, so our ARC ads. That's ARC ads right now. It should be ARC trading. We're changing it to ARC trading.
Okay.
But it'll be the same thing. So as they post their newsletters, it gets posted up here automatically what they're adding or what they're trading to the buying, collecting. We don't put the sells in there. And then eventually we could do our sells.
Yeah. Why not?
Nobody cares about the sell.
No one
Well,
cares?
because think of this. For instance, look at pin interest today. They were selling pin interest like a few days ago or last week or something.
They don't care.
And look what it's doing today. So when you see sells, they may be taking down a position because it's grown too big.
Exactly.
Like you'll see them selling Tesla occasionally because they're trimming back a position. So a sell doesn't necessarily mean that
not necessarily a bad thing. Asset allocation, re-asset allocation.
So much that they're trimming back, but adding a new position means that they're taking a bet, right? And if they're taking a bet, they're taking a bet for a reason.
Yeah, I just thought it was interesting that you're tracking, because we just read the emails every day, but I'm at least not really writing anything down. I'm just going from memory. Dennis writes them down on his notepad, but you're actually tracking them, and we can see the performance there, which is super interesting. So you're still doing what you're doing, right? You're still going, for the growth names, which is working for you, right?
Well, look at Mara. I think the first day I was on, I suggested Mara at $17.
When's the part? Do you think Mars is going going to continue to go though? Do you think this just continues?
I mean, go back to that Bitcoin sector and look at the performance of these things today with the move in Bitcoin.
Yeah,
but looking at the past performance is not always indicative of what the future performance is going to look like.
Yeah, but Bitcoin.
We mentioned Mara on this show at $3 in November. Now it's 38, so it's up 1,200% in 3 months. Is it going up another 1,200% from here? I'm just asking because, you can look and you can say, wow, that's been, an unbelievable performer for you and for a lot of investors there. But is the party going to continue here forever?
If Bitcoin goes up, the party continues.
Yeah, that's it, right? If Bitcoin keeps going up, these are going to go with it.
It is a leveraged play on the commodity Bitcoin.
That's reasonable, right? You're betting on Bitcoin. That's a reasonable assumption to make.
It's a way to bet on Bitcoin without having to buy Bitcoin outright and get a leverage play on it. And the more the Bitcoin goes up, the more leverage these stocks get. I mean, look at as I said, look at the performance today that they're getting versus the actual Bitcoin. I mean, they're up like 3 times, 3x some of them, 2x, 3x. Times Bitcoin. So Bitcoin is I heard somebody describing this the other day. It's I think the most interesting thing I heard. They said it is a scarce commodity, and it will run out in 2004, 2005, right? And then people will start using it as a currency. And I know you said that Amazon doesn't today take Bitcoin, but does that mean they won't in the future? I mean, I don't know. I mean, you see companies like MicroStrategy shifting their balance sheet. Whoops. Sorry, I've got my. You see companies like MicroStrategy, shifting their balance sheet to Bitcoin, and look what it's done to that stock. You had Tesla, shifting part of their balance sheet to Bitcoin. I think this will continue.
Buck, can we talk about some of the trades you've been making?
It's not going to end.
Can we talk about some of the trades you've been making? You mentioned the TLT. You're actively trading that, right?
I got out of the TLT.
Okay.
I had a trade on in the TLT, and when we had that inflation number 2 days ago, I took that position off.
Okay.
So it was the inflation number was lower inflation than expected and than anticipated, and I took a profit in it and didn't feel like sitting on something. I'm not sure about that one. I'm pretty sure Bitcoin's going higher. So I play in the areas that I'm sure about.
I'm long it. I think it's going higher too. I wouldn't buy Mara because as I said, I buy Mara. But if I think Bitcoin's going higher, you can buy Mara and you can think, okay, I'm going to triple my money. But there could be a disconnect here eventually too. So just because it's obviously a likely play that Bitcoin goes to 100,000, Mara is probably going to be higher there too. But I mean, there's lots. I don't know, like this company. Maybe I should look into more fundamentally. I mean, I talked about it $3. We knew it was a Bitcoin play, but I mean, a lot of these trades. I mean, Bitcoin is up 100%. This is up 1,000%. So is it 10 times? Is it going to continue 10?
It gets back like to it gets back to what I said earlier on an earlier show, is that these are a leveraged play on the upward movement of Bitcoin. These guys break even at around $7,000. When Bitcoin is trading around $7,000, there will be more people coming into the market, but it takes them a while to get there. Mm-hmm. So at $7,000 in Bitcoin, everything above that, is profit. And as they go higher, I mean, you get moves that are going $2,000-$3,000 a crack today. The leverage on that could be pretty significant, and that's what I thought would happen. I wasn't sure the first time I came on, but I'm pretty sure now. I'm getting more sure about it. So I would not trade these stocks except up. When Bitcoin comes down and makes a base and you're thinking about buying Bitcoin, you turn around and buy these stocks.
That's a good call on the dips. I mean, that's been the opportunity there.
You buy them on the dips, you take half off, buy the next dip, take half off, build a position in Bitcoin is what you're doing.
Buck, anything else? Any other trades that you made last week? Trades put on, trades you took off?
Bill.com, BILL.
Okay.
I love that stock. It had great earnings numbers. It just came public not too long ago, so I think it's got a long cycle here of growth. I would buy that on any dip. I waited for the pullback after the last earnings, and I bought it a couple of days ago. Started building a position in it. Twilio, same thing. You see Twilio pull back. That's a long-term position for growth investors. Any young investor that puts money in those two for the next 3 to 5 years will be very pleased.
All right. Appreciate the time. Buck Andrews, as I said, is the co-founder of Inform. You go to inform.info to learn more. Thanks a lot, Buck.
Yeah, thank you, Spencer.
All right.
See you guys.
Oh, I didn't mean to cut you off. I apologize. All right. 8:49. Got about 10 minutes left in today's in today's show. Guys, what's on your mind? You want to go to the chat? We can do. Let's do some ticker time.
Stock sell-off is incredible here.
Let's see which one. What do we want to look at? Tilray?
All of them.
All of them.
It is a pretty major sell-off there, but again, it's just the volatility. So, like Buck says, if you think they're going higher, you want to be buying the dips. I'm not touching any of this stuff because I've been through speculative bubbles before, and it ends in tears. So, again, it's not my style. You know, if you're coming here trying to get the next penny stock, trying to get rich, it's not me. That's not me. I'm trying to have core strategies, base hits, base hits, base hits. I can't control the risk on Tilray. I can't control the risk on Afri. You can say, oh yeah, you can. You just put a stop. Where the hell on GameStop were you putting a stop? That went from 157 to 60. Where was your stop? I mean, if you had that at 150 and you wrote it down to 60, you weren't doing any risk management whatsoever. Sorry. You got lucky that I had another wave up. But you've got to be careful when you're trading. I mean, it's risk management. 21 years, or where I've been successful and made money every single year, was not because of how much money I was making. It was because how much little I was losing on my losers. I can't control the risk in this. People don't want to hear that. They're all pissed off because they want to hear that, yeah, let's talk this next big stock. Let's get Bitcoin to $1 million. I'm long Bitcoin. Sure, I hope it goes to $1 million. But again, it's speculative capital. I'm not going all in. I mean, these Maras and stuff, they look awesome, but it's up big, man. I mean, 3 to 37. Could it go to 100? Sure, it could. It might. If Bitcoin goes to 100,000, it probably does. But again, how do I control the risk on that? I mean, just Joel, talk technicals on a FRIA right now. Talk it. I mean, where is your out? I mean, this was $15 5 days ago. So where are you stopping yourself out if you're wrong? I think the majority of people who are trading making money on this aren't using any stops. I honestly, I don't know how.
Well, the thing is what you're talking about is that you can do it once sometimes, and you can do it twice, and you can get 3 times, and you can get away with it. What you're alluding to is like you go in that 4th time, right, and you get caught. You get caught in one of these moves or a halt, or it doesn't come back. What the scraps that you picked up along the lines, that one trade can wipe all that out and more. So it's hard. I mean, it's some momentum, when it's going up, you don't want to sell when it's going up, right? But when it's going down, if you are good at these things and you're trading these and taking your targets and doing things of that nature, but Triple, I mean, I can't argue with anything that you're saying, Dennis. I mean, we are just trying to give people our perspective on the market.
I'm not trying to get perspective on the market. I'm trying to teach people risk management and how to, trade for as a career, not just get rich during speculative times. That's what I'm trying to do. Okay. Perspective on the market. I don't know where the hell anything's going. Who the hell knows? We don't know when the top's going to be in. We can try. We can do our best to give technicals. We can do our best to look at a chart and try to give a setup. But, I mean, there's a lot of people, crowded trades everywhere here. You don't know. So all I try to do is stay diversified in my trading. I try to use good risk management tactics. And I try to hit base hits and try to make money every day. And, some days you're going to make money. Some days you're not going to make money. But, out of all, I just look back in my trading career, and it depends what you want. It depends what you want. If you want to get rich fast and you want to go all in and you're a gambler, go for it, man. That's you. But that's not me. That's not me. That's not, and I don't think, like, we've been, we have a lot of experience seeing this. For the simple reasons we're a prop firm. You've seen people, how many traders, Joel, you ran the Bright Trading Office. We ran in 1999. You see so many people coming in and piling in, and they're like buying every dip, and they're just doing so well until March 2000 comes around, and then half the office is gone because those half of people didn't use stops. They didn't use risk management techniques, and they all blew out their accounts. I mean, that's, what this game keeps you longevity is about risk management. I just cannot control the risk in this stuff. That's why, can I go in there for fun? And again, this is why I like to get on the train before it's moving. So like the sundial, they were talking about that for weeks, that Zach Morris guy on Twitter there. He was been talking about this, for the last 2 weeks. So now it's $3.94. It was 50 cents. We have dreams it's going to go to $30. But in all likelihood, it's probably not. And, this is a very, it's a huge move. This is like the time where those people who are buying at 50 cents and 60 cents and 70 cents are making the money. This is like the day 8, 9, 10, where these things usually are now seeing some upside capitulation. Could have another big day. Could it go to $10? It could. We don't know that. But just coming in here and buying it now and say, I'm going in on this, it's going to 10. You could get stuck with the next, like Tilray to 300 to 2. Or you could get stuck with the GameStop from 480 to 50. So just be careful. Be careful.
And this is also why it's hard for me to feel sympathy for people who are railing, who are angry about GameStop and the way that whole thing went down with the brokerage platforms and the blocking of the trading and saying the market is rigged. Well, maybe you're right, but honestly, if you had GameStop at 400 or 450 or the all-time high or the high at 483, and you rode it all the way down, and now you're stuck here at 51. I can't feel sorry for you. I'm sorry. Obviously. I'm sorry. Maybe you're right. The market is rigged. Yeah, but I'm sorry. If you rode it all the way down and you didn't sell when you're up 10,000%, I'm sorry. I can't feel bad for you. I can't feel bad for you.
Or if you're coming in at the last minute and you came in for the first time at 450 and you're like, now it's 50 and I got burned. I mean, you got caught up in the FOMO. Again, you're jumping on a moving train that's moving so quickly. It's difficult to not fall under the tracks. So if you're in these things before they start moving, great. I mean, that's great. That's the way to trade. It's like I like to get on the trains before they start moving. You can trade anything as long as you can control the risk. I don't know how. If you can teach me how to control the risk on SNDL when it's trading 380 and say, I'm going to stop myself out at 350, you're probably going to get stopped out then because the thing's trading wild. So, I mean, and then it gets down to 350. Do you really stop yourself out? Or do you say, oh, it's going to come back? If you say, it'll come back. I mean, as soon as you say that, you're in trouble. So, and then a lot of times they do. Remember our buddy Carl, we won't say the last name, but he doubled down everything. Double down. I mean, flash crash 2010, and you got trouble. So, I mean, these things do happen. So you have to be prepared for, that sometimes your stock doesn't come back. Sometimes GameStop might not come back. And this market was a whole bag holder bailout city where all the years of losses have come back for a lot of companies. That's unbelievable. That's an unbelievable gift. Tim Seymour was saying it yesterday on Tilray. This is a gift. He's like, I sold, he's got the cannabis fund. He's like, I was selling Tilray yesterday because it's just gotten ridiculous, and this is a gift. I mean, you've got to take the gifts when the market gives them to you. It's awesome to be in long these stocks when they're going straight up. But if you get greedy and you hold on too long, eventually the market will take the gains away for you. So just be careful if you're trading this stuff. That's all I'm trying to do. I don't want people to lose money.
And if you do, post about it on Wall Street Bets so we can so we can laugh at you. Are you watching any earnings plays? We got Disney tonight. We got Aurora tonight. ACB. So cannabis is going to be.
Oh, it's ACB tonight. Okay.
Yeah, buddy. Keep it on your radar.
It all is going to depend. So if you're going to trade the ACB earnings, it's going to depend what the overall sector is doing. If the sector goes into the gutter today and goes into that report, a pop would be sold. If the sector rip and rally, then a dip would be bought. So that's how I trade, and I do trade stuff like that, where you've got the sector, you trade the stocks against each other. That's the nice thing about the pot stocks; you can trade them against each other. But when the sector is smoking hot, then the dips are to be bought. But we don't know because there's a lot of time between now and 4 o'clock. Where is the pot sector going to be? It was smoking hot an hour ago. Now it's ice cold. Is it going to be smoking hot by the close? Nobody knows. But if it is, then I would be buying a dip on Aurora Cannabis. If it's ice cold, then I would be selling a rip on Aurora Cannabis. So going up, if it moves the opposite way, if it moves the direction, there's no trade. If it moves the opposite way of where the sector is going, then there might be a trade. So that's, that's how I approach those.
All right, 8:58 here. Everyone, smash that like button. Hit the like. Jason was in here earlier telling you all to do that for us. I'm the good cop. He's the bad cop. But hit that like button. We appreciate that. You guys Joel? You want to stay on and do some ticker time? We haven't done ticker time for like a few days on this show. I feel like the chat's been dropping tickers and we've been sort of doing our own thing. But I would love to hit on some if you have time. The Bumble IPO is today. BMBL will be the ticker. We don't really talk IPOs on this show because there's really no trading action to go off of or to speak of. So we wouldn't really have an opinion on that. But I would love to hit some tickers from the chat. Let's see if we can get to here. and then now they're all.
We
coming
can do
in.
a few. Let's do.
Now they're all coming in. Yeah.
Yeah, they coming in fast.
Yeah, what do you got?
Let's do 5, and
Sure.
just check to see if there's news on any of them, because that is that's always a relevant thing in this market.
It is. Okay. All right. Here's one who I looked at only one time yesterday. CLOV.
Clover. Oh, Clover. Okay.
Yeah.
Well, that has a story behind it. It has the short seller, and then it has obvious, the big backer in there. It's just digesting. It had the short sell report. I had 13 as a level, because you had 3 highs in that area. You snuck through it 2 days ago. But now you're back below it. I think it's just consolidating here. I mean, you got 3 lows in the same area that you have to respect. You're trading down 8 cents at 12.42. Don't see a current catalyst for it. But if you split those 3 lows, let's just call it 12.25. Looks like you're holding up now, but still looks kind of range bound, and see how it handles that short. I know there's already been responses going back and forth, but this doesn't seem like there's interest. I know it's SPAC. It was hot, but it doesn't look like people are interested in it right now. Long or short.
Yeah. Jason's in the chat. Yes, Jason. You're the bad cop. You're the guy that comes in. No, he's not the bad cop. All right, fine.
Who's the bad cop? You said good cop, bad cop.
I'm gonna. Yeah, I thought I was the good cop. He was the. I guess maybe. I'm gonna get crap for that later today. Okay. What about Palantir? I saw that.
Okay, that's a stock with a story too, right? Yeah. It's been doing well since the IPO. Palantir. You haven't seen. Well, I guess if you go back a couple weeks, you did have a period of consolidation. We could get rid of this support line because it's quite a ways from it. Trading up 40 cents. The only significant thing here is 2 highs in the same area, and you backed off 38.24, 38.26. So I think you have a seller there. You ended up near the low of the session at 35. You got a little bounce. It's green for now. I think if it goes red, 35.70, I think you better be prepared for a little trip down to 35. And I think now, after sellers came down from 39.22 on Monday, 38.26, 38.24, I think you find sellers in that area again.
Ryan Fink, how about Nvidia instead of all these garbage companies?
Nvidia.
I've been wondering, why shouldn't we just start buying blindly all of the semiconductors? If there really is such this great shortage of semiconductors and they cannot keep up with demand, why not just close your eyes and buy AMD, Nvidia, Qualcomm, et cetera, et cetera?
We talked about this a few days ago. It was working its way up to an all-time high and did that, right? So hard to be bearish to stock. You're trading above yesterday's high. Yesterday's high was 596.20, and the close was down at 590.57. I think they already had earnings, correct? They already had their earnings report. I mean, another reason too, I'm not sure, but the other thing, and we talked about this before, is like, what if they do a split? What if they do a 6-for-1 or something? You saw the way it's been, that trade's been kind of quiet after the Apple and Tesla. But when I look at these stocks trading at these levels right now, since you're trading above the all-time high from yesterday, your old resistance is going to be new support. And you had a pre-market high right almost 605 cents. It hit that just after 5:30 this morning. So there is your pre-market high for a target NVDA. And
just to correct you on that, the report on the 24th after the close. So they're always later on in the season. So no earnings from NVIDIA yet. We'll do like 1 or 2 more. The semis are juicy. Someone mentioned Dominion Energy. Let's give some love to the utilities. Let's look at D. Ticker D.
D.
Yeah.
D.
Because I think they have earnings coming up. That's
that stock.
It's tomorrow.
It got. How long ago did it get hit? When they did? Well, obviously it got hit in March, like everything else. I mean, is this where people want to be? They want to be in Dominion.
Oh, I know what you're talking about.
Yeah.
You're talking about no, never mind. No, I don't.
They
know.
sold part of their company or something.
That was March.
Yeah. No, I mean, there's 74.
Yeah, 2018, right? The early 2018. I don't know.
I don't think anybody 72 to 74. That's been your range since the end of last year. So if you're trading a range, but once again, Dennis talked about people aren't interested in stocks like this. And this is just a great example. I don't even know what the dividend is on it, but 72, 74 has been the trading range on that one.
Yeah.
Hey, one more and we can wrap it up.
Everyone's saying no one cares about these stocks. Well, somebody asked about it.
Okay, I'm sorry. No,
somebody asked about it. Therefore, somebody does care.
Yes,
and
right.
I'm all about giving love to the stocks that don't get a lot of love or at least attention.
OCGN, we'll do that one, and
right.
then
fine. We'll end it on a chaotic note.
Yeah, why not? I
Why
mean,
not?
that had the crazy news, right? And
Yep.
the offering and above, and they took it up, they took it down. I don't know where the official offering price is, but you got to be careful on this one because that gap up on that day was at 913. You closed at 10.25 yesterday, so support is support until it's broken. But just where are you going to go? Where are you going to hide if this takes out 913? Gap down to 590, and then also on these days, folks, when I'll just end it with one little thing, one tip. I mean, you went from 88 million or 68 million, then you went 364 million, and then the day that it had the huge move, 719 million traded. So you're thinking, okay, and you're gonna need some more buyers, right, to keep this thing going. You're gonna need some heavy volume on that day. Volume dropped off to 153 million, and the next day, and then 83 million. So, just when they have those high volume days, you want to see it continue, or else you lose your buyers, and stock goes back down. 913.
Joe, you asked where to go from here. You go straight to the offering price of $7.65. It's going to be the ceiling. I don't know. I'm making that up.
Oh, the floor. It would be the floor.
The floor. That's what I meant. Sorry. No. The ceiling, because it's going to go under that, and then I don't.
Oh, then it's going to be resistance.
Yeah.
Good call, Spencer. Good
yeah, right.
That.
So the offering price was $7.65. It was above the previous day's close of 5.25. And I said this yesterday, but let this be a lesson to all. Even if they do an offering above the market, don't be that guy that's chasing it up.
Correct.
100 and whatever it was, 30% at $18, and that's a recipe for disaster. But somebody bought it there anyway. All right, that's going to be a wrap for pre-market prep today. I want to remind you all that this show is available as a podcast, and for all you podcast listeners, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks again to our guest Buck Andrews. Today's show is sponsored by Inform. Go to inform.info to learn more about that platform. Thanks a lot to Joel Elconin. That's a wrap, and we'll see you tomorrow. Thanks a lot. All right, and then there was just me, and I want to go on a little bit of a mini rant here, and we'll have some stuff planned. We'll Get Technical with Neil Hamilton at 9:30. We got a really good guest today for that, by the way. But I want to go on a little bit of a rant because I'm feeling very conflicted right now. Extremely, extremely conflicted. On the one hand, I think what's happening with all these low price stocks and retail investors getting rich is awesome, right? I think it's a lot of fun, and it's great that it's happening. It's great that people are getting rich, and I want to be a part of that, right? It's exciting to talk about Sundial going from it's off the highs this morning now, but it's exciting to watch a stock go from under $1 to this morning almost $5, right? I'll pull up my chart here. It's down to 341 now. Jesus, Murphy. But that's fun. That's fun, and it's fun to talk about. But on the other hand, there is the part of me that's the buzzkill, right? That's like the responsible investor that knows that people are going to get burned on Sundial or GameStop or what insert high flying stock here. And they're going to take away the wrong lesson. The lesson being that the markets are rigged and they shouldn't ever participate ever again. They shouldn't ever invest. And that's wrong, right? And that's what I don't want to happen. I feel this confliction every single day because I want to talk about these high flying stocks. I really do, but also I don't, because I know eventually that the tide will turn, the story will end, people will get burned if they haven't already. This happens every time, every cycle. This happens at every bull market. We're in a bull market. I think that's not a hot take. That's obvious. We're in a bull market, and it'll end, and people will get burned. People that don't have experience will get burned, and they're going to leave. They're going to leave the market. It happened in the .com bubble, and that's, I think, the wrong lesson to have. And so that this is my confliction, and I feel it. I feel it every day. And yeah, Michael, let them learn the lessons on their own. You're right. That's great. That's great. You know, I can't make any decisions for anyone else, nor would I want to. It's your life. It's your money. You're responsible for your decisions. But I believe with all my heart that the best way for the average person to grow their wealth is through investing in stocks, right? You think about it. There are only so many ways to grow your wealth, right? You can inherit some money, you can grow a business, you can bet on yourself, you can grow a business, or you can be like employee number 10 at a startup and get cashed out at the IPO and grow wealth that way. But for most of us, that's not going to happen. Most people are not going to start their own business and grow into some big thing, or inherit a lot of money, or be employee number 5 at Facebook, right? That's just not realistic for most of us. So for the average person like me, I'm only going to grow my wealth by investing in stocks for the long term. And trading for the short term is fun, but investing for the long term. And I just so badly don't want these people who are getting burned on GameStop or whatever, AMC, whatever, Bed Bath, any stock, Sundial this morning, but I'm being a little bit, facetious there. It's only down $1.50. I'm sure it'll come back. I don't want them to learn that wrong lesson, which is that the markets are rigged and they never come back, because this is all fun. It's all fun when your stocks are going up. It's not so fun when your stocks are going down. We talk how nobody wants Amazon, nobody wants the FANG stocks. Well, like I still do. Like for the long term, that's what I want. That's what I'm super long. I'm like long in every portfolio that I have, the large cap, the S&P 500. I own that like across the board, right? And so my future is tied to that. My future is not tied to Sundial. And yeah, I own a couple of pot stocks, right? And they're high flyers, but they represent, each individual pot stock I own 4, and each of them represents, or at the time when I bought it, represented like, I think 2.5 to 3% of my portfolio. So they make it more of a weight now because they've all gone up more than my other holdings. But again, I'm not betting on that for the long term. I'm betting on that because I believe, in the next few years, cannabis is going to keep going up. Maybe I don't sell. I don't quite know, to be honest with you, but that was never my plan, was never to retire via cannabis stocks, right? So that's my rant. I feel conflicted all the time about this, and it's why I preach about ETFs, quite frankly, because I still believe that the best way to get interested in investing is to buy a stock and learn why that stock goes up and down. But after you do that, the next step, and again, your decision, you're responsible. But if I was like teaching a class, I would say the next step would be buy an ETF, right? And learn about that. Learn about why that's a better long-term vehicle than owning like a bunch of individual stocks. Like you just start spraying across the board. You own this stock, and you own GM, and you own Tesla, and all these random with no plan or no rhyme or reason. And I know this is like kind of like a boring buzzkill conversation to have, but this is like the conflict that I feel every day. Because on the one hand, I really do want to like troll and have fun and talk about these high flyers and joke about it because it's funny. But it's funny when they go up. It's funny when they go down. Everyone's making money on at one point or another. But I also feel this confliction where I feel, I feel like I said, like, I'm reading these comments in the chat. A lot of you are newer investors. I'm still relatively new. I've only been at this for 5 years. So, and I don't have all the answers, but if I can go back in time and go back to 5 years ago or 6 years ago, 5.5, I don't know, and change things, I would start with a plan earlier. I would have started with a plan rather than just kind of figured it out for myself. And yeah, no one can really make that plan for you. It's kind of up to all of us to figure it out for ourselves. There is no right way. I don't have the right way. But and maybe some of you are getting rich off of Sundial, and great. That's awesome. But for those of you that aren't, for those of you that are chasing, OCGN up at $18, $17, $18, and got burned, you learned a great lesson, and I'm glad you learned it, because hopefully you learned it early in your trading and investing career. It's great to learn a lesson like that, but I hope the takeaway is not screw this, I'm out, because that would be, to me, the worst case scenario. And I think I've read a lot about the .com bubble, and that was the reaction to the .com bubble. A lot of people got burned, and granted, the 2000s was kind of a lost decade, right, for stocks at least. You had two bear markets within a 10-year span. You had the .com bubble burst, and then you had the housing bubble and the financial crisis, 8 years later. But buy and hold eventually works, right? The last decade that we just came out of was amazing for most stocks. Not all. I mean, not for value, right? But for growth. Not necessarily for the bank stocks, but for technology and for the FANG stocks. So yeah, there's always winners and losers. Which is why I stay diversified, right? Yeah, okay. I think that was, I said my piece. Yeah, if you guys have any comments, drop them in there. Yeah, I think I just wanted to get that off my chest, because I've been thinking about it for the last few days, and I love it. I love hearing about people making money. Like if you made a great trade, yeah, that's awesome. Let's celebrate those trades. But if you're not making, if you lost a lot of money, if you're not that person who bought Tilray, a couple months ago or last year, and you have your call options and you're up 1,000% on your Tilray call options, that's okay too, right? That's okay too. The takeaway shouldn't be that you can't win. Takeaway should be that, okay, now hopefully you know what not to do. Right. The answer is not. The answer, at least this morning, was not chasing Tilray at $68, $70 yesterday, right? Because it's down to 55 this morning. So, sorry, I was kind of in my own little world there for a minute, but I've come out of it. All right, 9:17. We've got Get Technical coming on, starting in about 13 minutes. We got a great guest. I don't want to tell you about her. She's got really, really good Twitter following. The Vaz, Olivia Vaz, her Twitter handle, which I will put it in the chat once I find it in my doc here, unless Neil wants to. There we go. It's the Vaz for real. There it is. She's going to come on with Neil at 10 o'clock and talk about her trades. She's got some very, very good thoughts on the market. And again, Get Technical with Neil Hamilton. We're going through charts. We're going through patterns. The idea here, just to give you some idea of like where our heads are at, is that different things speak to different people, right? So like charting and patterns don't really speak to me, but if they speak to you, then we've got Neil Hamilton, right? Because they speak to him, and he speaks that language, and the people he brings on speak that language too. So if patterns are your thing, then the next hour is for you. If SPACs are your thing, then 11 to noon is for you, right? We've got SPAC Attack. We got a really good guest on today. If you were watching yesterday, you were in the market yesterday, you saw ACIC, right? That company that the Archer that's merging with the SPAC ACIC is a ticker. We've got the co-founder of the company merging with them, of Archer, on SPAC Attack today at 11:20. So ACIC will be a heavy discussion here, I guess in about 2 hours. So yeah, we've got that coming up. What else? We got Power Hour, of course, with Jason and Luke. They always have good guests. So a lot coming in today's stream. Hit that like button if you have not already. And before Neil comes on, I just want to again put the link to some upcoming events because I haven't done that all day yet. So we've got some events coming up. February 20th, we're having a SPACs and options focused boot camp. It is virtual. It is free. There is the link. You can also just go to benzingabootcamp.com. But the link is in the chat. Let me put it in all the chats so you all can see, not just the people on YouTube. There. That's the link to the February 20th Benzinga Bootcamp. There's a couple events happening after that, but I don't want to spam you guys with that. February 20th. To learn more, you can also just go to benzingaevents.com and get the full schedule of all of our upcoming events. Again, that'll be SPACs and options focused. What else? I wanted to do some more housekeeping. I just want to run through some things, but that was pretty much it. There was a contest that we've been doing on Get Technical. Neil will update you with the results of that contest. If you didn't already, if you were one of the winners we mentioned yesterday on the show, and you didn't already email Neil, you should do that. Again, if Thuk KK was a winner of the contest from Tuesday now, Fady Lawrence, Gherkin, Sigmund, and then Severe Boss 1. If you didn't email Neil, you should do that because we have swag for you. Speaking of swag, go to swag.benzinga.com. We have a swag store. Is that where you got that shirt?
I made this. Yeah, I made it and I put it on the swag store.
You made that?
Yeah, of course. Who else would make it? Benzinga, the Metallica style. Benzinga.
You can't say you can't say the whole word, right? That's bad.
Well, I know that the band in question got really mad about Napster back in the day.
Yeah.
So I know that they're litigious. Word of the day, litigious.
Litigious. Okay.
So yeah, I don't really want to play games with my favorite band.
Yeah. That's fair.
But
whoa! Hey, can you switch your mic? I think you're on the wrong mic setting. I think you're not on your you're not on your headset. Neil Hamilton, everyone, host of Get Technical. He'll be your shepherd through the next hour. Or at least until 10:30. Again, we've got the Get Technical show from 9:30 to 10:30. We've got the Benzinga Pro Happy Hour for a half hour there, 10:30 to 11. We've got SPAC Attack, 11 to noon. We've got the Power Hour, noon to 2. We've got actually, I wanted to plug this too. It's something new we're trying. We're still kind of playing with our schedule. We have a crypto show. We are starting a crypto show today. It's going to be at 3 o'clock. You just walk away from your computer. I'm going to take you off the screen there so you can see just me. 3 o'clock crypto show. We've got one of our editors, Catherine Ross, who is a follower of this space, and she's going to get with Luke Jacoby, who knows basically nothing about crypto. Luke, is that accurate? He's not listening to me. But I think I'm using his own words. He said that those are his own words. All right. And Kat talk about crypto. It'll be at 3 o'clock today. So very excited for that. And we've also got an interview with Roundhill Investments. There's a new ETF, a streaming ETF. We're going to talk a bit to one of the people behind that ETF at 2 o'clock, and that'll be with me. The ticker is SUBZ. It's subs. Get it? So that'll be at 2 p.m. Me and someone from Roundhill Investments to talk about streaming, why they created a streaming ETF, because I love my ETFs. Mm-hmm. And then, of course, we've got the crypto show. We got pre-market prep at the close. And it's Thursday, which means we have the Benzinga Cannabis Hour from 4 to 5. I'm going to go ahead and say that, with no disrespect to anyone else here, but that is probably the most well-produced and well-planned show.
You're the producer for my show.
I know. But the thing is, their show is weekly, so they have a whole week to plan. So they have time to play out every show. And yeah, all right. With that being said, Neil, shall I cede the floor to you?
Yeah, I just want to ask, first of all, I really loved listening to you for the past 20 minutes. Someone suggested that we use the slot for Birds and Bees with Spencer Israel.
I don't even know. What does that mean?
Well, I mean, the obvious connotation is not what you're going to get from Spencer, but I do like the sort of emotional digestion of what is happening in markets and what's going on with all of us.
Yeah.
Good stuff.
Thank you.
I think we can all take something away from that. Right. But yeah, guys, I want to ask. I know that Spencer's the ETF guy for sure. He actually got me into Chinese ETFs. I don't know if you remember this, Spencer, but you got me into some Chinese ETFs 2-ish years ago, maybe 3 years ago. It was early days when I really first started to get to know Spencer.
I don't remember that, but I believe it.
Okay, yeah. Well, they were a wild run until a documentary called The China Hustle came out, produced partially by Mark Cuban. That's a good one to check out. So I want to talk about ETFs. And if you guys are down for that, I'd like to show you the ETFs I like. I'm going to forewarn you if we do the ETF thing at the start. And this is, guys, the ETFs are the cornerstone of how I make the majority of all of my money investing in the markets. I would say that, I mean, this is like 60 to 80% of my portfolio is sector focused ETFs. It's gonna be kind of memey though. I think there are some of you guys, which wrongfully so, are going to look at my ETFs and say, "Oh, this guy's, he's in this ETF. Come on." But the performance doesn't lie. So we'll get started with some ETFs, and then for the majority of the show, normally I have some picks for you guys. But those of you that entered the contest, which Spencer is wise beyond his years. If Spencer, if you don't mind just dropping once again the link to the contest in chat, that would be great, so folks can see exactly what I'm talking about. If you're not familiar, we're holding a stock pattern picking contest. Roughly speaking, it's really going to be randomized. So anyone that enters has an equal chance of winning. You can get your name entered into the drawing twice if you tweet a tweet that can be found on the sheet that Spencer's about to share. And we'll point out some of those picks today and take a look at them because I found some good ones. So let's get started with ETFs. And then we'll talk about some of your picks starting from that contest, because I think there was some good stuff there. I'll brag a little bit about one of the rounding bottoms that is actually my pick. So if you guys are on the sheet right now, look at the very top. My pick is the first one. Go ahead and take a look at that. I hate to brag, can't stand when people boast about winners, because the market is a natural force, so it's unpredictable. But in this case, I set myself up right by looking at the patterns, the history, and I'll be honest with you, taking input from other people's perspectives. I had I talked about this with a friend of mine, Matt Maley, CNBC's Matt Maley, who had a great fundamental perspective on this ticker. So if you find it in the contest, take a look at it. I think it still has room to go. But yeah, so I think we're going to get started in about 2 minutes. We'll get started with ETFs. So we'll take some tickers from chat. Keep your tickers in mind, guys. It's not insider trading. What are you talking about, Ray? Don't go too hard on the super penny stocks. Because as attractive as it is for folks with a smaller portfolio or just with an insane risk tolerance, for better or for worse, a lot of the tickers that I've been seeing from chat are companies that do not seem legit. So, I mean, there are bullshit companies on the exchanges. You can buy and sell their stock. You can get wrecked. You can get absolutely wrecked. So, if you're looking at a ticker, even stuff that's like under $10, some due diligence is welcome there. I would encourage it. Let's go pink sheets, baby. Austin, no problem with the pink sheets as long as it's a legit company. Like, I'm looking at emerging disruptive technologies. If I can say that my focus is anywhere, guys, we're looking at stuff that is going to power the market of tomorrow. And that stuff always starts off cheap. So yeah, it can be a pink sheet. That's for sure. All right.
Wait, can I add one thing about that? Like the pink market is, there's a lot of crap there, but there's also like Tencent is there and Nintendo is there, right?
Yes, and some people in chat are saying that too.
Right. Well, that I'm some people in chat, but
oh, is that you, Spencer?
Okay. Should we start the show? Let's start the show.
Roll it.
All right. Oh man, what happened to my? I don't know where my intro is, but it's okay. We're doing it this way.
Roll it.
Oh, did you hear that bell or no? That was my.
I heard the bell. The market is open.
Yeah.
3 times might be the charm, guys. Hey, Spencer, roll that intro. We gotta work on that.
Sorry.
Do you think Cannabis Hour would ever do something like that?
No,
I don't think so.
No, they wouldn't.
Always room for improvement, Spencer. All right, so you got my chart up right now. What you see right now is the Vanguard ETF for the S&P 500. Big shout out to Mare. I believe it's pronounced Mare because I think it's short for Mary. Maybe it's Mar. For emailing me some tips to improve the visibility of my charts for you guys. I actually saved this default as Mare. This is the Mare default. Hopefully you guys can see everything. Also, I added a watermark so you know what ticker and which increment I'm looking at. So you should be able to see VOO1D for 1 day. Let's first take a look at yesterday. We had a little bit of a sell-off, but it wasn't crazy. We just had a day where people sold some stocks that took some profit. Everyone, I think there was like I don't know what the line is from Star Wars when Alderaan explodes, and I think it's Obi-Wan that like picks it up through the Force. But I picked up, it was as if 100,000 traders crapped their pants at once. And I just heard it as one big massive crap sound. But guys, look, we've had many like this. This is what markets do. A correction is good. A correction gives us time to blow off steam and get stuff on sale. That's why we're keeping our stops tight, and we're focusing on things that have good, strong upward trends that are in good sectors, all right? Which leads me into our ETF thing. Let's go ahead and open up my little watch list of ETFs. This is where it gets kind of samey, guys. Okay, can I just point something out? Jason Rasnick is in chat right now. I just want to say hi, Jason. Thanks for being here. My understanding is that you have an OnlyFans account. All right. And is it me liking porn, like probably everyone on this chat right now, subscribing to your OnlyFans? Does that make me a bad guy? Does that make me a pervert? Or am I supporting my friend? All right, you guys decide. All right, so taking a look at these ETFs, some of these should look really familiar with you guys. Let's hopefully you can see that. Maybe I do one more zoom. I'll zoom for you one more time. Not sure how clear that is, but I'm going to throw up all of these ETFs so we can look at their percentage gains over periods of time. I want to look at over the past 365 days and then look at over just the year to date. So I've got ARKW, which is I'm an ARK guy, guys. I'm an ARK guy. So haters gonna hate, but I don't know why the hell you would. ARK is fantastic. The performance is incredible. Kathy Wood is leading a fantastic organization that is focusing on the right things. The FANG stocks have lifted the markets to monumental highs, but they are not bringing out disruptive innovation that looks like the future we expect to see 5 to 10 years from now. And it's looking like it's even shorter terms. That's why I expect a lot of growth. So I got ARKW here. I'm going to add PRNT. That's another ARK Invest. Where is this? Yeah. Another ARK Invest ETF. I'm going to add ARC-G, which is another ARC, focusing on genomics. So I love genomics because this is, I believe, the future of preventative medicine for some very serious illnesses that are based on your genetic predisposition to have those illnesses. So we're looking at gene editing and other gene-based palliative, preventative, and therapeutic measures. So I really love that. I think the age of chemical medicine is very antiquated. So we're looking back at a lot of medicines that were developed in the 60s that are just have been tested for various things that are coming to market and being branded as different shit these days. So I'm looking for the next phase there in technological advancement. ARC-K, this is another disruptive technology ETF. I want to bring in ESPO, which I love. This is esports. This is a VanEck esports ETF. And I'm going to compare these ETFs to VU, which is, it's basically SPY, but it's the Vanguard version of the S&P 500, to QQQ, which is basically tech stocks. It's basically the NASDAQ ETF, and compare it to IWM, which is our small cap. All right. So we see a bunch of squiggly lines. We like squiggly lines here on technical, get technical. So let's look at our absolute top performer since the beginning of 2020. So the way I do that is I just bring 2020 right here. Absolute top performer to date is this light blue ARC-G. ARC-G. This is percentage growth. All right. Percentage growth. That's genomics, guys. Yes, if you guys are holding CRISPR, I think the other one is BN. What was it? It's like BNG, something like that. I know that's not the whole ticker. It's a 4-letter ticker. There are a few genomic based firms that have taken a hit lately, and you can see that in this ETF. I'm looking at this and I'm seeing buying opportunity. I love this thing. I'm long this thing. I want to see big growth over the next 5 years. This is the backbone of a well-diversified portfolio, in my opinion, because again, this isn't financial advice. This is purely for educational and entertainment purposes only, hopefully in equal measure. So that's ARC-G, killing it. Another one very interesting is this orange, which look. Right now, the killers over since the beginning of 2020 are going to be ARC-G, massive growth. We got our yellow, which is ARC-K, which is, I believe, is the flagship ETF fund from ARC. And then down below that, we've got purple, which, that's your boy ESPO, which, of course, I like esports because I saw stay at home COVID as a big catalyst for folks really changing their lifestyle and new entrants to the gaming market coming in, as well as streaming things like competitive esports. So this is people that make games, people that make hardware, as well as people that facilitate the esports ecosystem, which is not going anywhere. If you compare, I don't know the actual figures, esports games absolutely eclipse earnings from the past century's most popular form of entertainment, Hollywood and movies. So we're seeing a big shift into this new decade here toward this interactive entertainment and this esports ETF. So let's go back and look at performance just since the beginning of the year. And we really start to see some explosive growth on PRNT, guys. PRNT. Do not underestimate the viability of this new form of manufacturing. This is not necessarily about you having a 3D printer in your house so you can remake the Boba Fett action figure that your mom threw away when she's cleaning your closet when you were a 12-year-old back in the 70s. This is about additive construction or additive manufacturing of parts for industries like cars, aerospace, architecture, buildings, that is not otherwise possible when you have a piece of a material and you're cutting away from it to create your object. We're talking about something where you can actually, instead of having a person using CAD or a 3D model, designing something that they need, using AI to design something that a human can't even design. And I'm taking all of this directly from the research done by Kathy Wood and her colleagues over at ARK Invest, who are fantastic. I highly recommend checking them out for due diligence. They've done a lot of work for you. But using AI to develop crazy looking parts that you just would not be able to imagine, that are much more efficient and improve the performance of the final product, whether it's airplanes, spaceships, cars, you name it, things that are absolutely necessary and integral to our way of life. So we're seeing this massive growth in 3D printing. One poster child, of course, as you all know, is Triple D. No, I'm not talking about Dennis Dick. I'm talking about DDD, the 3D printing ETF. I believe that's about the third largest held asset in this fund. So guys, really, really, really. Okay, is Axone? Yeah. Shout out to anyone that knows about the 3D printing space. I'm really just starting to learn a lot more about it. This is going to be a sector I'm very bullish on. This one and automation / AI, which the automation is going to go into the vehicles, and then the AI is going to go into a lot of different things, automating a lot of processes that are done by humans, including industrial design. So I'm really looking at that, but man, just look at that thing. ESPO still going to hold it. I mean, this year it's not the big winner compared to these other ones, but I mean, it's just an industry that's going to continue to grow. And if we look at it, let me go ahead and X out some of these except for the ESPO. And I mean, guys, and down here at the bottom, we've got, you know, the S&P right here is being defeated. It's this bright pink one. So I mean, we're beating the living hell out of the growth of the S&P 500. So I want to look at just ESPO. So we'll get rid of these. SPO. That is my very rudimentary trend line, because it's so hard. You really have to stretch this thing out to find the sort of lightning bolt zigzag that you like to see in a channel for the stock going up. This thing is just going and going and going and going. It's an absolute beast. So we've got the COVID crisis here, but then you see how that just accelerated. It's like the V-shaped recovery never stopped for this thing. It did take a breather. I'm not really sure what catalyzed this in September. I'm not really sure what catalyzed that in September, but at any rate, I don't care. This was a point of entry. So this is me piling into this. Really, really loving this ETF. See nothing but upward potential. And this is the kind of thing where it's so parabolic right now. I'm going to do something I haven't done on the show yet, which is try to draw some type of channel on this to address the trend. So if we look at the trend since this period of consolidation, what I'm using right now is a Fibonacci channel tracing tool. All right. So the way that you do this is you find the first down point in a trend. You're always drawing when you're in an upward trend on the right side. Actually, in any case, when you're doing any sort of trend lines, you're always drawing on the right side of your price points. So here, I'm going to find a low point, and I'm going to draw my next spot on the next low point, right? And in this case, we can see, you guys can't really see what I'm pointing to, but like right here, I know this is messy, but bear with me. You can see that there was a dip here that if I'm doing just pure trend analysis, I would adjust this trend line. It's okay that you're supposed to do that. That means that there's a deceleration in the trend because this is about speed of growth, right? A lot of people call this first line, this gray line, the speed line. So when this happened, I'm going to adjust this second point to that second low, the second swing low, to adjust my speed line. We had a deceleration in the growth of the stock. And then what I'm going to do with this third point, so we got 3 points with this channel tool, is draw it on a point that is in between these first 2 points for a swing high. All right, so I could do this swing high, which I'm going to do because I think it's the most consistent. And what we saw is something really great. You want to see a healthy trend going between 100% and your zero line, which is your general speed line here. All right, this is a stock channeling up, looking great. We saw it break out past that up to the 161.8% line. That means that we're having a good chance of seeing an acceleration of trend. In fact, if our next trend low is higher up on these lines than this one that I've drawn, we're back into acceleration mode. So that's a way to look at this ETF growing. And anything that's in a channel like this, just remember, this is like Newton's law of an object in motion will stay in motion until another object of equal mass or force stops it. I took physics like 10 years ago. Bear with me. But the idea is that trends continue until something clearly stops them. So there's absolutely no reason for this to stop until we see it happen on the chart. So guys, the backbone of if you're actually focused on growing wealth in your portfolio, it's not get rich quick little trades. You should have investments in long-term growth assets. All right, guys. I do want to take some. Would be better to talk about this. All right, let's do SNDL. So I gotta be honest with you guys. SNDL moved a lot because it was a meme stock, in my opinion. Spencer, can you fact check me on that, or at least gut check me?
That's not a hot take. I think that's a pretty reasonable take.
All right, so you've got the meme stock potential. I'll be honest. I don't think there's anything wrong with people getting enthusiastic about a stock they like, it becoming popular, and as long as there's some good due diligence going around and folks agree on that, that's the case. However, this is a round and bottom, and we also had a gap to close, and we clearly closed that gap. So if I'm looking at this from a purely technical perspective, because you got to remember, guys, even if this is like a so-called meme stock, which I'm like kind of tired of fucking hearing about, to be honest with you, even if whatever, all of these external forces, remember, those go into what we see on the chart. The chart, if you believe in technical analysis, the chart reflects all of those external factors, no matter how much of it you might categorize them as a phenomenon or an act of God, or an extremely off-the-wall, unlikely event. It's reflected in the charts, and that's what we react to. So we did close this gap, and then if I wanted to look at my target, I would go to, whoops, I'm going drawing lines like crazy. Draw my line right here. I would do 2 just so I can see the gap. And yes, I know my lines are big and thick, but that's just so you guys can see them. So we're looking at sundial. But yeah, we see that gap got closed. In fact, we gapped up past it. So that's super bullish. Gaps up. This whole idea that gaps always get filled is bullshit. I'll tell you that right now. If anyone tells you gaps always get filled, they're wrong. Gaps often get filled if there's some type of pattern to reflect it. But if you got a strong trend going up, it's going to gap up, baby. And almost every single one of those gaps is a good indication of a run up. It's just when you start to get to the tippy top and momentum slows down and you get one final gap, it's something called an exhaustion gap, which means that your grandma probably just gave you a call and said, should I buy this cannabis stock? Time to get out. Grandma's going to hold the bag. All right. Someone's got to buy the last ones at the top. So when I look at this looks to me like a measured move from what looks like just about the bottom to where I'm going to draw this resistance. And then I'm going to add this on top of the resistance, and boom, there you go. So it looks like just about a measure move. We're going to hit resistance at this key point. This is obviously an important price level. Right about here, and that's what we've done. We stopped out. People didn't stop out, but people started selling at that point. Why? Because this is a key point. If you believe in this company, see if it trends up. Watch it on shorter time frames. Be very careful though, because again, what this has behind it, putting it in context, there's a good chance that this thing will just shoot back down, because one of the three very important things that we care about on the show is volume. We've got a tremendous amount of sales volume, and another one of the three things we really care about on the show is RSI. This thing has become very overbought. When something's very overbought, people are going to start selling it, and it's going to go back down. So there you go. That's Sundial, guys. All right, keep it clean, guys, with the gaps. All right, so that's the ETF list that I've got. I want to look at the contest list. I had some interesting ones in here. Yes, I was a little bit biased with the ones that I picked. Some of you gave me patterns that were just like when I asked you for a pattern, you just said something like upward momentum, which is fine. But what I want to get into with you guys is, let's start defining that momentum. Is it in a channel? Is it trading within a certain rate of acceleration? Can you identify that with a tool such as a GAN channel or a fib retracement? There are multiple channel tools. I'm just using fib right now. But that's where I want to get with you guys. Something that I did want to point out with MP Materials Corp, is that, yeah, this is looking pretty good. It looks like it mostly resolved. Just be careful, because we're at all-time highs. We are at all-time highs. This is looking like somewhat of a double bottom. And yeah, that can occur at following a big upward trend, because we had a downward trend leading into this. It's not going to be as powerful as an actual reversal of a protracted downward trend, but this is a thing. There are two ways of looking at this. Most of what we talked about on the show is very conservative, which is, this is our resistance line, which is where the meat of the action took place, and this line is not even straight. So typically when we're looking at these, we would like to draw our rectangle on it so you can really encompass the action here, the scene of the crime. So it's something kind of like that. Get the absolute bottom, and then I'm gonna try to do a yeah. Is what we want. Yeah, so we want to capture the meat, which this makes it really easy because these tops kind of coincide with these tops. So we've got the meat here. Do I have another indicator on? I don't know about. Okay, we're good. And then we go from the lowest point, right about here, up to the highest point. And then we add that to our breakout point. And we set our target. So it looks like this is very possible for us to do. But bear in mind, everything is in context, guys. Everything's in context of what has happened in the past. This is all about using historic price action to try to predict what will happen next. We've got this level right here. I'm going to just draw a quick little dotted line there. That is going to be resistance. We're going to hit resistance right there before we can hit the full measured move from this double bottom. So that's MP. Shout out to whoever put that in here. Love all the talk about, oh, you do love MP materials? I mean, you must. I mean, look, if you got in down here, you're probably having a great time. I hope you made a responsible purchase with your earnings. But yeah, just watch all-time highs, because there is a chance, guys, that this thing reverses. And you hear the sound of 10,000 day traders crapping their pants at once. So paintbrush tool. I can't find else to use an arrow tool. There's a chance it does this. All right. And then it will probably retest this support. Right. So it would be more like this. Right. So watch it. Keep your eye on it. There's no certainty that it will get to this full measure move. But if it breaks out, never bet against breaking through to all-time highs. Nothing wrong with piling in a bit as long as you're keeping your stop losses tight. Watch these things. Watch them at the close in particular. Don't want to get stopped out. We also don't want to have some bad emotions, some negative emotions, because we're down on our account. All right, we want to limit those bad feels. Next up, InspireMed Inc. This is ticker NSPR. This is from the contest. This one, I forgot what the person said it was, but what I see here is an ascending triangle. If you put in NSPR into the contest, go ahead and give me a comment in the chat so I can give you a shout out. I like this. I like this stock. What I will say is that it's in that range of $1.38 where it might be bullshit. Brian is asking, Neil, is there a certain percent you like to use for a tight stop loss? My general rule of thumb is 5 to 8%, depending on what's been historically going on with the stock. So when we're looking at swing highs and swing lows, that should help you gauge what a reasonable stop loss is, because a lot of times what happens is after market on something that has a clear pattern, like we saw with MVIS, something that has a clear pattern, you might get shaked out by a move that just goes to 9% or something like that, and then goes up 50% in aftermarket hours. So trailing stop loss, be careful with. Be mindful of key levels, which we can talk about. So I say, when I'm not thinking about it, I'm just throwing in a quick kind of YOLO trade, somewhere between 5 and 8%, often trailing or a fixed stop. But your best bet is to do that based on key levels of support. So that's my answer to that. The best answer to pretty much any of these questions is always going to be, it depends. It depends on the situation. So yeah, looking at this thing, we're testing what is, all-time highs. We'll go ahead and use the wick here. We see we broke out a little bit, very bullish, but we're struggling to stay up on that, right? We're fighting. We've gotten past this prior all-time high on the wick, but the body here at 9:55 a.m. Eastern time is struggling to stay up on that. I'm looking at an hourly chart. Let me switch to a day on this. I gave it a thumbs up earlier. Yeah, we got to look at smaller increments. Yeah, you get essentially the same thing at the 4 hour, but we'll go down a bit smaller. 2 hour. The body's struggling to stay up there, and actually it's at this other resistance level, right? So I want to see it approach that. I want to see the body of that candle approach that resistance line and break through for something real. So right here, I'm just finishing the drawing of the ascending triangle so I can have an apex. I can see my sloping support. I can see my upper resistance. One to watch though, but also one to be very careful with on, guys. This thing is $1.44, medical device company. One thing I can tell you about medical devices, big time target for lawsuits. Big time target for lawsuits. Just look at the history of Da Vinci medical devices. It is robotic surgery, like a surgery robot that is controlled by a surgeon. Lots of lawsuits. All right. Doesn't mean that they don't make great products and they're not in basically every OR across the country, operating room. And surgeons love them. I've recently spoken to a surgeon that is very enthusiastic about it, but there are lawsuits there, and that's all it takes to crush a company like this. I mean, this thing could get wiped off the face of the earth at this level. So yeah, no, pimping ain't easy. Pimping ain't easy. Hustle and flow. All right, this was another one from you guys. SBE, and I'm already running short on time. I need a bigger time slot. This one, here's what I got to say about this bullish pennant. We're just about at the point where we're 75% through the pennant to the apex. And this is where if it gets past this and it really starts approaching where these two lines converge, it's very unlikely it'll break out. It's most likely to break out. It should have broken out ideally after this swing low. So we had our kissing our resistance one time, 2 time, 3 time, and it should have broken out there to be more reliable. But because this is going so far into our pennant, it's less likely, is all I'll say about that. But if it happens, use your measured move, which would be your conservative measurements here, your conservative price target, swing high plus a swing low, and add it to that breakout level. So wherever you see it close above the upper resistance line, that's where you're going to set that. So shout out to whoever gave me. Give the guy more time. All right, Steven, we'll give it some more time. It's on my watch list. I'm just not entering. So FRSX. Look at me with the drawings. I like FRSX because I think that it's beginning a new trend, and it's got a nice. The 2 hour is not good for this. It's got a nice comeback story. Okay, so it looked like it IPO'd at. Like it probably IPO'd at what, like $10.83, something like that. Actually, I'm not sure if you can see the actual IPO valuation versus what it started trading at on the day of. But the whole thing is just a big return to its previous high at its IPO price. So if we're drawing a line across here, a big thick one, because these things aren't perfect, we've got a couple things going on. One is that return to all-time highs. Number two is some serious momentum coming through. And you can do this, guys. When you see this momentum, feel free to track the trend and momentum with a line. That's very helpful. And we see that coming in. We see the big volume at these key points that are creating pulls that are followed by consolidation and then some trends up. This one's a little bit tough. Let me get down to 2 hour here. This one's a tough to really see clear swing highs and swing lows in a pattern. It's a little bit chaotic, but a good argument can be made that this will resolve. So if this would be your little rounding bottom potential. Yes, you can see that in upward trends, and then we could shoot for something. Remember, we're hitting resistance at all-time highs. So this is, if it breaks through with power. This is like a battering ram. Once it finally breaks through the gates of Mordor, you got people coming through, or perhaps Helm's Deep, and it's followed by thousands of orcs. And that's what you get there with a price target of about 14. Something I want to point out, though, is that it has reestablished an upward trend. So let's just go ahead and go back, because I don't think that we have. Hey, Spencer, can you make sure that Vaz has the link to get in?
She does. She did say she's cutting it close at 10, so she may be here in a minute or two.
Cool.
She does have the link.
Okay, cool. That gives me more time. So I'm gonna do the channel thing again, guys. Let's look at this trend. Let's draw it out, start to finish. I'll get rid of my stupid thumbs up. Get rid of this line. We're gonna use a Fibonacci channel tool, and I'm going to start with our swing low. Go to our second swing low, and this first line is our speed line. You can see how it kind of lines up with this other swing low here. And then I'm going to bring this to a swing high within our channel. I'm actually going to use this one. It's a more clear swing high because I think that this is a swing low going down. And what we've got actually going back to the OG breakout from this long trading sideways period, is we're touching that 100 level. So again, folks, we're going in between 0 and 100, 0. And then if this thing has a hard time getting up to 100, something to point out is that the trend is probably going to change and probably slow down. So this is something to be mindful for anyone that liked FRSX. Be mindful. This is potentially a decelerating trend. So there are two things that are going to happen. Number one, where's my paintbrush, dude? Number one is if we can't hit 100 again and we hit one of these lower levels like 78 or 61, and then it starts to go back down. So our swing high is then not as large as our previous ones, and then it passes through the 0. That's when we start to look at a dying trend. We start to see a dying trend. So be mindful of that. All right, so we're getting rid of that. Let's look at BNGO. This is what I was thinking about earlier. Genomics. Let me know in chat. I'm not sure if I know those people, Mick. I'm not sure if I know them. All right, guys. So this one I like. I already drew on it. I'll get rid of the fib because I think it's messy. But I'll leave the obvious stuff on, which is, what the hell am I doing? Am I drawing little dots? I'll leave the fib. I'm a mess here, guys. I'll leave these lines on here because you all know them, guys. What's this pattern? Let me know in chat if you know this pattern. This thing should be like the equivalent of if you went to elementary school in the United States and maybe other English-speaking countries, I before E except after C. That's basically it. So guys, this is there we go. It's a pennant because it's a wedge shaped, right? We have it's symmetrical on the triangle. It's a bull pennant. It's not sloping in either direction. So great, very reliable. This is bread and butter stuff. We love this crap. I'm saying crap a lot on the show. So we love bull pennants. We've got a great upward trend here following like an insane period of sideways trading. We go to the day. We see this might be another comeback story, right? We've already actually broken out of what is like just a huge rounded bottom here, the shitty downtrend, and then I think a nice rounded bottom would have started here. And then you saw that it actually broke past this level and gapped up, right? So the bulls have come in. Look at the RSI spike. Insane. So looking at this, we want to see, once again, we want to see this break out before this goes sideways for too long. We want to see this. So we've already had our 3 touches on the upper resistance, and we want to see this thing break out here. And if it does, we've got our measured move from the swing high to the swing low added to our breakout point, which, you know, you can reasonably place it right about here for a potential gain of about 35%. Nothing to shake a stick at. I just want to do one more ticker before we bring on our guest of the day, the Vaz. INFN. I didn't know about this ticker. If you guys put this in the sheet, give me a shout out if this was you, because this one is very nice. This one, you did identify it as a cup and handle. That's what it looks like to me. How is it a cup and handle? Well, number one, what we look for is a trend. And in this case, is a downward trend. And then what we want to see after a downward trend is some type of reversal pattern, one of which is a cup and handle. And I think you have found one, my friend. So we can see that this period of consolidation is a key level. So I've drawn my line there, and I'm going to go ahead and draw it past this other period of consolidation to show that we did have what you want to see in a cup and handle, which is a rounding bottom followed by a little downward before you're up. Sometimes it's more sideways consolidation. Both are cup and handles, all right? At any rate, you do have on your hands the formation of a cup and handle pattern. It has not broken out yet. It's doing what we often see, which is sometimes break out a little bit above, come back down for some form of bounce. This is forming the handle portion. So we are watching for a breakout above this area of resistance. So let me make these candles a little bit taller so we can really get in here. Yeah, I think you can reasonably draw this even a little bit lower if you want. Like this thing is starting to break out past this period of consolidation. So roughly speaking, folks, because this is choppy and charts aren't perfect, they exist in the natural world. Roughly speaking, I'm going to add the depth of the base to our resistance level and shoot for a $17 price target. $17.25 if you want to get really exact, but I wouldn't recommend it in this case. Looking for 72% gain over time. Definitely watch that for something that we've seen already, guys. Sometimes it just goes like this. If it's MBIS, microvision, it goes like that. And so you guys are welcome for that. Also, give me a 1 in chat if you guys got into MVIS, MVIS, microvision. We called it out a couple times on the show. But what I would expect is a nice trend to form. A little more realistic, right? All right, guys, that is it for tickers from the contest. I just want to remind everyone that we've got the boot camp coming up, so make sure that you sign up at benzingabootcamp.com to learn about options and SPACs. Two really, really hot topics that we get asked about a lot. So that's why we're doing a full day of education on a Saturday. And with that, I am very happy to welcome to the show Olivia Vaz, which is short for a longer last name, aka The Vaz, or aka just Vaz.
Hey guys, what's going on?
Oh, not too much. Just looking at charts and stuff. What's going on with you?
Sounds like a plan to me.
Good, and that's why we wanted to have you on. I want to say I like a segment that you do. And let me first ask, during this interview, would you like to go by Vaz or Olivia?
Vaz.
Okay, yeah, good choice.
Of course.
It's much cooler. So Vaz. A segment that I really like is Technical Tuesday.
Ooh, thank you. It's one of my favorites.
It's very cool. Could you tell folks a little bit about let us know what you do. Tell us about this sort of media empire that you're getting started, and how you look at technical analysis.
Well, first of all, it's really nice to be on the show. Thanks for having me, guys. And it's nice to meet your viewers. And I hope some of my own Twitter friends jumped on as well. I'm the Vaz, and I started off doing interviews with the traders at the New York Stock Exchange. And then I kind of just got obsessed with technicals. And I really, just like delved into it and started making my own like signature trades and stuff. So it's actually been pretty fun, and I love interacting with viewers, taking their requests and checking out what charts they want me to look at and stocks.
Perfect. So guys, make sure. Hey, Spencer, make sure you drop Vaz's social and stuff in there, so the folks that don't know about her follow her. Because frankly, guys, you're gonna get some trade ideas from her. So,
hell yeah.
Hell yeah.
So I'm not a Mickey Mouse over here, guys. I'm not going to just put like booty pictures on a yacht and say I'm a Forex trader. Like, I have the goods.
Yeah. We don't do that either, but guys, seriously, if you'll pay for it, you will get from me booty pictures on a yacht. So
yeah, definitely.
Give me a one in chat if you want that.
Benzinga gone wild.
BenzingaGoneWild.com. Gonewild.benzinga.com.
Yes.
So Olivia, what tickers are you looking at right now?
So right now I'm going to walk you guys through two of my favorite signature trades. And I just want to make sure I share this correctly.
Yeah, it's a lot like Zoom. So if you go to the bottom, there's a share button. I'm going to stop my share.
Okay.
And then you should be able to click the share button, and it's just like Zoom where you can click like the specific tab that you have your charting tool in if you want to.
All right, here we go.
We should be able to figure it out from there.
Okay. All right. Am I sharing? Did I do this?
No.
No.
Not yet.
Sorry, guys. All right, let's try this again. All right, I don't need tips. Okay, here we go. Share. Chrome has lost position. Oh, I have to give it permission. Hang on.
Okay, no problem. While you're doing that, I'm going to do some shameless self promotion.
Yes, go ahead.
Hey
and
guys,
the picks that we've been talking about.
Yep. All right. So guys, I just want to say this show wouldn't be possible if it weren't for instant coffee, brandless instant coffee. If you know what coffee brand this is, go ahead and @ them on Twitter, @Neil's Tweets, @Benzinga, and say, sponsor Get Technical. What are you doing? Something along those lines. Apply a little bit of pressure, guys. Do us a favor. Another thing I want to bring up, every morning I drink my instant coffee out of this News That Moves mug with Benzinga Pro branding on the side, which is available at swag.benzinga.com.
Oh, man. What a day already.
Okay, so we're off to a fantastic...
We really are, guys. Like, I am... All right, let's try this. Oh, my God. I think it's working.
It is working. Adding to stream. We've got a chart. Look at that.
Holy Vishna. All right, here we go. All right, guys, I'm back. So are you done with your shameless plug?
Yeah, I think I'm mostly done.
Okay.
I'm done for now. Thanks.
All right, guys. So I'm going to first show you one of my favorite signature trades. This is called a top shelf trade, okay, or a top shelf chart. I call it top shelf because essentially you're finding a pretty strong shelf where you have limited risk to get in. And it's basically the confluence of some of my favorite indicators. And I call it top shelf because, you know, pass the Cavossier, right? So that's why I have a little martini glass here. And what we found is recently a top shelf in CarMax. Like of all things, CarMax, right? I mean, people were kind of like trolling the stock. It is a used car dealer stock. But what I liked about it is this confluence. Like you see, like it's like grinding right here. Price is grinding here. And we have the moving averages, like the 200-day, the 50, and the 21-day moving average. But what I use especially that you guys aren't seeing right now, there is another shelf or there's another indicator that's creating this confluence right now. And you guys can't see it until I go like this. Here we go. Let's zoom in a little bit. Right here. Do you see that? Am I talking to you, Neil? Do you hear me? Or am I just by myself? Okay. So guys, what I just clicked on is called the point of control. This is a volume profile. Are you familiar with it?
I was going to ask you about it. I'm somewhat familiar with it. I don't use it, but yeah, I love that you're about to explain it. So please do.
Yeah, so check this out. So right now, just if you guys just missed that, if you're tuning in right now, top shelf trades, it's a confluence of my favorite indicators. We're talking the 200-day moving average, your favorite moving averages, whatever you use. But the most important part about a top shelf is I like to see this guy, this magical little thing called volume profile. And so volume profile is basically showing what price was the most popular. That's what this is. It's almost like volume bars displaying price. So we're ignoring down here the time frame, right? What time had the most volume. And instead volume profile shows what price had the most volume. And that's like where the bulls and the bears are really fighting. It's like basic auction theory of the stock market. And what it has is this thing called the point of control, which is the most popular price. And when you have something like this, let's see, that's the largest volume bar right here with the price volume bar. And when you have this with the moving averages, grinding, you have price like grinding up on this, like you're at the club with your moving averages and the point of control, which is the strongest point right here, that's going to create a really nice shelf. And usually, more than not, price will react really nice off of this and rally. And if it doesn't, you have your stops like right on the bottom here. So the risk reward is pretty good here. So CarMax, we had a really nice top shelf trade in CarMax. The thing went from 95 to now 126. Pretty cool. Another one that I saw a top shelf trade in, let me just get rid of this magic because I like drawing it, is Farfetch. Farfetch around up here, it had the point of control up here. If you zoom in a little bit, I personally like you'll see like the point of control or like this volume bar right here. If you zoom out at least 6 months, like bam, right there. Sometimes you need to zoom in a little bit to like justify if there is strong, you know, price buying right here, which we saw in Top Shelf, which we saw in Farfetch. But you know, another indicator, it's not just the moving averages. I also like doing Fib. You know, Fib can create a beautiful top shelf. Whoa, that's the pitchfork. Who uses pitchfork, man? I thought that thing went out with Truman. All right, Fib retracement. Here we go. So around where I caught this top shelf was, I think it was around here. So we had the 23% Fib. We also had the point of control right up here. And in Farfetch, this thing went crazy. I don't know if you guys are following Farfetch, but it's a pretty cool luxury, like overseas online stock or company. So you can get, you know, your Italian sewn tighty whities sent right to your door. Because I know you like those, Neil.
You got me. I do like them.
So what do you think so far? Pretty cool stuff, right?
I think everyone is really liking this. This is fantastic. You're the first person on the show. I got to say, you're the first person on this show to use volume profile and explain how it fits. Also, you're the first person on the show to pull in the Fibonacci retracements, which I really appreciate because. Yes, you are. I mean, we are a fairly new show in all fairness. But you're introducing some new concepts with a pick that I don't think we've talked about at all. So
just a reminder for Fibonacci, guys, it's basically, you just pull it from the low to high or high to low. That's how I do that. So you take the low to high at this point when I caught this top shelf, the lowest price to the highest price. That's how you measure it. Right. And that's where I found this top shelf trade. But I have one more trade I'd like to show you guys if we're on time or no, not on time.
Yeah, you can absolutely keep going. And really quick, just so I'm going to zoom in on this really quick. Sure. What's the ticker on the one you're looking at right now?
This is Farfetch FTCH.
FTCH. All right. Yeah. Producer / coach Spencer, make sure we get that up. There we go. Beautiful. All right, yeah, go on to your next one, Buzz.
Yep, and I'm just showing you examples of when you catch something like this, what can happen, right? And we have some new ones that we're watching or that I'm watching. I love how I say we because you, me, followers. Listen, we're all in this together. So I love when my viewers are like, "Yo, Buzz, I caught a top shelf." Like, tweet me out. Sharing is caring.
tweet me out too.
Tweet me out. Tweet us all out. How much time do we have?
I'll give you like 5 more minutes. How about that?
5 more minutes? Okay. Yeah. So I want to show you an example of what happens. Sometimes a top shelf, we saw this in Akamoose, right? This thing, it's so much fun to trade, especially if you're an options trader, because the thing has just been like crazy range bounds, like these wild swings of being range bound in the past, let's see, since Julio, since July. But we caught a nice top shelf right around late November. And sometimes, of course, it can overshoot a little bit. Always have your stops. I'll overshoot it a little bit because I know that this can happen. But what happened after this top shelf is it rallied. We had ACAM rally from 102 to 125. Of course, people are going to take their profits at this point. I took mine a little earlier. But see what happens? I call it a shelf because look what it's catching right now. Again, after its sell-off, it reported earnings. No one liked it. Even though it flew through these moving averages, at this point they were moving higher, it still catches this point of control on the volume profile. So that's why I like to call it a shelf, and we'll see if it can, test this for a couple more days and then if it can rally again. But at this point, I wouldn't trade this, but I just want to show you that it can catch that shelf again.
So I want to jump in and ask what I think is somewhat of an obvious question. I think volume profile is kind of coming into popularity right now. I see a lot more folks talking about it. So there are a lot of open questions. I know that there are key levels, right? There are key points in the volume profile that are very important.
Oh, yes.
Would you mind, just purely for the purpose of educating us, telling us what those levels are and showing them to us on this particular stock?
Of course, absolutely. So the volume profile, again, guys, this is where price was the most popular, right? We're ignoring time and we're looking at what price had the most action, okay? So the Mac Daddy of the volume profile is the point of control. That is where the most action was happening on that price, okay? And that's what this dashed line is, all right? This is the value zone, this bright area. This is where 70% of the volume has been traded. So that's another key thing that you want to know when you're looking at volume profile. And essentially, the top of this value zone is resistance and the bottom is support. That's kind of how you can look at it.
So coming from a statistics perspective, I look at this as like a bell curve distribution.
Yes, and they take different shapes, which is really cool. So this is a bell curve, but they take different shapes, and I have my little tricks on how to trade those shapes. So, we can go into that another time.
We can. I hope that we can. We've got about 2 minutes left. Is there anything that you would like to leave folks with? What is something that will astound and imprint in the memory of chat? The Vaz.
Boss trades, okay? Boss. You trade it like a boss, baby. So we went from our top shelf to now the boss. So we're actually going to look at time now, okay? Time. Boss trades, it's all about time and volume, whether it's good volume or bad volume, okay? We need volume accumulation to push a stock higher, which we saw with UTS, okay? Look how clean this is. So basically, guys, what you want to look for in a boss trade is you want volume accumulation to push price higher, and then you want a low volume. You can call this a bull flag. You can call this a sell-off, a consolidation, but you can see the volume here, and then the lower volume, sell-offs or consolidation, then we have another push higher, lower volume sell-off or accumulation, a high volume push higher. I mean, this is so bullishly symmetrical. This is like, I don't even know. This is like the Stacy of stocks. And of all of them, UTS, I mean, they went into tortilla chips, and the crowd went wild. But the algos haven't attacked this thing yet, so it is still valid. And we're looking at a low volume, consolidation right here. This is where you kind of would want to get in now in UTS and wait for that high volume, accumulation to take it higher. So this is a really good stock to end with because it is in that lower volume pullback, it looks like. To get in.
I love your approach to trading so much right now, Vaz. We have not had this vibe on the show. I got to say, we must have this again.
Awesome.
This is boss. This is the boss trading strategy. This is a boss trade coming from the Vaz. Guys, give me a 1 in chat if you want to have Vaz back on very, very soon. Vaz, I want to give you the opportunity to do 2 things. 1, tell me your favorite ticker right now. And then 2, let folks know where they can get more of you.
Okay, I just ended with my favorite ticker, UTS, and I'll give you guys another one. For those of you that like gentlemen's clubs and stocks, RICK, RICK, is a great boss trade that you guys can follow me on Twitter, the Vaz for real, and I'll tweet that chart out today so you could see what I'm talking about. How that's another boss trade.
Very, very cool. I'll have to tell a friend of mine about this RICK stock. It's very, very good.
I don't know if they have like virtual strip clubs or what's going on, but apparently this has been doing very well in the pandemic. So
yeah, I want to be able to tell you. All right, thank you so much, Vaz. It's been fantastic having you on, and hopefully we get to see you soon.
Yeah, thanks for having me on, guys. See you later.
All right, guys, that was the Vaz. Make sure you follow her on Twitter. She's fantastic. That was my first boss trade experience. A couple of you guys pointed out that her background was that sort of pinkish hue matches what she's drawing on her charts. That's a pro. She is 100% doing this all the way. She's fantastic. I guess I don't have enough good things to say about her. So hopefully we have more fantastic guests like that. And a lot of you guys gave us a 1, so we'll have the Vaz on again as long as she can make herself available for that. Guys, we've got 3 minutes left. I think at this point, I would really love it if Coach Spencer could play sad music in the background as we wind down. The credits start to roll. It would be like Neil. And then it would say the Vaz, aka Olivia Vaz. And then
all right, so I'm making a note now. Play get sad music, right?
Yep.
All right.
Thank you.
Get sad music. Got it.
Yep. I appreciate that, Coach Spencer. One final reminder about the Benzinga Bootcamp, benzingabootcamp.com. I'll be there. Hot Stocks Lucha Kobe will be there. A whole bunch of fantastic educators will be there to teach you about options and SPACs, as well as just regular trading stuff. Let me know. Tweet at me, at Neil's Tweets. Spencer, can you throw that up? tweet at me at Neil's Tweets if you liked diversifying away from just charts and talking about ETFs and stuff like that, if that was helpful. Also, just tweet at me and let me know what your favorite things to learn about are, because I got to be honest with you guys, I can't do this every day and just make up stuff. I've got interesting stocks that I want to share with you, but I need to know what you guys like. So tweet at me, let me know what you like. Make sure you use hashtag #GetTechnical. So we can get a little bit of momentum, so we can bring in more folks to share in on the goodness with us. We are at about 10:29, taking us to the end of the power hour of the morning trading. So hopefully you guys had some good results. Once again, you're welcome for MVIS if you got in on that. More great picks to come. Great work on everyone that entered the competition with identifying their patterns and the picks that they had in there. I saw some great stuff. I've added them to my watch list. So I think we are all learning together and everything is going according to plan. So with that, I'm Neil Hamilton. This has been Get Technical featuring special guest, the Vaz. Next up is the Benzinga Pro Happy Hour with Ryan Faluna. Have a great day, everyone.
Or some type of volume inflow. Let's go ahead and load up Uber here. Deshaun, in the meantime, go ahead.
Can I like ask the question out loud as well?
Yeah, of course, man. That's what we're here for.
So the weird thing that happens yesterday and today is I seen that Uber was at like high, like up to like maybe 6%. And like I saw like the unusual options where there was this big massive put being played. So I went to play it too as well. And the stock later on, like after hours, like it went down like 5%. And fresh in the market, it was still down like 3%. And it was weird to me that like I still like the puts weren't in profit. Like I didn't understand like why. Like I bought it at the money like 62. It went lower to like the stock went down to like 61.
Sorry to interrupt real quick. We are live on YouTube. We'll get back to you 1 second. We do have a full day ahead of us today on YouTube. 11:15, we have Adam Goldstein from Archer Aviation coming on SPAC Attack. We have at the Power Hour Chan Low at 12:30, founder of Call and Puts. 1 o'clock, we have a couple TikTok traders, Kayla Kalebridge and Chris Josephs. And then 2 o'clock today, we have a fireside chat with Mario Stefandis of Roundhill Investments. Deshaun, you can get back to it. Sorry about that.
That's good. Yeah, so yeah, pretty much like it was weird that like the put option like wasn't profitable based off it went down like 3%.
Okay, so I think that I know what happened. I don't have the ability to pull up the option chain right now to confirm this, but I think what you're referring to is implied volatility. So a lot of the times when you have a binary event like that, like earnings, or in some cases, especially with drug companies, when they have conferences that they're going to present at, or when you know that data is scheduled to come out, when you have a binary event like that, implied volatility is what's going to cause the premiums in those options to change. And what I mean by that is that whether it's calls or puts, and whether it's a gain or a loss, that implied volatility is going to increase the price of the premium. So let's say your implied volatility is about 50%. And by the way, if you trade options, your broker should be able to, you should have some screen or some data point in your broker that lets you know what the implied volatility is. What happened there is, as we traded up into earnings, the implied volatility kept creeping up and creeping up and creeping up. Now, let me ask you something. Did you actually buy your put contract like right before earnings? How long were you holding that for?
Literally overnight, like literally like right before 4 p.m. last night, yep. I bought the put option, expecting that earnings were going to crash the stock.
Okay, all right. So what happened then is that as we were moving yesterday closer and closer to earnings, that implied volatility is creeping up and up and up. And what that means is that the premium for that put that you paid for kept going up and up and up. What that means then is that if you are actually going to profit after the binary event, that implied volatility is likely to come back in a little bit. So for you to actually profit, you need an even bigger move now to make that continue going in the direction that it's going. So I would imagine that what you're referring to here is implied volatility. Now, that might seem like really crappy, right? That sucks. Like that's why trading options around binary events can be very difficult. Now, with Uber, it's a little bit different. With those pot stocks, all of the implied volatility is up. The entire sector is being lifted. No pun intended. With Uber, it's a little bit different here because it's not, you know, it's not this crazy stock in the news or whatever, but you're still subject to how those options trade. So can you give me any type of like estimation on the actual numbers, like what you paid and then what you ended up selling for? Like what kind of movement were you actually looking at?
Gotcha. Let me just pull that up real quick.
Yep, no problem. And then, so the other thing here is that they obviously reported yesterday. The market did not like the earnings as it traded down in the after-hour session. I did notice that the Uber CEO was on CNBC this morning. Now, the TV was muted, so I actually couldn't hear what he was saying. But I know that they do this a lot. They bring those CEOs on right after their earnings, and the CEO is generally going to sugarcoat it, right? He's going to make it sound as good as possible. So that could be part of why this was trading back up. If you bought a put, it looked like it was going to work out, and I mean if you look at the actual movement here, right, we closed around 63, and at the low we were right about at 60, right? So we only have $3 of movement on a $60 stock to begin with, so that's not necessarily a lot, though. Even, you know, those option contracts are probably not going to be huge gainers anyway. And then the other thing is as this started to, you take this staircase back up in the pre-market, you start to get closer and closer to where you actually closed yesterday. And in fact, it looks like it opened right about at the same spot. Now, it immediately sold off, right? Because I'm sure that there were other people playing the earnings print. And now that the earnings print is behind them, it's time for them to get out of their position, whether they've been in for a long time or they were just playing it overnight. It's time for that. It's time for them to get out. In fact, if we take a look at the volume candles right here at the bottom, they're all red, right? So sellers dominated here until let me move this out of the way and I can actually get you a time here. Sellers dominated this name for the first 7 minutes of the market, and then the buyers actually started to step in, and when that took place, you actually started to trade back up. That's going to wreak havoc on those options. So so did you end up getting those prices?
Yeah, so I bought it average price around like $2.07,
Okay.
and the average sold price was around like $1.49. So it was about like a 25% loss.
Okay, so what happened here is that it looked like you had made the right move, right? The numbers came out. Even our news desk is saying here, the company is trading lower after they reported worse than expected Q4 results. So it looked good, and then all of a sudden, as it started to trade back up in the pre-market, all of that unrealized profit, if you will, is disappearing. Let me ask you, when were these set to expire? Or were these short-term options?
Yeah, very short term. They're like 2-day options, and I sold the options right at the very, very low point, like the first 5 minutes at that first 5-minute point.
Yep. Okay. And so that in that first 5 minutes, it actually looked like this stock was trying to rebound. You know, we did sell off here, but at first we were actually trying to rebound, and so that's probably why that took place, right? So it's a combination of implied volatility and the move not materializing. What's interesting here is that after it did sell off, I'd be curious to know what the premium was here. What kind of volume was on there? Were there a lot of people trading this? Was there a lot of open interest, or was it kind of light?
Yeah, I just know that it was a lot of people trying to buy like they're buying massive amounts of these options.
Okay.
And
okay, that can play a role too, right? Just simple supply and demand can play a role in that. So if there's a bunch of contracts being traded, or if everyone's trying to dump contracts at the beginning, even if the stock price is going up, that may actually drive the price down. So that's actually one of the reasons why when I trade earnings and stuff like that, I generally like to leave at least a week on the end of that contract, because it's going to make it a little less subjective to these violent moves that you're seeing here, right? So this was 63.80 down to 60 and then back to 64. By having, and it sounds to me like your contract actually expires tomorrow. Yeah. So it was real close to the expiry. So if you were to do something like this again, first of all, if you think that your thesis is correct, so in this case, if you thought that Uber was going to miss on earnings, Playing it with options is not a bad idea, right? You're defining your risk ahead of time. You're trying to play for a very specific move. You have your time frame identified. You have all of these things identified. If you're going to try to do something like this in the future, I think one of the things that you might be more successful with is buying an option that maybe expires next week or maybe 2 weeks into the future, because you're going to have a little bit more time on that contract. What that means is that your premium is going to be a little bit higher right out the gate. But if you're going to trade that, maybe just buy less then and keep your total cost basis the same. This has happened to me before too. I've traded. In fact, one of my biggest frustrating trades was on Apple. It was on, and I traded it for an earning. I was long stock, but I also traded the options for the earnings print. It was a beat. I think this was back when Apple was like 115. It traded up to 117. And then the next morning it came back into about the same price at where it closed. And when the market opens, my calls were absolutely destroyed. I mean, at 25, 30% down, and the stock wasn't even really moving. It was really, really close to where I had it. That to me was a lesson where it's like, I think that I need to actually have a little bit more time on these options. It's one of the reasons why I actually try to stay out of the weeklies too. I like to trade the monthlies because I feel like they don't move around as erratically. Anyway, I apologize for the long rant. I hope that you found some of that information helpful. However,
Yeah, thanks, Ryan.
Yeah, no problem. All right, so let's take a look at some of these other stocks here. Andrew has given me some stocks from the YouTube channel. Thank you guys for joining us. Let's go ahead and pull up NVIDIA. I know we've talked quite a bit about AMD recently. Let's talk about its competitor, NVIDIA. Let me go ahead and pull that chat back up here. Come on, chat, where are you at? All right. Well, it appears that I have lost the chat. So, okay. So NVIDIA, let's take a look at this. So this obviously super strong. I think that one of the things is these stocks that make graphics cards, whether it be AMD or NVIDIA or whatever, I really think that as long as the Bitcoin headlines keep up, as long as the Bitcoin strength remains, these stocks are going to be strong. It's just, first of all, it's impossible to get some of these newer cards from either of these companies. They're still sold out. I know in the UK, the retailers are actually upcharging now. They're actually raising the prices on these cards just because the demand is so high. So I think that this is going to be really, really strong. This chart is awesome, right? We have just a huge run. We have some of these corrective moves, which are very healthy. They're met with buyers. It runs again. It looks like here that we were kind of carving out a bit of a range here between 580 and maybe 510. Kind of a big range there, but now we've kind of broken above here. It looks like this was a near-term triple top that we actually broke above. Let me go ahead and mark this level here on the chart. This is a good one. This is a good one. So we've broken above that. We closed above that yesterday. Looks to be strong today, up another 2.5% today. This is a power move right here. I like this. I like the way that this chart moves, or I like the way that this chart looks. This is something that I would absolutely trade. I'm really upstairs. There we go. There's the chat. Let me go ahead and bring that back up here. Close that. Bang. There's my chat. Oh my gosh. I am struggling so much with Zoom today. I'm so sorry. All right. AUVI SBE earnings today. Okay, so let's take a look at that. Let's take a look at AUVI. Applied UV. Now, I'm actually not familiar with this company. This ticker does sound familiar, but I can't quite place it. So let's see what's going on here. Okay, so wow, what a power spike here on volume, and quite the corrective move here. All right, let's zoom in and see what we got here. All right, so first of all, intraday, this looks tough. The past few days, this has really been coming in here. So okay, so one of the things that I'm seeing right away here is this clearly in a downtrend, right? So if you're going to play this, you're effectively understand that you're trying to catch a falling knife. With that being said, you want to be nimble in this name too. Now, you can see that yesterday there were periods where this stock tried to bounce. And in fact, some of these actually did have volume coming in to confirm that move. but it simply wasn't able to hold. So what I would be concerned about trading this today intraday is the same type of pattern. I would expect to see some bounces. It looks like our volume today is much lighter than it was yesterday. I would expect to see some bounces. The question is going to be, do those bounces hold? Yesterday, every time this stock tried to bounce, it failed. It was not able to actually hold its reversal, and then it continued its downtrend today. So for me, that's a little bit of a concern. And as far as trading this, I would try to be as nimble as possible. This is not necessarily one that I would stay away from, because you want to be able to capture some of this volatility. And it does look like it's actually kind of holding today. So we'll see what happens. What I want to see here is I want to see a pop on volume. I don't want to see any of this low volume stuff, because that's not really going to hold. I mean, when you look at some of these candles yesterday, this is night and day difference. Difference. So I want to see some volume pour in here. I want to see this level hold, and then I want to see I want to retake yesterday's closing price. So I'm going to estimate that here instead of switching back to the daily chart. Yesterday we had 1447. A break of 1447 on volume might send this. You might be able to trade. Now this is quite a range, right? So if we do start reversing, the move can actually be quite nice. That's one of the reasons why I can understand why you'd want to trade this intraday. Just be careful. We really want to avoid this, because this is basically a trap. If you're trying to play this to the long side, these are fake outs. These are bull traps, intraday bull traps. It looks like it's going to go, and then it just reverts back to its downtrend. We want that to change. One of the ways that's going to change is if we see some consolidation here, and then we have that move confirmed with volume. So that's actually what I want to look at right here. Let me see if I can pull the chat back up. All right, SBE earnings today. So that's I believe that's Southbridge Energy or something like that. Let me go ahead and pull that up. Okay, so with earnings here, Switchback Energy, Southbridge, Switchback Energy. Okay, so with earnings, the immediate question that I have is, are you trading this to the run up into the earnings print, or are you actually holding this through the print? If you're holding it through the print, then you have to have some type of angle, edge, hunch, gut feeling that it's either going to miss or beat, I'm assuming. So for me, taking a look at this, and you know what? This is another important aspect. I've often wondered what some of the intraday trading on the day of earnings, how that actually affects the earnings print. So let me rephrase that and make it a little bit more clear. For example, when I watch Apple, a lot of the times I'll watch how it behaves the first hour of the day that it's going to report earnings. Apple always reports after the bell. And so that day, the day on which they report, I'm definitely paying attention to the price action right after the open. A lot of the times I see it selling off on high volume, and that's kind of what I see right here, right? So the volume today is definitely bigger than it was yesterday, with the exception of this one patch. Now, this here was also a bunch of sellers getting out. So the way that I feel, just from looking at the chart with having no other information and no other angle, what I think right here is there are others out there that have a gut feeling that this isn't going to go well. And as a result, they're trying to get out before the earnings. They don't want to see a gap down here. So I don't know. I don't have any angle on this for its earnings. So I don't really know. I do. What's interesting here, okay, this is technically, this is an interesting chart pattern. Let's go ahead and actually draw this here real quick. All right. So I like seeing these, right? I like seeing some of like this compression. Whenever you have a move like this, and then you have that range kind of compressing and getting smaller here, I know one thing. I know that this stock is not going to stay where it's at for indefinitely. It's either going to be up or it's going to be down. Now we have a catalyst here that's probably going to drive that, right? We've got an earnings print after the bell today. So we know that this stock is going to move. I don't want to guess without having an edge. I don't want to guess which side of this is going to break down. I don't necessarily want to guess that it's going to break to the upside or break to the downside unless I have an edge. What I want to do is play whichever side it breaks to, right? So I feel like the longer that this formation lasts to, the more compressed this gets, the more violent the break is going to be in either direction. So that's what I would try to play. I would actually, and the problem is that if this is based on earnings, you actually may have to trade the equity after hours in order to capture that. So this to me is an interesting stock. I do this formation is nice. I try to play the tail end of this formation. I don't necessarily want to guess the direction. I want to play the result because I'm going to have, at that point, the trend is going to be my friend and it's going to be in my favor. So Curie before estimated earnings today. So Mark, this was one, didn't we? I think we talked about this last night too.
Yeah.
All right. Do you have an update? Let me pull this up here. Do you have an update on this for me?
Yeah, it's starting to make its move positive. It jumped 16% today. So it's thank God. It's one of those ones I've been holding, and I got caught holding the bag a little bit with this guy. But I'm actually in cash flow positive with it now, which is great from today. But its pattern is looking interesting because it's doing these little cups. But each cup it's breaking higher and higher each cup point in the past 5 days.
Okay, so I pulled up the warrant there because my computer, I need to feed the mice and the hamster wheel that's in there. So we still have, okay, great. So we actually still have some of our drawings from yesterday. Yes. So, okay, so first of all, awesome that we broke above. Now here's something, this is kind of the opposite of what we just talked about with Switchback, right? The earnings are after market today. Is that correct?
Well, no, Friday.
After Friday,
unconfirmed still, so it's not
okay.
100%.
Okay, so we're leading up into earnings. The earnings print hasn't already happened. One of the things that we're seeing here is right out of the open, not only are we seeing the increase in the actual price, but we're also seeing the buyers step in. So it tells me that there's interest in here. Why would you be buying ahead of earnings without some type of feeling edge or something of that nature?
Well.
Say again?
That it's going to go well. Yeah.
Yeah, exactly. So I want to be very clear. These moves on the day of, these are not necessarily tell-alls, right? They can very, very easily be wrong. But I try to use this information when I'm talking about a trade. If we look at yesterday, we don't see any of this behavior. Look at the volume that's in here today compared to yesterday. I'd be willing to bet that we've already traded more shares today than we did all of yesterday, just based on looking at these candles here.
All of the previous probably 2-3 months.
So there you go. So to me, that seems like something's going on here, and I would imagine that if our volume was that high and people were not believing in this company, didn't think that they were going to have good earnings, you wouldn't be adding to your position. In fact, you'd probably be selling your position. Even if you're in long term, maybe you're going to lighten it up and hope to buy some back after earnings when you get it at a discount. Who knows? In this case, though, this is pretty much the opposite of what we just saw in Switchback, right? We're seeing some positive buying today. Mark, good luck on this. Are you going to hold this through the earnings? Are you holding just common on this?
I don't know. Yeah, I'm just holding common. But I don't know. I think it depends on what it's going to do tomorrow. I don't even really know if earnings are really going to happen on Friday. So it's unconfirmed. So I don't know if I can find that out a better way. I don't know.
Well, I'll tell you what. I'll tell you what. As soon as I get off this, do you participate in the chat at all? Are you in either of the chat rooms? Which one do you use?
Lounge mostly.
Pro Lounge. Okay. So this is what I'm going to do. As soon as we get off this call, I'm going to go ahead and see if I can confirm with our news desk when this earnings print is actually going to be. It's totally possible that we don't have that information yet. If we do, I will try and send someone to go find this, and we'll try and update this. I will update. I will mention it in the chat if I do get any information on this. We definitely want to have those confirmed, and I'll go ahead and see if I can actually find a PR from the company. We'll check out their investor relations page. I don't necessarily want to load it now because I'm having all types of issues with the computer, and I don't want to. Okay, cool. Yeah, and I'll give you a hand with that. Our news desk is real good, and they're really responsive. Holding it overnight lost a lot of value when 1/3 lost in the contract. Okay, even without the Bitcoin demand, there's still gaming demand. All right, Andrew is saying Apple CLSN. Boy, we had a lot of how many years have I been trading? Raz just asked in the YouTube chat. I have been trading for 7 years. I have been trading for 7 years. I have been profitable for 4 of those years. The first 3 were a little rough, but that made me into who I am today. SPE, the company is completing a SPAC merger today, no earnings. Okay, so yeah, earlier I was going off of the information I have, which was there was earnings, completing a SPAC merger. That's anyone's guess, right? The SPACs have been going absolutely crazy. If you've been playing SPACs, you probably have more of an edge than I do there. All right, let's take a look at some of these other tickers here. Let me go ahead and load that back up. Let's take a look at Apple. This is actually one of my favorite stocks to trade. I'm still long all of the shares I have. When I trade around my core position, I use options to do that. It's, to me, that's just a way that I've been able to kind of capture that. So looks like we definitely sold off a little bit here out of the open. You know, one thing about Apple is that I think that this should be higher than it is right now. I think we should be back up around 150. Their last earnings report was quite good. Apple's moving to a more of a services-based business, which is going to be, you know, effectively guaranteed income. The products are still really popular. The ecosystem is really popular. The Mac seems to be coming back. I wouldn't be surprised if you even saw like a move back towards iPads. People love tablets. They're used in all different types of different types of lines of work. Like we see football coaches using iPads now, or I'm sorry, Surface tablets. They'd be so pissed at me if they heard that, but whatever. The tablet market, I wouldn't be surprised if you actually get a bump back into that. That being said, that's such a low percent of Apple's business. I'm more concerned about the Mac, the iPhone division, and the services revenue. This stock, to me, this is an absolute powerhouse. This is one that if you're going to buy, you know, I would actually adopt the Kramer mentality on this. I want to own this. I don't want to trade this. And that's exactly how I position myself, right? I bought shares, I held them, and the stock split. I'm still holding the shares. Any of the trading that I'm doing with options. And you're still subject to the same thing, to what we talked about earlier with implied volatility. But I mean, otherwise, this is, to me, this is the strongest company in the world. This is one where if you're not comfortable going long on this, what would make you comfortable going long? I mean, and if you give me GameStop, then I'm just going to shake my head. I'm not even going to respond to that, because that's not the case. From a technical perspective here, we've broken above this level that we had from September of last year. It looks like we're still kind of battling right around this line. I do want to see this fall. I do want to see 140 act as a support. I think it's just a matter of time in this case. What I would be looking at here is probably something like the April or the May call. I'd be looking for maybe a $5 to $10 move in that amount of time, and I would try to capture that with calls. So I hope that that was helpful. Let me go to the next ticker here, CLSN. Let's check out CLSN. Celsian. Okay. Oh my, we are up 47% today. Let's go ahead and figure out what's going on. If there's anyone in the chat that has any type of information on this, go ahead and we're working on portfolio integration. Okay. Sorry about that. Just going through some of the chat comments here. Okay. So if you have any edge or any information on CLSN, go ahead and drop it in the chat. Let me know. This definitely is a stock that I've traded in the past just on day trading, right? I just trading this off of volume scanners, pops. And this is one of the reasons why, right? When you look at the history of a stock, when you see that a stock can make some of these big moves seemingly out of nowhere, it's plausible to assume that that's going to happen in the future. Well, look what happened. So we obviously had this nasty gap down, had a nice little rounding bottom. And as we traded back up, we did actually pop pretty big, came back in and popped again. Now we are on an uptrend here. This is not quite a floating island. As long as we stay above the high of this candle, so as long as we stay above 280 on the close, we can probably continue trading this to the upside. Again, though, stock like this, I'm more liable to keep this intraday, right? I don't necessarily want to expose myself to a potential offering after hours or any type of manipulation or any type of odd move like that. If you did want to hold it overnight, one of the things that I would suggest is go through some of the SEC filings, go through some of the registration forms. I believe those are 424s, Form 424s or S424s. You want to see if there's a potential offering in the future. We'll never know for sure. Even if you ask the company, even if you ask on a conference call if they're going to do an offering, they might say, no, we're not going to do an offering, and then a month later do an offering. So take that with a grain of salt. A company like this, I'm probably going to trade this on the intraday. So let's zoom in and take a look at what's going on today. Now, I would like to see what's going on here. Let's see if there's any news here. All right. So issues a letter to stockholders thinking about buying stock. Okay, hang on a sec. That's not it. So we did it. We had a Form 8 here. Let's see. We're loading the press release here. Let me see if I can just get a general idea of what's going on here. Lawrence, okay, so another oncology. Remember what I said about oncology? I think we talked about yesterday. We talked about SENS, right? That was a diabetes market. Oncology, very, very similar. Anything that has to do with cancer treatments has a huge market. There are a lot of people that want to see companies like this succeed. I'm one of them, right? I lost my father to lung cancer. I hate cancer. I definitely want to see the fight against cancer go really well. So anything that's in the oncology field, you're liable to see some pretty big moves. So I'm trying to read this and talk at the same time. I know that's dangerous. Andrew, I know we're up against the clock here. Keep me in line just to make sure I don't get out of hand here. Okay, so I'm not sure. I need some more time to actually go through that press release. This does look like maybe the trend is reversing. Again, we want to stay above that 280 level. It looks like we actually sold down to 240. Buyers stepped in here. So intraday, I would trade this against 280. We're real close. Okay, now we're below 280. So I don't know. For this, if you're going to trade this now, I think your stop has got to be low a day, right? You got to be 241, 240 on the stop if you're going to take this. Otherwise, and then we're hoping for some of these highs to be broken down. So 340, and then it looks like almost 385, 387 here. So this is for me, I would trade this intraday. I mean, I hope the company does really well. I hope that the fight against cancer goes really well. But for me, just looking at this, I'm going to stick to an intraday trade, and I'm going to make sure that I'm protected. Stop on the downside, 241. Hope for a break of 348 to the upside.
Ryan, I'm going to cut you off there. We got a huge rest of the day. Everyone on YouTube, stick around. Everyone that's here from Benzinga Pro, we have our weekly happy hour with prizes and trivia coming today at 4:15, so come to that. People on the YouTube, we're about to go to SPAC Attack. Mitch is still on vacation, unfortunately, so Spencer Israel is filling in. We have Adam Goldstein of Archer Aviation merging with ACIC. He's coming on live at 11:15. Then at 12:30 with the Power Hour with Raz and Luke, we'll have Chan Lowe, founder of Cullen Puts, followed by Kayla Killabridge and Chris Josephs, a couple TikTok traders. 2 o'clock, we have a fireside chat with Mario Stefanis from Roundhill Investments. And then for all the cannabis lovers, at 4 o'clock, we have our weekly Cannabis Hour with Jill Nervith, president of Montech, Alvaro Torres, CEO of Chiron Life Sciences Corp., Michael Albrecht, founder of Subversive Capital Acquisition Corp. That is a full day of events. Stick around. We're going all day. Market is closed on Monday. We just found this out, but that's how locked in we are. Today is Thursday. Let's have a great day.
You just found that out, Weiss?
Take it away.
All right. Maybe Weiss just found that out, but the rest of us knew that the market is closed on Monday. If you didn't know, hey, now you know. Markets are closed on Monday. All right. Don't show up to your trading station at whatever time you normally do. It'll be a waste of time. Don't tune into pre-market prep because we won't be on. So yeah, markets closed Monday. That's a really good PSA. We'll make sure to mention that again tomorrow. So SPAC Attack is starting here in just a second. As Andrew Weiss said, fantastic show today. Archer Aviation, we discussed them yesterday. They announced the merger with the ticker is ACIC. We've got the co-founder on. He's joining us in like 12 or 13 minutes or so. And we're going to talk all about that deal, why they went the SPAC route, what they're trying to do. They have this master plan, and we're going to talk about their master plan and what that entails. We've got questions. I know you've got questions. So that'll be in about 11:15 or so. It really depends how long it takes Chris to get through his headlines. Speaking of Chris, he will be with us shortly. I know he just had a computer malfunction, so he'll be back whenever he gets his the hamsters running in the wheel again. I think he has to feed them or something. I'm not really sure. In the meantime, if it hasn't been said for a while, hit that like button, hit that subscribe, and I'm going to put the link to the next Benzinga Bootcamp again in the chat for you all to see that. Again, it is free. It is February 20th. It is SPACs and options focused. This is SPAC Attack, so I would imagine most of you are interested in that. There, I'll put it in all the chats so you all can see. There we go. Okay. That's it. I am going to. There he is. Actually, I was about to step away and go feed Chris his hamsters for him, but he's here. Chris Kachi, SPAC Attack. Let's do this thing right about now. Chris, how we doing?
What's up, Spencer? How we doing today?
Did you get your computer all fixed? So the hamsters are all fed?
We're all good. We're all good. Ready to roll.
All right, let's roll into some headlines. Let's do it.
All right, guys. So up first, we have one of those charging infrastructure SPACs that we've talked so much about. So ticker CLII. This is the company taking EVgo public. They expanded their relationship with Tesla. So they're going to deploy 400 integrated Tesla connectors to their existing EVgo stations and add 200 connectors for new stations that are planned in 2021. So if you watched the show before, this is something I talked about that sets CLII apart. So they have existing deals in place with General Motors and Nissan to expand their networks, but they also have that charging network already integrated with Tesla connectors. So they're able to capture those Tesla customers. That's something I talked about before. That's something I wrote about before. So no surprise today with that news release out, as they before had said that they were going to expand those connectors to help Tesla customers, but shares were up this morning on that news. And up next, we have Hyliion, so HYLN. They reported earnings on February 23rd. So I am long shares of HYLN still. The story that I said for this company, it's not about the financials, right? It's about the orders, that backlog, some color on the new comments from Biden, and the new electrification of government fleet vehicles. And then also about that new semi from them, right? So they're not only working on electrifying existing vehicles, but they're working on launching their own electric semi. And that's really the story here. And one thing I said before on the show was that they actually tweeted out not too long ago, big thank you to all our staff that worked around the clock working on this prototype. So to me, prototype means the semi. So could we get some sort of hint of this new vehicle, with that earnings report? I think it's possible. Otherwise, I think it's coming up soon. So keep an eye out for HYLN going into those earnings. And up next, we have Supernova. So current SPAC from Supernova is SPNV. That company announced that they are launching a second SPAC. So what we've come to find out is that a lot of times when these second SPACs or third SPACs get announced, it could mean that the first SPAC is closing in on a deal. Obviously no one has an endless supply of time or money to constantly be doing these SPAC deals. So a lot of times it's about the timing there. So keep an eye out, on Supernova here. as we could see a deal announcement soon. And remember that Supernova is Spencer Raskoff, the founder and former CEO of Zillow, also co-founder of Hotwire. So a big name attached to this SPAC. So keep an eye on that one. And then we have movers from yesterday. So 4 deal announcements yesterday. So all of those shares traded up on the day, which is something we haven't seen in a little while, as normally we get a couple that end up trading flat or down because of those built-in premiums and investors not being as excited about the target announcement. So yesterday, CMLF closed the day up 42%, ACIC up 20%, FGNA up 5%, and FRX up 8%. That was the movers from yesterday. And then I want to dive in, before we get to our interview today, I want to dive into one of those deals from yesterday. So I said I would try to provide more information. Again, we had 4 deals announced yesterday, so a lot to cover. So I want FRX. This is a SPAC that I own. I commonly refer to it as the Shaq SPAC, right? Because Shaquille O'Neal is attached to it. But it also includes 3 former executives from Walt Disney, which is the reason why I bought shares, before this deal announcement took place. So they announced that they're acquiring Beachbody and MYX Fitness. So they're going to target that growing demand for at-home and connected fitness, which during the pandemic obviously has seen significant growth, but I think it's going to be here to stay. And, I think I was a little surprised that investors didn't have as much of a positive reaction to this one, as we've seen with some of these deals. So to me, it's all about combining those brands. So they combined Beachbody, which already has over 2 million paid digital subscribers, so 2.6 million subscribers. And then they, have brands like P90X, Insanity, and 21 Day. They're going to combine that with a fitness bike, right? So MyX Fitness, a Peloton rival, where they can now try to cross-sell, right, to their customers. And they can expand on this ecosystem of at-home and connected fitness. That's what I like about this one. They've also been around, for decades. So they have a huge library of content. So the Beachbody brand has over 180 million views annually across that library. They also acquired sports nutrition brand Ladder in 2020. Ladder was founded by LeBron James and Arnold Schwarzenegger. So here you have, connected fitness, Beachbody, sports nutrition, LeBron James, Arnold Schwarzenegger, and MyX Fitness, at-home connected bike that can rival Peloton. To me, that's a winning combination. That MyX bike retails for $1,299. So obviously it's lower price than Peloton. They started selling it last year and they sold over 27,000 units. And again, that was as a small private company. They had an average of 15 workouts per month from their customers. They also have a plus version that comes with a set of dumbbells, a kettlebell, a resistance band, and 2 mats. So sales were $30 million last year. They see that raising to $100 million this next fiscal year. So, again, it's 3 mega trends across the fitness sector. That macro tailwind of at-home fitness being favored during and after the pandemic. Health and wellness industry is worth $1.5 trillion annually. So $10 billion in annual spending is expected to leave the gym sector, which means it could go to at-home fitness. Online fitness was only $6 billion in 2019. It's expected to grow to $59 billion in 2027. So MyX is the key story here, for this SPAC going forward. They see revenue hitting $1.1 billion in fiscal 2021, $1.5 billion in fiscal 2022, and $3.3 billion in fiscal 2025. And they want to take digital subscribers, from that 2.6 million. They see it growing to 3.7 million in fiscal 2021 and all the way up to 10.9 million by 2025. And I think, again, you have these 3 former Disney executives who have a history with direct to consumer. They have a history with acquisitions with Marvel, Pixar, Capital Cities, and ABC. They also worked for ESPN and grew, ESPN into a digital media network. Kevin Meyer, who's going to join the board of directors, he worked at ESPN. He also was the president of TikTok, right? So he knows how to grow social media presence. MyX Fitness is going to be, in my opinion, the next emerging brand. Beachbody is going to, grow that ecosystem with that built-in subscriber base. And you add in Shaquille O'Neal, who's going to promote the heck out of this brand now that, this is his SPAC getting this done. I still own my FRX shares, and, I really like this deal going forward. So that's it for headlines and those deals. Turning to our calendar, we have SPE voting on their merger with ChargePoint. That vote is set for today. I still own my shares of SPE. And then tomorrow we have LGVW voting on their merger with Butterfly Network. LGVW, of course, backed by Bill Gates and Bailey Gifford, and also has been added to the ARC funds with Kathy Wood. So keep an eye out for that LGVW vote. That's it for today, Spencer.
And just real quick on those, Chris, any expectation of any unusual voting, or are these expected to go through?
So SPE, the alert that I have seen is that they expected to go through, but they actually right now have not gotten enough votes. So this was a problem that we saw like with LCA, GNO, was that it passed, but it did not get enough yes votes. So that's important. So guys, if you own shares of SPE, make sure you did vote or you are going to vote, because they need a certain percent to get this deal through. If the deal does not go through, these shares could get cashed in at net asset value, which is $10 and change instead of the, almost $40 it trades at. So definitely important that everyone votes on SPAC deals.
Yeah, that's a good PSA, right?
Absolutely. Sometimes people, you own the SPACs and you want to hold through that merger, or you sell before the merger. It keeps track of a certain date. Some people may not even own the shares and they're allowed to vote technically. So it's important though that everyone who owns shares goes and votes for the deal, or you have the potential to get your profits here wiped out. So
yeah, great point. All right, let's move on to our next segment, our guest segment. I want to bring on today's guest now, Adam Goldstein. He's the co-founder of Archer Aviation. If it sounds familiar, it should. We talked about this literally 24 hours ago. You shouldn't have forgotten by now. They're merging with Atlas Crest Investment, tickers ACIC. I'm going to bring him on now. Adam, good morning. Welcome to SPAC Attack.
Hey, good morning. Good to be on the show.
Thanks for coming on with us. So let's just start with the same question we ask everyone that are most companies that come on our show is why go the SPAC route?
Yeah, I think it's a really great question. And if I just take a step back here for a second, just to sort of kind of set the stage. So we are designing and developing electric vertical takeoff and landing aircraft. And these are vehicles that are designed for urban air mobility. And so you get this big step change in technology when you take these vehicles and you go electric. So I just want to kind of set the stage and help you understand and frame what's happening here. So there's no actual new science breakthrough that we're waiting for. There's no regulatory changes that we're waiting for. It's actually a fairly simple story, right? You have these vehicles called helicopters, which everybody knows are very expensive, very loud, and in some cases can be dangerous. They're not as safe as they necessarily could be. And so when you go electric, you get this huge advantage here, where the big advantage is batteries are now dense enough to put these into vehicles, and you can take these motors and rotors and shrink them way down. So electric motors scale down efficiently instead of these big combustion engines that don't scale down efficiently. And when you do that, you have these really redundant vehicles. So a helicopter will have something like 200 to 300 critical parts. That means if any of those parts fail, you can have a catastrophic incident. So that's why helicopters can be dangerous. And so with electric, you get 0 single points of failure in these vehicles, 0. So they're super redundant, super safe vehicles. The second thing happens when you can shrink the rotors and the motors down, you also can change the noise profile. So you're not having that deep whop whop sound like a helicopter generates. That's hugely important. So if you think that the helicopter industry, the vertical takeoff landing industry was to scale, it's really challenging just because they're super loud vehicles. So even if it wasn't expensive, people did want to take them and they were safe, you still can't do it because of noise issues. So now when you go electric, you also get the noise benefit here too. You can do a lot of things to change the shape of those rotors and motors to help make the sound significantly quieter. And then because they're electric, you can also utilize these vehicles really heavily. And so you can bring the cost down to something significant. Now, in order to do all that, big hardware projects, and you're seeing it across kind of a lot of these different hardware companies, it's obviously very capital intensive to do that. And so we think it'll take somewhere between $600 and $700 million to get to market. $600, $700 million to be able to build out this company, get to free cash flow break even. So what a typical startup or venture-backed company would do is they go and they raise 50 million, then 100 million, then 200 million, then 300 million. But this amazing thing happened where the world recognized, wow, it's a really important time right now to be focused on these EV companies, to be focused on decarbonization. And that, wow, the future is moving towards electrification of transport. And so I feel incredibly lucky that the market has recognized that. And so what we were able to do with this SPAC transaction, and directly answering your question, is raise all the capital we need to get to market in one swoop. And that is incredible. It's great for our investors. It allows us to be able to focus on actually building the industry and not just capital raising all the time. So a huge advantage for the EV companies, and I think will help really bring the electrification of transportation, not just in the air, but into all forms of transportation.
Perfect. So I want to back up a little bit too. And I know you're a co-founder, co-CEO of this company. Can you give us a little bit of background on your history in the space and some of the other members of the management team?
Yeah, absolutely. So my business partner and I, Brett, have been working together for a long time, over 10 years. We're best friends, we're business partners, we vacation together, we're basically family at this point. And so Brett and I have built, I don't know, maybe a dozen companies together, mostly in the software space. And so we're entrepreneurs and problem solvers. We like going out and tackling really big problems. Our last business was a software company based in New York. It was called Vettering. Awesome mission-driven company. We scaled up hundreds of people and ultimately sold that company to a large European company. And then after that, we immediately started building airplanes together. And so we have this big view, this big vision on electrification of transport. Brett and I are very big Elon Musk enthusiasts. We believe in what he's doing is really helpful in pushing the world towards this sustainable form of transportation. So we're investors in Tesla, we're investors in SpaceX. We love the whole industry. And so one of the things we did was we went down to the University of Florida, where both of us went to school, and we donated a bunch of money to the school, and we built an eVTOL lab, so an electric vertical takeoff and landing lab, where it was used to be studied the space. And I think it's really important that we help do our part in pushing these, in pushing this industry, as quickly as possible. At the same time, we've been following, there was a group that started the industry about 10 years ago. So Larry Page basically invents the industry 10 years ago with a company that was originally called Z Aero. You might know it now called Whisk. Whisk is the name that they took after they did the big joint venture with Boeing. So Larry Page spent, I don't know, it's not publicly disclosed, I'm guessing maybe something like $1 billion of capital over 10 years, building 5 full-scale aircraft and dozens of those aircraft. The latest one is called Cora. That's the one you can see on the Whisk.aero website. Incredible group with incredible technology. Now, a lot of the folks from Archer came from Whisk. So Tom Muniz, our head of engineering, ran engineering at Whisk. Jeff Bauer was an early employee at Whisk as well, but he left around 5 years ago or so to go run Airbus's program called Airbus Vahana. And so he was the chief engineer there. So Jeff and Tom came back together. And then when those guys came together, it was this huge moment in eVTOL industry. The two leaders of two of the biggest projects out there, Whisk and Airbus, got together to come, and a lot of engineers followed them, and a lot of engineers wanted to come over and work with them again. These are two of the most technically competent people, the longest standing people that have been working on this industry. And so this is the 6th aircraft that they're building, 6th full-scale aircraft. So it's not a question to us of whether the technology works. You can literally just go to Whisk website, or go on YouTube and type in Airbus Vahana, or same thing with Joby. You can see these vehicles work. And so now you're at the point where you need to get to certification. And so what Archer did was Archer designed a vehicle that was designed from day one alongside the regulators. We said, okay, let's build a vehicle that can get the performance needed for urban air mobility, which we think is 60 miles at the end of battery life, which also includes reserves. How do you build that vehicle as simple as possible so it can get certified and also be mass manufactured? And then we said, okay, great. Now we have the design that makes sense. This is the design that Tom and Jeff think is the winning design in the industry. We went and said, okay, we're going to need to think about mass manufacturing, right? From the very beginning. We don't want to just build 100 of these vehicles. We want to think long-term, 20, 30, 50 years. How do you build lots of these vehicles? And so we partnered with Stellantis. Stellantis is the merger between Fiat Chrysler and Peugeot. And so they have been working on mass manufacturing for obviously a very long time. They have the competencies in robotic automation and thinking through how do you take something from a concept all the way through production. And then the second stage, what we did is we said, okay, what about on the certification, operations, maintenance side, like the real business side of things? Who would be the absolute best partner who also really cares about decarbonization? And that was United Airlines. And so we had this really culmination of two groups that wants to bring this industry to market as quickly as possible. They can reduce our timeline. They provide financial support. They help also provide a lot of, I think, really consumer confidence, right? Because we'll need consumer adoption. And so again, all we're really doing here is seeing this replacement cycle of helicopters happen to way safer, way cheaper, way quieter vehicles. And then the TAM will expand. The total addressable market will expand. And the reason why it will expand, so like I'll ask you, Chris, when's the last time you've taken a helicopter?
A long time ago.
You'll tell me once or never. That's what everyone says, right? And so everyone says, yeah, one time, or I don't know, a long time ago.
One time.
So exactly, it's very, very common. Or everyone says, yeah, on my honeymoon in Hawaii or something like that. So if it was $50 to go from Manhattan to JFK, right? Instead of sitting 90 minutes in traffic and it was safe, would you consider that? And I think the answer to most people is, of course, if I can fly to the airport in 5 minutes instead of sitting in traffic for 90 minutes, yeah, that sounds interesting. So if you replace helicopters, right, which is there's 10 to 15,000 in the US or something like 40,000 worldwide. That's think about 40,000 times $5 million, huge market. You got to replace all those with these new, safer, quieter, cheaper vehicles. And then guys like you, Chris, that's what we're saying. Hey, here's a vehicle that may have a large airline brand on the side of it that makes you feel comfortable, that has been certified by the FAA, by the way, certified at the same level of a commercial airliner, which is 10 to the -9, which means there won't be an incident 1 in a billion flight hours. And would you take it? And I think my guess is you will, and the market will expand. Now, one last comment here, timeline. So if you look at the numbers we put out there, a lot of people step back and say, when are there going to be thousands of these vehicles flying overhead? That's really scary. Well, if you look at the numbers we put out there, our 2026 number from vehicle production is 500 vehicles. It's not that crazy. Yes, it's about $2 billion in revenue. And if you look at our later half of the decade numbers, you'll see we get up to, 800, 1,000 vehicles. Those are the types of numbers that aerospace companies build all the time right now. This is not crazy. We have to first go through and replace all the helicopters in the United States and in the world, and then expand the TAM, expand the total addressable market to new folks. And so I think it really will bring in folks, but you're not going to see thousands of vehicles flying overhead like in this decade. That's not going to happen. But that could happen, 2030, 2040, 2050. And that's where we're all working towards. But you can still build huge businesses all along the way. $10 billion run rate businesses, in this decade along the way, just by taking out fractions or, double-digit percentages out of the helicopter market.
Adam, I got to say, as you respond to some of these questions, you knock out more and more of the questions I have with some of these answers. So, great responses here, getting a lot of information. So I know you talked about being built with that FAA certification in mind from the start. That was a big highlight for me from the presentation. I guess I would ask then, with that aside, what are the biggest hurdles standing in Archer's way right now?
Yeah, good question. So historically, if you would have asked me that, my answer would have been capital. How are we going to raise $1 billion of capital? Man, that's hard. That's a slog. That's a lot of stuff. Now, with the focus of the world on EVs, that risk is taken off the table. And so the new kind of focus moves to two things. It's always really been around certification and manufacturing, but now it's 2 instead of 3, meaning capital is no longer. Now it's cert and manufacturing. So the vehicle is designed day one with cert in mind. I think there's a really awesome video, Chris. I'll send it to you after the show. There's a very senior person at the FAA named Jay Merkel, and he gets on C-SPAN 3. I'm not sure if you watched C-SPAN 3, Chris. Maybe you missed it. But Jay Merkel got on, it was about 6 months ago, and he said, number one question I get asked, is this real? Is this happening? And he says, yes, this is more than just promotional marketing videos. We have at least 6 companies that are 6 vehicles that are well along their way in type certification. This is not just something that we're just talking about. We are working on the operations. We are working on how to integrate these vehicles into the airspace. And so the FAA is very far along in doing this. This is not like some surprise, there's vehicles. We're literally like shouting at rooftops, it's happening, guys, it's happening, right? And it's just more of like understanding when these vehicles will get the adoption as soon as we get through certification. Now, the next big challenge is mass manufacturing, right? So if you look at today, Boeing, for example, will produce something like 1,000 vehicles. And you go down kind of to the smaller, companies, the smaller aircraft companies like a Piper or a Cessna or like a Cirrus Vision Jet, right? They're producing hundreds of vehicles. So we know that's possible. We know we can do that. Now the question is, how do we build 5,000, 10,000, 20,000 vehicles per year? Now, if you look at our financial estimates in our deck, you can see we do not project we are going to be doing that 10,000, 20,000, 50,000 in our financial numbers. But we're certainly working on it. We're certainly trying to figure out how to do mass manufacturing. That is a really big one. And we haven't really mass manufactured aircraft since World War II. And so I don't think that it's not possible to do it. I think there hasn't been demand for it before to do it. And that's why it hasn't happened. But now with electric, you have these vehicles that are safe, quiet, and less expensive. I think the demand is going to be huge. So now it's turning that back on. So, it's not like we're out there saying we're going to produce 500,000 vehicles. What took Tesla 18 years to do, we're going to do it in 3, like some of these EV companies are doing. We're not doing that. We're saying we're going to produce 500 vehicles by 2026. That is a feat that I think is possible. So manufacturing, first, we'll call at the traditional aerospace level is what we're focused on today, while at the same time in parallel, working with a group like Stellantis to think about mass manufacturing. How do we set up a factory to be able to produce 5,000, 10,000, 20,000? That's the focus. That's a big challenge. That's what takes us to build this next $1 trillion industry, $3 trillion industry, as Morgan Stanley states. So one last comment here too. It is my view that very few companies will reach escape velocity, right? You need to raise a lot of capital. There's a lot of technical expertise. And then ultimately you have to execute on building these vehicles. So our team, which has the deepest technical knowledge out of any other group in the industry, I think has the ability to get there. I'm not sure that's true for a lot of the new companies that will come on, but I feel very confident we will reach that escape velocity and get there. We have the capital, we've got the team, we've got the partners, and now it's up to us to execute.
Perfect. So the other big news that dropped yesterday, along with the SPAC merger announcement, was the partnership with United. So United invested in the PIPE. They also committed to buying $1 billion worth of aircraft from Archer and a possible order of 500 million additional. Can you talk a little bit about United, that partnership, and how this agreement came to be and what the timeline of that looks like?
Yeah, absolutely. So last year, United Airlines made a pledge to make a significant impact on the environment they want to embrace emerging technologies. And so the company recognizes the positive impact that urban air mobility can have on the environment. And so that vision that Scott Kirby at United has aligns perfectly with the vision that Archer has. And so United ordered aircraft, but it wasn't just an order, it was a partnership. And so this partnership was really designed around how do we help bring this future to a reality as quick as possible. And so we are aligned in that they're helping us get to market. They're helping us with things like certification. They're helping us with things like maintenance and operations. Think about it, right? So we're not just an R&D shop building cool technology. We have to think about things like, how do you maintenance a battery on a plane, right? Guess who's done that before? 787s, 737s, they have lithium-ion batteries today on vehicles. They've been maintaining those vehicles for a long time. They have very good clarity in terms of how to operate vehicles in the airspace, on the ground, and how to attract customers and how to do all this safely. And so it's a huge partnership for us in terms of thinking about getting to market quickly. I think it's also a big boost of confidence to early adopters of the product, to the mass adopters of the product eventually, that, hey, United Airlines thinks Archer is the company that can build safe vehicles, that can get to market the quickest, that'll be certified first. that may be a vehicle that I want to get onto. And so, Chris, I'm hopeful that when these vehicles are offered at $50 and we can take you from JFK to Manhattan, you'll be one of the first ones online there. And hopefully partnerships like United and future ones that we'll work on will attract you to, to taking these vehicles. And you won't just say, yeah, I did it once a long time ago, I don't really remember. You'll say, oh yeah, I did it last week. Oh yeah, I was in Manhattan and I wanted to go out to Connecticut and go to Colony Pizza. And, because I love that place, it's great. And then come right back. And by the way, I can do that on a Tuesday and still get home and see the kids, no problem. And it costs me the same as an Uber. That's a pretty cool thing. That's the future I want to live in.
Yeah, definitely. You let me know. Yeah, I will be more than happy to come share a ride in one of these, great vehicles that you have coming. One of the questions we got in the chat was on that United deal. So the question is, are those orders or is this, just a pending deal, going forward?
Yeah, so it's a great question. So we've signed a definitive agreement. It's a purchase order, but we obviously have to deliver aircraft that have certain performance capabilities. So like, for example, if we delivered an aircraft that only went 5 miles, it doesn't have a lot of use to them. And so United went out and diligenced the whole industry. They looked at everybody. There's a bunch of wingless groups out there. So folks that are building wingless planes, there are folks that are building, different types of vehicles. And what was really important to them was we have to pick the winner, right? And so we can't pick the number 2, number 3. We can't get this wrong, right? We need to bring, the decarbonization effort to the air as fast as possible. It's a big part of Scott Kirby's mission. And so it was important that we have that. And so we said, let's structure the contract to make sure that you feel comfortable that we'll do that. And so we put in there the ability, for us to have to meet certain performance metrics. Now, this is the 6th plane that our team has built. And so if you look back at history from Tom Muniz and Jeff Bauer, the chief engineer and our head of VP of engineering, we feel highly confident we can deliver that. That's something we're very willing, to take a bet on. And so, there's other things that we need to think through as partners, right? So United made also, an investment in the company. And when doing that too, we talked about things like, geography, right? So we're going to deliver planes to you, and Archer wants to operate planes too. We're going to do that together. So how do we think about like kind of carving up, the world, right? So again, it's only 200 planes. We're not talking about, think about that in context of helicopters or 10, 15,000 helicopters, like just in the US, right? So it's a small percentage of the world of the country that we're talking about. But we want to operate, we think can launch a business and be more productive together than separate. And so our thought was, okay, there's a bunch of details like that, geographic restrictions that will work out as partners along the way.
Perfect. So I know we've got more questions flying in the chat. I want to get through a couple more I have here, but the chat is going crazy right now for Archer. They love you, Adam. They want to know more and more about this company. So let's try to fly through some more questions. So, you talk about that kind of Uber for Air model as one of the 2 business segments. My question is, so if I want to book an Uber, I go on the app, I, pick the city I want to go to, the place and everything. Is that something Archer will control? Will you have the technology and the infrastructure for the ride share, or will you look to partner with a company on that?
Yeah, that's a really great question. So Archer will definitely build the consumer facing experience, right? My background is in software too. I'm excited for that part of the business. I think we can do a great job creating an awesome brand that attracts really great, folks to the platform. I do think there is also the ability to partner with other great folks. So meaning like take an Uber or a Lyft or some of these other rideshare or multimodal kind of groups. They want, it's part of the chain. So if you think about, if you're going to book a ride, if you're going to book a flight to go from, let's say, JFK to LAX, right? And so you think about that full trip. Right. So what you'll likely do is you'll book that trip, but then there's also 2 other legs of that trip, which is, taking your, as an example, Waymo, you're taking your Waymo, taxi to the vertiport. You're taking the Archer aircraft from the vertiport to JFK, and then you take, the United, plane from United to LAX. Right. So if you think about like the multimodal group, I think there's a lot of groups that have already like reached out and indicated they wanted to work with us. So Waymo is a really interesting one that, I bring that up simply because Waymo has a really deep relationship with Stellantis. And so, that would be a group that we would be really interested to work with as a multimodal partner. They're one of the leaders in autonomy out there. And so I think that's like a good, hopefully user journey that you can understand, moving from, booking the entire trip all through one app, by the way. So if you think about like, how do we sort of piece all that together? We're working with different groups right now to try to, solve those issues. But I do think that will start with the Archer consumer experience.
Perfect. So that rideshare business, looking at, dense cities first, you mentioned New York City. How many cities are we looking at to start? And how many of these, highly populated cities do you see in the future in Archer?
Yeah, so we use New York as an example because a lot of people have taken that, New York to, JFK to Manhattan taxi, which is, I think like it's a killer, right? It's only 17 miles and takes you 90 minutes. I lived in New York for 20 years. I've missed flights planning for 90 minutes to go 17 miles. That's a good example, but New York is very real estate constrained. So it's not likely the first city that we'd launch into, although it is a very big helicopter city. If you look at cities like LA, Miami, Orlando, Dallas, those cities are very pro urban air mobility. They want this technology to happen. Those cities want to be technology leaders. They also have a decent amount of existing infrastructure. So take LA, over 200 helipads, 12 underutilized airports, and then you can also build retrofitted, parking structures into landing areas, right? So these vehicles weigh 6,000 pounds and they create minimal downwash, which means the air being blown down when these vehicles take off and land. It won't damage the infrastructure. And so you can actually put these vertiports in a lot of different places, but LA would be a really good typical city. We've been talking to the city, and then several other these cities too. We will likely start with some of these core cities. It's obviously easier, to start in a city like LA that has great weather all year round. But the vehicles are certainly built for all weather capabilities. This is a global thing though. This isn't just a thing that will, happen in just a few cities. This is a concept that really will be everywhere. A lot of the investors in our PIPE process are global investors, strategic global investors that have interests in bringing these capabilities to their countries. And so this is a movement, to take mankind and move them into the air. This is not just about reducing traffic from JFK to Manhattan. That's the good obvious example. But what about living in LA and going out to Palm Springs, for lunch, or probably to start, I'll call it Riverside, right? Something that's a little bit closer. It's a little further of a trip. Probably in 5 years, batteries will be good enough to do the full LA to Palm Springs trip. But how about being in LA and just going to Malibu for dinner and back and not fighting traffic, right? Or just, I live in the Bay Area and I want to go, we do a lot of biking here. I want to go out to the Santa Cruz Mountains. Instead of, going out there, how about just flying out there, right? It's really about reconnecting, with the earth, with these trips that would typically be, saved for vacations or holidays or weekends. You can now do them on an everyday basis, right? That's what makes us super excited long-term, the vision here around this. People are just stuck in traffic and they don't want to be. It's not that when transportation has improved, it's not that people necessarily traveled longer. It's that they just traveled further. There's only so much tolerance people will sit in a car for. This allows you to really start expanding and really kind of getting back out there, which is what makes us so exciting. And by the way, which is why we think the market will ultimately be so big for this.
Perfect. So I'll say, as you were talking about cities, the chat was letting us know what they want you to come to, because I think everyone wants you to come to, the cities that they live in so they can get a ride on this. So lots of excitement. I have one more question before we get to chat questions again. The chat is going crazy and just wants to know everything about Archer. What's the timeline on the prototype? I see in the presentation 2021. I know you can't give me a date, any sort of hint of what quarter or when we could get the unveiling of this vehicle.
Yeah, absolutely. And it's not a secret, by the way. So the vehicle is in its final assembly in our lab right now. So, we could gladly have you over and come see the vehicle. We will do the unveiling as soon as the transaction is complete and we are able to do, marketing again. So that's targeted in May, where we'll go out there and we will hold a big media event, a Tesla Cybertruck style event. we actually hired the person that runs that ran the Tesla Cybertruck event. We thought that event was awesome, really, really cool. We want to do a big event and have people come sit in the vehicle, see the vehicle. And then, afterwards, ultimately, we'll do all the flight tests for everyone to see. We are going to be a very transparent company. We have a lot of confidence in our technology. We're going to show it off to everyone. We are not, our belief is that our lead in the industry will be determined by our pace of innovation, right? And so we're not the group that's trying to necessarily like block everybody out by patenting every single little thing. What wins is the pace of innovation, right? It's why Tesla has done so well. It's why Elon keeps winning. He just keeps innovating. That he unveils one product and that we all go crazy over, but that product has been in the works for years. There's another product that's already been in the works now that we're going to be blown away with, years from now. That's our view of this, right? So we want to show off the products that we have. We're very confident in the technology. And so we will show that off here as soon as this transaction is closed. We will put it out there publicly.
Awesome. So I'm going to turn it back to Spencer. It looks like we've got lots of chat questions to get to.
Yeah.
So let's try to knock as many of those down as we can before we let you go, Adam.
Yeah, quickly, because we've had Adam on for a half hour, and this is great, but I don't want to take up too much of his time. All right. Well, let's start with this. Do you plan to get a lot of questions about first responders? Do you plan to sell these vehicles to first responders?
Yeah, that's a really important one. And so the answer to that is yes. So, the DoD is actually a really interesting group, and I think an important one in the development of this technology, not for kinetic use cases, for non-kinetic use cases, meaning for, think about things like golden hour vehicles that can be built that can help, save a soldier's life. If you get something like a dramatic increase in odds that you can save a soldier's life, if you can remove them from harm's way within an hour. Really important use case. Things like rescue vehicles, right? Really important vehicles. So, if you look at a lot of helicopters, I live, near like the Stanford, hospital, and I hear the helicopters flying over, right? First of all, with these vehicles, you wouldn't hear them. It wouldn't be disruptive, but every hospital that has a helicopter, certainly this would be a great use case for them. And so I think emergency services is a really great use case for it. Something we're definitely very excited about. My guess is that the DoD will actually help facilitate that. And in the sense that the DoD wants the next great aerospace company to be built right here in America. And they're being very helpful, really helpful. They're providing, guidance, flight test, kind of whatever resources they can to help not just Archer, the whole community, which I think is really important. And so it's really geared around that. So if you think about, some of these bigger helicopters, a bigger helicopter can cost you on upwards of $5,000 to $10,000 per hour to operate, right? So super expensive. These vehicles, electric vehicles, will certainly not cost that. And so I think there's a big use case here. Emergency services, disaster relief, golden hour vehicles, even supply chain logistics. So we've talked to some groups about things like dropping in like firefighting equipment, like bringing things like that quickly to folks. Where again, helicopters are very expensive, hard to maintain. What if you had a fleet of these vehicles that could bring equipment like that to disasters really fast, right? It's now much more affordable to do that. It's not like a helicopter is reserved for the rich anymore. This is now can be available to the masses as these vehicles are just much less expensive.
Yep. And then also a bunch of questions about safety, as I'm sure you would expect. So one question: how many of the 12 motors can fail and still allow for a safe landing?
So we can lose 2 of our rotors. So how about this? There's 12 rotors, 6 on the leading edge, 6 on the trailing edge. Okay. We have 6 independent battery packs where we can lose 2 for sure. 2 rotors can go for sure. And then different combinations we can also lose where the vehicle can fly safely. So based on those combinations, you can lose 3, rotors, potentially even 4. And so the vehicle is also, built with a big wing. It is designed to glide down and land, conventionally. So you do get the benefits there. Like a helicopter just has to try to auto rotate, right? And so they can't glide down. And so, we have 0 critical parts in these aircraft. So if you lost, so think about this, 6 independent battery packs, 12 rotors. Let's say you had a bird strike, we lost a rotor, the passengers wouldn't even know. Like it would fly totally. Let's say flock of birds, you lost multiple rotors, right? Which by the way, the propellers are designed for bird strike, right? So the odds of you losing them are still pretty low. And so, but let's say it did happen, right? You can lose multiple rotors. You can lose battery pack because they're independent battery packs. And then worst case, you can always glide. Now, we don't get benefit in the certification process that you can glide from the wing. So you still have that. That doesn't go into the one, certified to 1 in a billion, that 10 to the -9 level. But just to give you a sense, think about like a helicopter, which just has these hundreds of critical parts.
And then the last one here is really like, who is flying these, and what are the requirements, the certifications that you need to operate one of these vehicles?
Yeah, so we'll certify under typical airplane, type certification levels. But the vehicles will be flown by pilots. But this is actually an interesting conversation here. So it's one of the reasons that United actually was very interested. So United wants to help increase their funnel for new pilots. They also want to add diversity to the pilots that they bring in too. Right now, the main source of pilots is the military, right? And you kind of get what you get. You can't really influence the funnel. And so this is actually an attractive new area for them, an attractive new airplane that will be able to attract new pilots to the industry. For one, you can sleep in your own bed at night. You're not taking a plane, flying, and 4 days a week you're on the road, right? These are local vehicles, so we'll be able to do that. They will be fairly simple vehicles to fly, and they will be vehicles that will also, the hours that you get flying these vehicles will count towards the hours that you need to fly the larger aircraft, where you can make more money as a pilot as your career progresses. So there's actually really nice synergies here for the airlines to operate these vehicles as it relates to tactical issues that they're trying to solve too. It's not just about, there obviously is the large area of urban air mobility, huge new sector. You also get decarbonization. You also get tactical things like defrictionizing travel for United's passengers. And then you also get some of these other tactical things like solving their pilot issues, right? So really multiple layered benefits, but it is not going to require some crazy special thing that no one has to do. It's actually a fairly simple airplane to fly that I think people would enjoy flying. And so we're excited about that.
Adam Goldstein has been on with us. He's the co-founder of Archer. They're merging with Atlas Crest. The ticker is ACIC. Adam, you gave some extremely detailed answers. Thanks so much for the time. We kept you a very long time, but it was well worth it. Thank you very much. We appreciate it. We'll be in touch. We're going to keep following the story, and we'll have you on again.
Thank you so much.
Adam. Look forward to checking out that vehicle from you.
Absolutely. All right. Thanks, guys. Appreciate it.
Thanks a lot. All right, Chris, I'm going to defer to you. You can be ahead of me in line. How about that? Okay. I've never flown in a helicopter before. So I'll let you do that, and then I'll do that after you. How about that?
Absolutely. I think this is a real exciting field.
Yeah.
There's several players in this market, including a couple SPACs now, but I'm excited, and I think it could be the future of getting people point A to point B in some of these high densely populated cities. So Spencer, before we get to ticker time, I just have a couple housekeeping items here.
Sure.
So I want to give a plug to our upcoming boot camp. This is going to be a Saturday boot camp, and we'll be covering SPACs and options at this boot camp. So myself and Mitch will both be attending the boot camp. We'll be leading a couple panels. And anyone who's watched the show before, we have a couple guests from prior episodes joining us. So we have Julian Klamachko from Accelerate Funds, of course, that runs a SPAC ETF in Canada, joining us for a panel talking, units, common stock, and warrants. And then we have Niccolo Damasi from DMY Technology, the company that took Rush Street Interactive public, is working on Genius Sports and has a third SPAC out as well. So I dropped that link in the chat. Be sure to sign up. And then also reminder, smash the like. We had over 1,000 people watching this exclusive interview here. Again, we bring you the CEOs. We ask the questions from the chat. The show's all about you guys. And then before we get to ticker time, I want to do an update. I dropped the ball yesterday, but today I have information on that SPAC that stumped Chrisopedia. So NHIC was the ticker was brought up. This is New Hold Investment Corporation. So they raised over $170 million. They're targeting a company around $500 million in what they call Industry 4.0. So some sectors that they list are robotics, precision manufacturing, and the smart city / smart home growing industry. So the SPAC is led by Kevin Charlton. He was part of Hennessy Capital, which has done several SPAC deals, including bringing Bluebird electric bus company public, and Daseki. He also worked at JP Morgan before, and he has a bachelor's and master's degrees in aerospace and engineering. So, you know, the more I look at this one and did my research now to answer that question from the chat, you know, I like this one. I like their target area. I like that man that's done several deals. So that's what I've got for Stump Chris on SPAC Attack. So
yeah, that was great, Chris. Also, public service announcement. I don't know if we mentioned this enough on our show, but we have a newsletter. Well, we have a lot of newsletters, but we have a SPACs newsletter. If you want Chrisopedia in your inbox every single day, there is the link. I just posted it in the chats and across all the platforms. The SPAC in 5 newsletter goes out daily, I believe. Yeah, pretty sure it's daily. And yeah, it's basically Chris if you don't get enough Chris in your life, you can have Chris in your email as well. All right, let's do some ticker time. Actually, before we get to this, Chris, there was a question earlier from before the interview that I wanted to address. We were talking about voting and why that's important. How do you vote? Let's say you own a SPAC. How do you vote?
So whatever broker you use, when you sign up, you provide an email address. So I typically get my vote requests by email. Sometimes you will also get them in the traditional, you know, mail to your house. But the easiest way is whichever email address you use with your broker, check that email, and you should have the link to go vote on those shares.
All right, I'm pasting again the newsletter link. Didn't go through for there we go. Okay. Ticker time. Let's do GX. Gosh. Know that one. GX acquisition. Do you know it, Chris?
I do. So this is Cellularity is the acquisition target. This is a bio one, which again, bio is just not my wheelhouse. You know, maybe that's something to ask on Biotech Buzz, our 2:30 show here on Benzinga. You know, for me, yeah, biotech, I'm not an expert. So, you know, I don't like giving answers when, you know, I don't know them.
Okay. We appreciate your honesty, Chris. Thank you very much. Taka, TACA. You know that one?
Yeah. So, Trapont acquisition, you know, technology, former CEO of Vodafone. That's about all I know about this one. It hasn't gotten a lot of buzz or a lot of attention. It does look like, you know, it's trading in that sweet spot though. So definitely one worth keeping an eye on. You know, trading at 1032 right now because it's, you know, got low risk and you know, potential high upside.
Ajay is asking about EXPC versus ACIC. I guess. Oh, that's a stock. That's an actual. So I guess they're a competitor to ACIC. I don't know if Chris has any thoughts on that. I'm not sure if he would. Sorry. Let's go back to the SPACs here. What about Do you know PUCK? Do you know PUCK?
So PUCK is a brand new one. I believe actually today those shares could price. So this is another sports one. We're going to do a sports show soon where we talk about all these SPACs, you know, kind of covering the sports industry or having former athletes attached to the management team. So that's one I was saving for that show.
Okay.
But the you know, it's got a couple people with experience in media and sports. So my guess is they go after, you know, a sports media company.
All right. Yoan is asking about NSTB. I guess the split with the units happened today.
Yeah, so NSTB, that's another Northern Star acquisition SPAC. This is Jonathan Ledecky and Joanna Coles, targeting, beauty, wellness, e-commerce. That's the same team that did the BarkBox acquisition with STIC, which I own shares in. I love this management team. I think the fact that it's splitting and you can now buy common shares and warrants, I wouldn't be surprised if this one starts trading at a higher premium because of that management team. Remember, guys, you can't buy units on all these brokers. So like your Robinhoods, your Weebles, some of these retail traders don't have access to these SPACs until they split. So that's always a catalyst, especially with a strong management team, that these SPACs could now see strong interest and also get, a premium built in here.
Yeah. Also, I apologize if I butcher anyone's name ever, because names are hard. Okay. Let's do a couple more here. I just had one. AACQ. You know that one?
Yeah, AACQ. I think we talked about on our crypto SPAC show. The former CEO of WorldPay. He's been a fan of crypto, and it looks like maybe they go after, someone in that industry. So no surprise that this one has started trading higher recently with the interest in cryptocurrency and Bitcoin.
All right. I think that's a good place for us to wrap it up, Chris. Do you have any final thoughts for us? Mitch is going to be back tomorrow. That's my understanding. He was moving this week, and I think he just got internet today. So Mitch will be back in the driver's seat tomorrow with Chris. But Chris, it's been a lot of fun stepping in and hanging out with you for an hour this week. And do you have any final SPAC thoughts for us today?
No final SPAC thoughts, but I'd echo that statement, Spencer. It's been great having you on the show. I'm happy we could keep doing it, even with Mitch out. I'm obviously looking forward to having him back, but that's no offense to you.
As am I. None taken. None.
You have been great on the show, and guys, everyone in the chat, how much have we taught Spencer about SPACs this week?
You taught me so much.
He's even remembering some of these tickers thanks to Benzinga Pro, and thanks to you guys asking them. So great job, Spencer, this week. So Spencer, why don't you tell everyone what we've got lined up for the rest of the day? Guys, don't go anywhere. Stay on this channel. You've got more guests coming up across all our shows. We run live every day from 8 a.m. to 4 p.m. Eastern time. Go ahead and smash the like, and I'll catch everyone tomorrow. But yeah, Spencer, tell us what we've got coming up the rest of the day.
We've got the Power Hour coming up. As soon as I'm done talking, they're ready to go. Luke Jacoby, Jason Raznick. Let's read through some of those guests they're going to have on today. Chan Lowe, he's the founder of callsorputs.com. I'm assuming that means he trades options. Then we've got a couple of newer, I guess you can call them influencers. Kayla Colbridge, she is a trader. She is on TikTok as well. Her handle is Girls Talk Stocks. And we've got Chris Josephs. He is the co-founder of Iris Finance. They'll both be on at 1 o'clock with, again, Jason Raznick on the Power Hour. Later in the show, or later in the day, I should say, we're doing our very first, actually, a couple of new things today. We're doing our first, what I'm calling a fireside chat. It's a little bit cliched, but whatever. Doing it with Roundhill Investments. We're going to talk about their new ETF, SUBZ. And it's a streaming ETF, to my knowledge. It is the first such streaming ETF. It just debuted like a couple of days ago. So we're going to talk about that. Actually, it was yesterday. So yeah, we're gonna have that, and then we have our very first crypto show today. Catherine Ross, she's one of our editors here, and Luke Jacoby. That'll be at 3 o'clock, and the fireside chat with Roundhill will be at 2 o'clock. So a lot to get to. Smash that like button. In the meantime, let's go to the Zinger Nation Power Hour.
Bumble. Spencer, I've already been trading this morning.
Do you have any coffee today? No, Luke doesn't need coffee. Luke doesn't drink coffee, right?
I just go, baby.
You just go?
There's been a lot of speculation in the chat as to what I'm on. Diet Coke is the official answer. But Bumble is the stock today that we're going to get to. But Spencer, should we start and play that badass intro?
Can you just refresh my memory? What is the Bumble ticker?
BMBL.
All right. You like the stock, right? You like the stock?
Not that one. I got a trade on a peer play. I think everybody knows what
All
it
right,
is.
screw it. Let's do this intro. Here we go.
Let's get ready to rumble!
Zinger Nation jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. All right. What's up, everybody? Happy Thursday. Already Thursday. We are flying through this week. Welcome to the Power Hour. My name is Luke Jacoby, and I'll be joined by my fabulous co-host, Jason Raznick, shortly here. I'm going to start today off the way that I start every single day, which is the point of the show. The reason why we're spending this hour and a half, sometimes even 2 hours together every single day is because we want this to be the best trade idea resource out there. That's what we're going for, guys. Ideas are going to come from myself. They're going to come from Jason. They're going to come from guests that we have on. And most importantly, they're going to come from Zinger Nation. Zinger Nation, that's all of you out there in the chat. We are in this thing together. This is the most transparent stock trading show you will ever find. Every single day, we're making trades together. We have our live portfolios up. You see the losing days. Had one yesterday. Have another one today. We'll go through it. But again, we want this to be the best trade idea show possible. Smash that like button, guys. Smash that subscribe button. Because we're running all day. But all right, stocks that we are going to talk about today. I sort of teased it. I did put a trade on this morning. I usually like to wait until the show, but this one was timely. I put it on, still have it on. So we'll talk about that one in a minute. Getting over to the live account, we're going to talk about Voyager Digital. We're going to talk about Naked. We're going to talk about PayPal. We're going to talk about Tilray, Inseego, and all the SPAC tickers. Woo! Jason has a new ticker. He's been trying to get to it for like 2 days, and he keeps running out of time. So we're going to get Jason going. He's got a new stock to pitch us. We'll be doing that closer to 1. And then guests today, we're going to be talking options, and specifically we're going to be getting into options trading. We're going to be doing some more high volume stuff, and you know, a little bit more aggressive maybe than we're all used to. But all right, guys, let's go ahead and dig into it. But before we talk stocks, I'm going to get to that trade in just a second here. I've got something new to show you guys. Let me share my screen. I need some help from Zinger Nation here. There we go. Share screen. All right, there we go. All righty. So check this out. Not this that you see right now. Check out this page. We now have, as of literally yesterday, we now have an unusual options activity page on Benzinga. Basically, the purpose of the page is it calls out especially weird options trades, and it does it in a couple of ways. It could be crazy volume on a trade. It could be a trade that's way out of the money, right? So if a stock has earnings the next day and somebody buys a ton of calls that are way out of the money, that will show up on this page. So we're looking for high volume. We're looking for really unusual strike prices, and that's the point of this page. But we're not there yet. We got the first iteration up. This isn't a final product. We want this to be the best options page on the internet. Everything that we do here at Benzinga, we want to be the best, right? That's what we're going for. This show, we like it when you guys are critical, because we want to make this the best stock trading show that you have. That's the approach that we're taking with this options page. So I'm going to go ahead. I'm going to drop this link into the chat here. Let me pull it up. All right, there it is. I dropped the link into the chat. Guys, email powerhour@benzinga.com. I'm typing it in now. Powerhour@benzinga.com with any piece of feedback that you get of anybody who sends it. He sends any feedback. As little as the feedback is, as big as it is, I mean, send it over. Will the page be real time? Yes, it is real time now, actually. send the feedback, and I'm going to pick 3 random winners. 3 random people who tell us here's at least one thing you can do to make this page better. You can get whatever you want from swag.benzinga.com. Again, that's swag.benzinga.com. We want this to be a super, super helpful resource for all you stock and options traders out there by calling out here is some really weird, likely institutional options trading that's going on. So again, brand new page that we have. The link is in the chat. powerhour@benzinga.com is the chat. Tell us how we can make this page better. And I'm going to pick 3 random winners. So there's my first ask. I have 2 more asks, guys, and then we're going to get into the stocks. Ask number 2, iOS developers. We're trying to make a Benzinga Pro mobile app. Benzinga Pro, that is the platform that I use every single day when I'm looking at stocks, options. I'm looking at prices. I'm looking at news. I'm looking at earnings dates, all of that. Right now, I've just been watching this Bumble. They're trying to open the stock all day. But we're trying to turn it into a mobile app, not just desktop. We need a badass mobile developer who loves the stock market. If that's you or that's anybody you know, again, powerhour@benzinga.com. The email address is in the chat. Let us know. And ask number 3, very last ask, and then we're going to get into stocks. Ask number 3. We're aggressively trying to expand our editorial team. We need writers who can cover some topic better than anybody else out there, right? So as an example, if you are a biotech nut, you love the biotech space, you study all these companies, and you want to be the biotech writer for Benzinga, you think you can make the best biotech content out there on the market, we need you. Again, powerhour@benzinga.com. Send that note. I got about 60 people reaching out yesterday. I want to get 60 more because, again, everything that we do, we want it to be the absolute best. I will get back to everybody. I can promise you that. It may take a day, but I promise I will get back to you. And that's it. So, again, options, send me the feedback. iOS, send me the intro. Writers, send me the names. Tell me what you can do better than anybody else. Again, it's powerhour@benzinga.com. That's the email address we're going for. And without further ado, let's get into the trades. Let's get into the day. I already made 1 trade this morning. There it goes. All right, the stock that I bought is ticker MTCH. That is Match Group. Let's pull that up on the screen here. MTCH. If you don't know Match Group, they own like all the dating sites. Maybe not all of them, but they own a lot of them, right? Like I think they own like Plenty of Fish. They've got 45 dating websites, platforms that they own. Okay. The big catalyst that we have on Match Group today is Bumble. Bumble, another dating app. It's having its IPO today. Here's what I was looking for when I made that trade. I'm scrolling back to Bumble. So we go all the way back to our news feed. We go to February 2nd. We see that Bumble expected to price its IPO somewhere between $28 and $30 per share. That's where the stock was looking to have its initial public offering. Yesterday, when they priced the IPO, and when they priced the IPO, I'll explain in a second, but they priced the IPO at $43 per share. So they expected 28 to 30. They priced it at 43. That means the stock had a ton of demand, right? That means that there's a ton of institutions. Anybody who had access to the IPO, which is typically institutions, they're bidding the shares up. The company expected to go for 28 to 30. They're saying, no, give it to me. I want it. They're outbidding each other. They go to 43. That's an indication of a super hot IPO. And what I mean by they price it, the company says, hey, we're offering 10 million shares or however many shares it is. Whatever price they sell those shares at, that's the proceeds that they get. Right. So again, we had a ton of demand for this one. I checked this morning. I see. All right. They priced it at $43. Where is the stock going to open? But there's 2 steps, right? The first step is you price it and you actually sell those IPO shares. That's locked in. All the institutions are getting those shares for $43. Then it goes over to the market makers. They have to actually open the stock for trading. And when they have to open it for trading, what I mean by that is they have to build a book. They have to build a bullish side. They have to build a bearish side, right? The buyers and the sellers. What price are they going to meet at the middle where this stock is going to start trading? Okay. It priced at 43. They indicated to open at 63, and it just keeps climbing. Last check, they indicated the price for the stock to open at $77 per share. Okay, so again, the company expected it 28 to 30. The institution said, we're going to pay 43. Now all the traders who are trying to get into it are saying, we're going to pay $77 for a share of Bumble. that is a super, super bullish indication there. Okay. And so I think, okay, I don't have an IPO allocation, but how can I trade this? And the way that you can trade it is with Match Group, because similar to Bumble, they own a lot of dating properties. So somebody said to me this morning when I was putting this trade on, they said, wouldn't you think that Match would go down? Because people are taking their money out of Match to put it into Bumble. I can see how that makes sense. But keep in mind that we are news people at Benzinga. If we are nothing else, maybe we're not funny, maybe we don't have a good soundboard, which I think we're both. But if nothing else, we are news people. That's what we do. That's what we know. And I can tell you guys that a rising tide raises all ships. If we see a ton of interest and a ton of investor dollars flowing into one dating app, it's typically going to flow through to the other one. So I went ahead and made the trade. I got lucky. I got filled at just above 168. So almost the low. I had no way of knowing that. I just knew that I wanted into the action because when I put the trade on, Match was down. So shares of Match Group were actually trading lower, while this Bumble IPO looked really, really hot. So thanks, Jay Towers, for giving me a funny. But this Bumble IPO looked really hot. Match was down. Went ahead, scooped up some shares. And there we go. We went ahead and put that one on. So guys, if I am distracted today, that's why. It's because I'm watching this Bumble IPO try to open. I expect that it will open at some point during our time here together today. But we'll see. Sometimes it takes until the mid-afternoon to get these. I think 11 o'clock, if I had to guess, is the medium time that these IPOs open. So I think that this thing should come. So there it is, Bumble. That's the trade. If Bumble rips, right? If we see this thing open at $80, it rips to 100. That Match trade is going to be hot. The way that I'm going to handle it is the trend is your friend. I always stick with the momentum, right? If the momentum keeps going, I'm going to stay in that thing. As soon as that momentum cracks, I'm going to take some or all of it off the table. Somebody's asking, is Match an ETF? No, it's not an ETF. It's an individual company, but they just operate like 45 different dating properties. So that's how it works. All right. Luke's in a complicated relationship with his dating app stocks. I think that's definitely fair to say. But I don't have my Bumble, but I have my Match. We're letting it ride. We're up $6 a share, which is awesome on a stock of this size. I mean, let's do the quick math. So yeah, I mean, we're up 3.5% already. We get this open. We get the stock to run. This thing will keep going. So, all right, there's the Match trade. I want to throw this one out to Zinger Nation. Let's get the first question of the day going. If you guys like Match Group, you like this Match trade that I put on this morning, throw me the 1 in the chat. If you don't like it, throw me the 2. And again, I'm going to encourage everybody, send 1 idea as to how that options page gets better, because I want it to be the best page of the internet. I've been working on this one for the past couple of weeks. So let's get this options page cooking. But again, throw me the 1 in the chat if you like this Match trade. You don't like it, throw me the 2, and we'll figure out where everybody's at on this one. Oh, we're getting some 2s flowing. Okay, let's let a few more answers filter through. And how long will it take for there to be options on Bumble? I don't know the answer to that. Does anybody know? All right, now here comes some 1s. All right, there we go. Now I got some energy behind me. Somebody's asking, what is the Power Hour email again? It's powerhour@benzinga.com. That's the email address, powerhour@benzinga.com. All right, and we're a very mixed bag on this Match Group trade. All right, so we'll see. I mean, we're going to find out pretty shortly. We're probably going to find out during the show whether or not the trade works. So we'll all have the answer, but before all is said and done. All right. And guys, throw in also any tickers you want us to cover today. I've got some time blocked out to take some tickers out of the chat. Let's get to those in just a minute. I see somebody just dropped in PayPal ripping. Let's go over to the live portfolio. This is my live brokerage account. I show it every single day, not just when we have winning days. Check this out. 2 days in a row, we're having losing days. So we'll talk about that in a second here, where we're getting smoked. But all right, let's. I've got a couple to highlight out of the live portfolio stocks that we own. Naked Brands still having its day. It's pulled back. I said yesterday at the top of the show, guys, Naked is finally having its day. MVIS. I'm gonna write that one down. It's still going. We got, I think, to $2 on Naked. Let me pull up a chart of it on my Benzinga Pro NAKD. And charts are going to be small today because I'm watching this Bumble IPO. Yeah, I mean, we got over $2 on Naked. The momentum is definitely cracked. That's not a good sign at all. As I look at this chart here, let me zoom you guys in. Check this out. We've got a couple lows put in here. The stock is sitting right at those lows. I don't like that. If it breaks below those lows, it probably has more downside, and I should get out of the trade. If I wasn't doing this show, I'd be watching that very closely. So that way I could go ahead and close that out. But there's the trade on Naked was one of the ones I wanted to talk about. And then let's get to PayPal. Freaking PayPal. PYPL. Let's go. First air horn of the day. Some of you guys hate the air horns. Check this out. We are now up 35% this month on the PayPal trade. Holy crap. It just keeps going. I mean, being up 35% on a stock like PayPal is sort of an indication as to how this market is, right? It's like the worst position that you can have on right now in this market is cash. I mean, I dipped. Jason's been in margin for a while. When I put on that match trade this morning, I actually dipped into margin for the first time in 2021. But PayPal continuing to run. We bought this stock on a thesis. The thesis was crypto had been hot. Crypto had been running. PayPal allows users to buy, sell, trade crypto. It lets brands use crypto as a payment method. The stock hadn't been moving on it. And so we went ahead. We took a PayPal position. Thesis is playing out for us. It then got some momentum underneath the stock, and it's still running. So PYPL, we are still hanging out in that one. And I'm just going to keep raising the stops up, right? The thesis is played out. We got a 35% run. Our initial price target was up 20%. We got that 35% run. And the reason why I don't sell stocks when they hit the price target, instead I use stops, is because you don't know when the momentum is going to end. Like I always say, the trend is your friend. Let the energy guide you, especially in this market. It's like we're all chasing and we're all winning, even though we're chasing. So PayPal is one of those situations. We have stops on the stock right now. I've got my stop set at 285. Those are some lows that were put in early this morning. If we get stopped out, great. We're going to take that PayPal trade. We're going to spend the money into something else. If it keeps running, I'm not going to be left just hanging out in this thing. Let's let it keep running. I didn't think it would get this high, but the stock is still moving for us. SINO. All right, we'll write down that one too to get into. All right, let's do a couple other out of the live account. So those were a couple winners to highlight. Now let's talk about some of the losing positions we're in and how we're handling those. These Palantir puts are actually short the puts, so that's good for us. Forward is whatever. Inseego, INSG is the one I want to talk about. We put that trade on yesterday. We're getting freaking hammered in it, down 9% today. Let's pull up the chart here. And I'm going to make my case for the stock again because nothing's changed. Inseego, I believe in, and I said when I put this trade on yesterday, I said this is a very long-term holding. I mean, we will probably be in this stock for years. And the reason why is because I had a revelation about 5G. Right, I never really got the 5G pitch. I never got the 5G angle until I got a 5G cell phone. And when I saw how fast 5G internet actually is, that's what made me bullish on this stock. On my phone, I get 150 megabits per second down. On my home internet that I pay Comcast for, I get 35 megabits per second down. So 5G is blazingly faster than my home internet. And my home internet, it's a pain in the ass for the companies to operate, right? They've got to dig a line out to my house. They've got to wire it through. They've got to, cut through electric wires, right? It's a whole pain in the ass versus just being able to pipe it directly in. What the product that Inseego makes is they make a modem router combo that pulls in the 5G signal and then rebroadcasts it throughout your home, throughout your office as a Wi-Fi signal, right? So I think that 5G is absolutely going to replace the current internet infrastructure that we have now. I mean, the only thing you can get faster is fiber. We get 1,000 down here at the Benzinga office. Nobody needs that. So that's why I like Inseego. They do have competition. The price action, the sell off today. There's not really anything going on, right? The stock had been hot. It's given up a couple days of gains. This is a 1 month chart that I have up on the screen here. And so I still like this one. Again, we're getting hammered on it today. Did our timing totally suck? Yes, it totally sucked. But again, this is a stock that I said that I want to own for several years. So it doesn't bother me at all. Now let's talk about SPACs for a second too. So we've got Clover, we've got car lots. Let's look at HIMS. We have Pershing, PSTH. Right. All it seems like a lot of the energy has flowed out of SPACs. That was the hottest thing around. Now there's a lot more Momo plays. There's a lot of these pennies that are running. The SPACs are like sort of dead. The energy is not in them right now. I am not going to be taking any more SPAC positions right now. You can look at some of these returns. Everything that I have that's turned red on me this week, it's all been SPAC positions. So I'm not going to be adding any SPACs right now. I want to see some of that energy and some of that momentum turn around. If it does turn around, then maybe I'm going to go ahead, get back into that thing and get long it a little bit. But again, yeah, we're getting hammered on Clover is another one, car lots. So I'm adding no more SPACs. I do have them on the list to potentially clear some out. And shout out to Jason Raznick out there in the chat saying smash that like button. Smash that like button for us. Share the stream. We're bringing the ideas. We just got through the match trade. And now we're talking SPACs. So again, with regard to SPACs, I'm not adding any right now. I'm going to hang out with them. I might trim some of the positions, take a little bit off the table, and then when the momentum starts to flow back into them, which I think it will at some point, but we just don't know when. Then we're going to go ahead and get some more SPAC energy in there. And guys, I am throwing this one out there. If you guys like SPACs right now, you are putting more money into SPACs, or you're at least holding on to what you already have, throw me the one in the chat. If you don't, throw me the two. I'm curious where everybody is at with their SPACs. Woo. All right. And while we let these votes come in, we're going to get to options in a little bit. We're going to talk about some options trading here in a second. And I've got some things to preview you guys. So some things that we have coming up today. Biotechs. All right. If you guys like biotechs, or you want to like biotechs, I want to like biotechs. I don't have any tickers right now, but I want to get into some of these names. Stay tuned. 2:30 Eastern. Vivi, the biotech queen, she's got a new ticker for us, a new biotech stock. She also said that she's going to be grabbing some of these biotechs out of the chat. So guys, have your biotech tickers ready for her coming in at 2:30. And then per popular demand, all week I've been dropping in a survey. I've been asking, what content do you guys want to see? What shows are we missing? We're trying to go all day. We need to make the business case to go all day, right? Because unfortunately, as much fun as I have doing this, it is still a business. So I've got to run all day. We've got to have a justification to run all day. We need to get more viewers, right? If we're just sitting here at 900 viewers, that's not going to do it for us. That's why I'm saying, guys, like the stream, share the stream, subscribe to it. Come on, throw me the tweet, pound Zinger Nation, hashtag Zinger Nation. Everybody who does that, I'll throw you a follow and a retweet on that. Let's get this thing going. But per popular demand, we are bringing you guys a crypto show. We've had no crypto content. I said we have the biotech queen. I think that we now have the crypto queen. We're putting her to a test today. So at let's see, 3:00 Eastern, we're doing crypto. So if you guys want to talk trading, you want to talk investing, you want to talk the crypto stocks, your Riots, your Mars, your Voyagers, those are the moves. So we're gonna have that coming up for us in a little bit here. And I'm looking back now. We've had some time. We've gotten some answers flowing for the SPAC trades. Let's see. All right, you guys still like the SPAC trades? Okay. I'm not with you on that one. I'm letting it cool off. It's cool right now. There's better places to throw my money. I mean, look at it, right? We got back-to-back losing days here. Never that fun. Still up a good 17% or so on the year, so I'll take it. And let's do a quick little Bumble check. Nothing yet. But I'm hanging out in my SPACs, potentially trimming some positions, and at the very least, not adding anything new right now. Again, I think that if your momentum turns around, that'll be your opportunity to get into some of these SPAC trades, and especially if you can do them for a discount. I do still have my SPAC warrants, especially on some of these pre-merger Chamath ones. I'm going to hang out on those, let them ride, because, I mean, he's got a good track record, and we'll come back on SPACs. But all right, let's grab some tickers out of the chat. And again, guys, I'm sorry. I'm going to have my chart small because I need to be watching this Bumble news. I've got that hot match trade on. This is absolutely a day trade. Look at this. We're getting some pullback since we last talked about it. You guys didn't like the trade, so we'll see here. But all right, let's pull some of these tickers out of the chat. The first one up, SNDL, Sundial Growers. Dude, the Atlas guys did it. They started calling this stock at 60 cents a share. We brought it up on the show a couple times and said, this is the next one that people are putting energy into. I didn't get into it, unfortunately, but we called it out basically in the whole March from 60 to $2 was their price target. They got it up to $5. Again, I didn't get in this one. I missed the boat on it. But I mean, they got the thing all the way up to $5. Yes, it sold off precipitously. It looks like some of that downward momentum has stopped a little bit. Let me click us over to a 2-day chart. So here's a 2-day chart. We've got some lows in there. We've got some bottoms in there. If we get back down to those bottoms, we fall through them. Be afraid. You know, that might be a time to take some profits. If we start to rally up again, it gets some energy. It's doing a second run, right? Like, I mean, we saw GameStop did like 19 runs. So if we get a second run, you know, consider hitting it. But all right, there's our sundial. Next ticker out of the chat, I wrote down MVIS. Let's look at that one. All right, MVIS, Microvision. See, I don't know this stock. Well, somebody in Zinger Nation out there, tell me what this company does. Holy crap. All right, that's a hot chart. All right, so what did they do? It got about 20. Trading higher after the company announced it received necessary components. April milestone. Okay, so it's a LiDAR play. Okay, that's interesting. Okay, it's a hot space. I'm going to say the exact same thing on this stock that I say pretty much every time. The trend is your friend. Don't fight the momentum, guys. All right, we'll do a quick little turn back in the history pages. I blew up 3 accounts from ages 15 to 19. So from 15 years old to 19 years old, I blew up 3 accounts. The first account that I ever blew up was penny stock newsletters, right? I subscribed to and bought every single penny stock newsletter, all those pumpers, blew that one up. Account number 2, I blew this up trying to catch falling knives, right? I would see that a stock is trading down 60% or something like that and be like, oh, that's a great discount. I'm going to go ahead and hit that thing. And I would buy all of these falling knives just trying to catch them. You don't know when the low is in. Let the market tell you when the low is in. It makes it so much easier on you. You know, I personally don't have any reason to think that I can pick the bottom better than anybody else out there. So when I see a chart that looks like this and the thing is still just screaming downwards, I'm not going ahead and picking the bottom, right? If we see that momentum turn around, we see the bottom get in, we see a nice rise on volume. Now I like the stock. Now I'm looking to get into the trade. But again, I blew up 3 accounts at very early ages. That second account was because I was trying to pick those falling knives. You know, it's sort of a disaster. And Jason out there in the chat saying, can you bring the SNDL, the Sundial CEO, on? Yeah, let's totally do that. Producer Aaron, if you're out there, I know you're out there. I see you chatting. Will you please call SNDL? See if we can get the CEO on the show. We've got like another hour. That should be plenty of time to work with, and then we'll get Sundial on the show. All right, guys. And without further ado, I've been blabbering on for just a minute. Yeah, somebody in the chat saying I've blown up accounts too. We all have. All right. Actually, I don't know if we all have. I'm throwing this one out to Zinger Nation too. If you guys have blown up accounts before, throw me the 1. If you've never blown up an account, throw me the 2. If I think that if you have not blown up an account, you haven't traded. That's my opinion. I mean, maybe you disagree with me. Maybe I'll make it an entire career without blowing up an account. But it took me blowing up those 3 accounts for me to learn these principles, right? I paper traded before I blew up a first account. When I paper traded, I was the smartest motherfucker on the stock market, right? I was just fucking picking everything, hit. You know, triple margin, 300% returns. That shit doesn't work. I'm just telling you, make a small live account. The paper trading doesn't work. Yeah, okay. We got a lot of ones in this chat. Yes, we've all blown up an account. And I'm going to warn you, if you put in the 2, you have not blown up an account yet, you will. Okay? I'm just throwing it out there. That's my hot take on it. I'm going to bring our guest on. Let's talk some options. Let's see. There we go. Chan, what's up, man? Welcome to the Power Hour. Have you blown up an account before?
Of course. Hi, how you doing?
Good,
yeah,
man.
Of course. That's definitely part of the game, and you learn the most.
Yes, right? You have to blow up an account, right?
100%. I think that's the best. People who say they could win just continuously, I think it's impossible.
Mm-hmm. Do you have a good story for us? Like the one that I just did was one of the accounts I blew up. My second account I blew up. I did again. I blew up 3. I have not blown up any accounts in 8 years, so I have a good run. I also haven't been in a car accident for 10 years, which makes me nervous. I feel like I'm due. Do you have any stories for us as to accounts that you blew up?
Yeah, my first one's actually on penny stocks. I believe that's the same thing you did, but I was following someone at that time, and it blew up bad because I was following. Can we throw names out here?
Go for it.
All right. No. Tim Sykes. I think he has a great purpose now. But it wasn't his fault. I was just terrible at what I did. I was in college, traded penny stocks, and I was just following every single trade that he took, and it just terrible.
I see, and I went even worse than Tim Sykes, right? Like I didn't know. I was 15 years old with this first one, right? I just saw all these ads on the internet. As soon as I started researching stocks, I got all these ads on the internet for like, this penny stock is the next Amazon. I don't know. It wasn't Amazon at that time, right? I don't know what it was the next of. And when I went through and read the disclosures years later, trying to like back into like, how did I get conned out of all this money? Like in the disclosures, it says like, we were paid to write this. You know, we were given shares of the company and we were paid, $50,000 cash to write this. So yeah, I totally got conned.
Penny stocks are something, but you could definitely find gems within the penny stock market.
Absolutely.
MBIS is a perfect example. I watched this thing grow from like $1 to like I think it was $18 today, and I was like, wow, I like definitely missed the train on this one. But a lot of them, like LK, remember Luckin Coffee? That company was terrible. Like,
it's still not a great example. It did get delisted. Did LK ever come back?
No, I don't think so.
I don't think so either.
Yeah, I was like, wow, this one, like, I asked my friend, she was in Hong Kong at the time, and I was like, is there such a store around? And she was like, I've never seen it. And then shortly after, I think Andrew Left published the article, like this company was non-existent, but the story was great. They had vending machines coming out. I was like, wow, like this is the future, Starbucks.
All right, wait, hold on. Spencer, what is that? Bumble.
Oh, is it up?
BMBL, it's open. Let's go. All right, sorry. We got to watch this. I got to trade on match. All right, so all right, let's recap the Bumble situation and the trade, guys. Bumble, we're open. Let's go. Hitting the cash register on that one. All right, so the company said that it expected its IPO to price somewhere between $28 and $30 per share. It actually priced at $43 per share. That's bullish. The stock then opened for trade, $76 a share. That is a hot IPO. So basically, the institution said we're willing to pay up to $43. Everybody who's making the market, buying this thing post IPO, they said we're going to pay $76. That's the fair price for this thing. I got a monthly chart on instead of a minute. There we go. Oh man, my Bumble quotes are all screwed up. Let me refresh this. But basically, everybody said, $76 a share. That's what we're willing to pay for this thing. And let's see how we trade now. I put a trade on match, MTCH. When I saw the indication of open for Bumble ticking higher and higher and higher and higher and higher, and match was actually down on the day. That was my indication. That's what I said. Okay, the stock should trade in sympathy. Let's get this Bumble open. Let's rally the stock, and then match should chase after it.
That thing is flying right now, Bumble.
Well, what's the price?
Yeah, let's go.
I'm not getting a quote on it. What do you have?
Are you in it right now?
No, I'm in match. I'm TCH. All right, let me pull up my match chart. Match is not coming through for me. I'm 168 filled. Match is sitting out there at 172. $4. Okay, it's not what I got into the trade though.
Maybe, but you never know. Maybe it's gonna continue. Volume came in the last week, right after Bumble.
I mean, it should. That's the thesis, baby. Come on now.
Oh.
Let's go. All right, thank you, Zinger Nation. I'm not getting quotes, so Zinger Nation is filling it in for me. So 78.70, 78. Just keep dropping in the prices, okay? Like every 20 seconds, somebody dropping the price for me, so I can keep following this thing. But Chan, all right, tell us a little bit about your trading. Tell us a little bit about your background. This show, the point of this show, and everybody like, subscribe, share this freaking thing, please, because we need to get a bigger audience on here to keep doing this every day. This is sort of our test week. We want to keep it running. So please share this thing, share the link, tweet it out. But Jan, the point of this show is to be the best trade idea resource out there. That's why we're doing this. So tell us a little bit about your trading, what you're doing, and then let's get some ideas flowing.
Yeah, sure. Yeah, my name is Chan. I've been trading for quite some time now. My strategy is really just to go bring my cost basis down. I sell a ton of covered calls. SNDL, I saw someone bring it up. That trade was amazing. I got in at 66 cents. It cranked up like 100% the next day. And selling covered calls, you was able to cover the whole position. So the whole position was covered just from that covered call. And I think there's a bunch of retail investors coming into the market. So I think, we're having a ton of money being pumped. Me personally, currently, I'm not in too many. A trade I took today was Luminar, LAZR. And that one was a pretty good trade. But I'm kind of a little skeptic right now, just because the market's so high. I have to be careful. But my story, I've been homeless before, and now I've been featured on Benzinga and also on Yahoo Finance. So I quit my job as a NYPD officer, and now I trade full time and I manage multiple businesses. So that's my story for everybody. And
wait. So you were an NYPD officer?
Yeah, I used to be.
And then did you get into trading while you were on the NYPD?
No, I started losing money in college when I was 18 years old. So
okay.
I lost a ton of money. I found that there was huge potential in the markets.
Yeah, full circle to blowing up the accounts. Okay.
Yeah,
exactly. We all been there.
And now look, I mean, everything's falling into place. I think once we find a purpose, we get into.
Okay, and you were talking about the trade that you're making. I think it was a covered call trade that you were talking through. Can you just go a little bit slower and do that one again?
Yeah, so I got into SNDL, I believe 2 weeks ago, and it was at I got in at 66 cents. The next day, it ended up going to 130 or 140. So I sold the same. It was literally 1 day to expiration. So I sold covered calls I bought 4,000 shares. I sold every covered call for 0.45, so $45. It brought me around 1,400 bucks or so. And my trade probably cost around around two something. And then I sold it again the next week. The most recent trade though was terrible because we all know how much Sundial ran up. I had to roll over to the next month from my recent cover call. But bringing the cost basis down was great. And I think having a risk off position within the markets is the most amazing thing anyone can do.
Absolutely. And so you went slower for us. I'm going to ask you to go even slower and just walk us through a covered call, right? So maybe let's do a live example. I'm going to throw my screen up here real quick. All right. Where's the brokerage account? Here it is. Okay. So let's go look at, I don't know. Let's pick some random stock. But let's do HIMS, right? So I own shares of HIMS. So walk me through what that covered call trade is.
Yeah, so for the covered call example itself, it's really just shorting a call, but it's called a covered call.
So you're selling a call.
Yep.
Against a stock that you own.
Yes. So, when you short a call, you have unlimited loss potential. The reason it's called a covered call is because you are covered in the fact that you have 100 shares of the underlying stock. So if in the case, whoever trades options, you want that contract to expire worthless because it's something that you already sold. So to close a short position, you have to buy back to cover. So if it expires worthless, you keep the whole credit that you were awarded when you sold that call. For like HIMS, depending on how volatile the stock was, especially for SNDL, the IV, I believe, was like 700% because it ran up 100% the next day. So the IV crush definitely benefited me a lot. Certain cover calls are cheaper than others. I see on HIMS, if you don't think that HIMS will hit the $25 mark by next week, you could collect a premium of approximately $30. So it's a great strat. You know, just keep.
All right, no, let's do it. Let's do this, guys.
Oh, you gonna do it?
We're doing it live. No, yes, I can't be a hypocrite, right? I think the worst thing anybody can be is a hypocrite, right? That's why the show we're like so transparent is because like we're in this thing together with Zinger Nation, right? So I just said, you know, you have to blow up a real account to actually learn your lesson. You know, if we're actually going to learn about covered calls, let's take everybody through an example. Let's actually do it. I have the position in HIMS. And so I own the stock. So let's talk about the trade. So you were looking at next week, so a pretty short time horizon, to sell the calls against. Is that correct?
Yeah. So the closest date that we have on the option chain is February 19th. So yeah, next week.
All right. So February 19th, here's our calls. So these things are trading at 30 cents. So you know, you don't really need the calculator, but I'll pull it out. So 30 cents times 100 shares. So I'm getting $30 per every one of these calls that I sell. So when I sell this call, I'm going to get $30 right away credited to my account. That's cash in hand. Okay, we'll take it. If the stock goes above $25, my shares of HIMS that I own, for every contract I sell, every 100 shares of HIMS that I own, I lose that. It's just gone. Poof. You know, they take away my shares. If the stock stays below $25 between now and February 19th, I just take that $30 and walk away with it. How is that? Would you say that's a fair way to do it?
Yeah. So that is exactly. So with covered calls, quote unquote, there's really never, if your entry price was good and you are already positive within the position, technically speaking, you could never lose on that position. Like you said, if it does go above the strike price and someone decides to exercise the option, you're going to have to sell your shares to them at that specific strike price. So, you know, for the 25 call, you're looking at close to almost a 20% move within a week. I don't know how volatile this stock moves, but I would say you have a, let's see, you would have.
Yeah, and tell us how you picked this $25 strike price.
Oh, well, I haven't done my due diligence on HIMS, but 25.
But generally speaking, then maybe, or if you can do a live analysis, that would be awesome.
Okay, yeah. Well, first, the 25. A lot of people like to sell covered calls dependent on the delta. So you'll hear a lot of people saying, "Oh, let's sell the 0.3 deltas or the 0.2s." But on a technical perspective, let's see. On a technical perspective, your all-time highs is 25.4, and it's on a downtrend right now. Volume increased the past 2 days on the downside. So to make a 20% move, unless it's a super volatile stock, most of the time you're not getting a 20% move within 1 week, unless you have something like SNDL that has some sort of news.
SNDL, 20% move, 200% move.
Yeah, oh my God. That thing was crazy.
$5, baby. Wow.
As high as the marijuana.
Yep. Okay, so basically you're looking at the technical levels. You see that based on the way that the thing's been trading, it's in a downtrend. You think that the $25 price is pretty fair, where you get sort of that balance of risk and reward. You get more money by choosing a lower strike price right away when you sell the call, but you also limit your upside a little bit more. And basically, you're saying, is the stock going to get above $25 in a week? I doubt it.
Yeah, me too. But another thing to also, like, I love selling covered calls when it has a huge move up, like SNDL, because, you know, when that kicks in, the IV gets drived up. People are paying crazy amounts of money for the same contract. So you have a huge chance, especially if you're looking at technicals and you see some sort of resistance, you know, a supply level, you could sell that covered call and bank on the premium on some sort of retracement.
Yes. And guys out there, Zinger Nation, if you can't tell already, Chan is the man as we're talking options here. So if you have more options questions, drop them in. I'm gonna pull some out of the chat. So a question, you know, what if you want to undo the trade? That's one, Chan.
Yes. So if you want to undo the trade, and like I said, SNDL, the most recent covered call, got me, you know, pretty good because I had to roll it out. So you have different ways you could do it. You could either let the trade go and get rid of the shares, or you could roll them out. Rolling them out sounds complicated, but really what it is you're just buying it back and absorbing the loss while selling one that is further away at a further strike price so that you could collect more premium than you lost. So I had to roll mines out to like March. I think it was March 19 for like an $8 call on SNDL. But with the move down we just had on SNDL, I'm positive on that position once again. So thank God for that.
Woo!
Let's go.
All right, so there was one question, and then all right, do you sell puts? I love selling puts.
Cash secure puts, yeah, sometimes, not all the time.
All right, do you want to do a put example too? I'll do it.
Yes. Yeah.
This is Zinger Nation. We got to do it live, baby.
Okay. Yeah. I did a spread. I sold a bull put spread.
All right, hold on. All right, let's get this one in. So here it is, right, guys? I own the share of HIMS. I'm going to sell a call against it. I'm just doing one contract because I haven't really researched the position specifically, but we're doing it for the explanation. So I'm going to sell this one call right now at the $25 strike. The call expires the end of next week. I'm going to get $30 credited to my account right away. That's my limit price on it here. If the stock stays below $25, then great. I take that $30. I walk away, got a check, more interest I'm going to get in my bank account right now. And we're happy there. If the stock runs to 30, right, the thing just has a rip, it tears. The most upside that I can see is $25. So whatever, we're still positive, just not as positive as we could be. So there it is. It's in. We'll see if we get filled or not. We're out there. It's submitted. Boom. All right, and Chan, you do or you don't like selling puts? Like I love selling puts on stocks that I like, and I'm okay buying, but think are expensive.
Yeah, selling puts is great, but selling calls, man, you are crazy for that. I would never sell a call just because the risk is crazy in the case that it does go above and beyond.
Well, I own the shares.
No, but when you sell a call, you're shorting a call. Oh, sorry. Oh, I bugged out.
I'm covered, baby.
If you sell a naked call.
Yes. No, I don't sell naked calls. Yes.
Okay, great. But selling a put is great, but like you said, it limits your capital. So you have to have enough cash in there to to cover in case that you have to get assigned the shares and you're gonna have to buy those shares at that specific strike price. But I do it sometimes. I did do it yesterday on LAZR.
Which one? Laser.
Yeah,
Laser. Let's pull up that chart. Come on, match group. Let's go. All right. So here's our 2-day on Laser. All right. So okay. So the stock's at $35 right now. And basically you sold puts against this. That makes you synthetically long the stock, and we'll explain it a little bit more in a second here. But like tell us about the trade that you did on Laser.
Yeah, I actually played calls and also sold 5 bull put spreads. But in the case of selling a put, I sold to 32 because at that level that's a demand zone for me. So as long as by this week, if it doesn't go underneath $32, I will keep that premium. So I think this was a pretty safe trade, and I also wrote the call side, and we had that pop today. Honestly, I don't even know where the pop came from because I don't see any news, but I know that this was heavily shorted.
Yeah, there's nothing.
Yeah.
if there's nothing in Benzinga Pro, there's no news on it. That's the truth, okay? Wait, Chan, do you have a Benzinga Pro account?
I do use Benzinga's option data.
There we go. So all right. So you sold the $32 strike puts. Let's walk through this. So that means you collected cash right away for selling those puts. That's the deal. You got your cash. The downside, the risk that you're exposing yourself to is that if the stock falls to $20 a share, let's say, just out of the sky, it drops by next week, you're forced to buy the stock at $32 a share rather than the 20 that it's currently trading at. Correct?
Yep, correct.
So that's how selling puts works, guys. I sell puts all the time. I was actually going through my closed trades for the year, and in almost half of my return this year has been selling puts on stocks that I like. Like I'll pull up one example that we did. We did this one. I don't know. Let's go to the live portfolio. Oh, I closed it. Dang it. All right. We did this one maybe like 2 or 3 weeks ago on the show. I sold puts on Bill.com. I made a big bull case for Bill, why I like the product, why I like the company. But I said that, hey, I think the price of the stock is high. It's trading at like 10 times forward sales. That's really expensive. S&P 500 average is about 3.5. And Will's saying in the chat, can we get a Benzinga Pro giveaway? All right, let me check the like count. All right, we're at 950 likes. If we get to 1,000 likes, whatever it is, I'm just gonna pick one random chatter. Whoever has the closest chat to us hitting 1,000 likes is gonna get a free Benzinga Pro account. That's the move. Okay, so going back to this. So Bill, I like the stock. I like the company. I like the product. I like the company. I think the stock is expensive. So I said, you know what? I would be okay buying the stock at $90 per share. The stock was at 120 at the time. So, I mean, the trade has been hot and I mean, we're up like 90% on the trade. So basically I sold the puts for $90, collected $2,000 of premium right away. And then if the stock falls to 80, I'm buying it for 90. I'm okay with that because I like the company. Inside the stock pushes higher. I just made that $2,000, throw the cash back into the account, look for the next trade.
Yeah, and that's a great strat too, because if, like you said, you do it on stocks you like. So holding it and getting exercise on it, and just long-term holding it, depending on what your purpose is. Like you said, you love the stock. So I'm guessing that if you were assigned the shares, you wouldn't even, care, and you just invest into the company itself. So
yes. All right, guys. Shannon, I don't know if you can see the chat right now, but it's going crazy. I said whoever has the closest chat to us hitting 1,000 likes on the stream is getting the free Benzinga Pro account. We're at 988 right now. I'm watching it. And Chan, well, I'm watching this thing because I know the chat, Zinger Nation's gonna be pissed if I don't pick the right person. So I'm watching this thing like a hawk. But while I'm watching it, tell us how users can find out more. How can they follow along with you, etc. We're at 992 likes. Come on, baby.
Please. I created the YouTube channel, The Financial Chance. That I think
there it goes. Sorry, I gotta stop you. All right.
Oh, 1K. There we go.
Marconius, you were the one. All right, this was a fun game. Marconius is the one. The email address is powerhour@benzinga.com. Again, that's powerhour@benzinga.com. All right, you guys love these free Benzinga Pros. All right, so then how about this? The options page. I'm going to put the options page into the chat again. Okay. Whoever sends us feedback on this options page, Chan, I'm trying to make this like the best free public options page. It's not going to be as good as yours, but I'm trying to make it good for a free one. Whoever gives us the best piece of feedback as to how we can improve this trade, it gets a free Benzinga Pro 2. So Marconius, you're the winner.
Luke,
you get the Benzinga Pro. What's up, man?
Why can't you have Chan manage our options page, but him be the managing director? I know he has his own stuff too, but like let him be the consigliere or like the kingpin. He's the Benzinga options kingpin. I have to say this was probably one of the most enjoyable interviews I've heard in a long time. I never understood how to do like covered calls or selling options on positions, and I'm probably one of the best equity traders in the world given my returns. But my options trade, I'm probably one of the worst options trader in the world. So I would say like we should have Chan like face on the top corner of the page. He's the managing director. He takes it, like he leads it. He gets some sort of fee for doing it, and we grow it together. This is honestly one of the best interviews you've done ever, Luke. I mean, I have to say.
And did you hear Chan's background, his story?
Yeah,
amazing.
You didn't do a great job on that part of it. I'll be honest. Everything else you kicked ass on in the interview, but you didn't do a great job on that. He says he was homeless. You skipped over that, and you asked about his policing. I want to know about the homeless part. I lived in my car for a period of time, Luke. So maybe you didn't want to go deep on the homeless. But other than that,
and Jason, your audio, by the way, just it's sort of crackly. Just as an FYI.
No, it's a very important FYI. Let's change that. Hold on. Crackly ruins everything.
But all right, Chan. Yeah, tell us that story.
Hold on. So did you hear? Is this better?
Yeah. It's
good. My God.
What?
It was good before.
What?
It was great. It was okay.
Okay, yeah. This is a million times better. Don't you agree?
I mean, it sounds perfectly fine right now too.
Yeah. So F off, Luke.
Okay, it's not just me. It's about Zinger Nation. If you guys think Jason's audio sounds better now, hit 1. If you think it sounds the exact same, hit 2. It sounds a million times better.
Okay, all right. I know in the room that I'm in right now, there's a little bit of an echo. It's because we're doing construction here, and the construction is going to last for 8 million hours. All right, 8 million days.
Jason, look at all those ones.
Shut up, guys. Chan, how long were you homeless for?
It was like on and off. It wasn't exactly my longest time of homelessness was probably a month. But it was I used to live in the story is because I used to live in a basement. You know, when I came from Macau, when we came here, we spent all the money that we had, and then I ended up living in a basement. Somebody wanted to you know, tell the DOB that there were people living in the basement. So every time the DOB would come and crack down on us.
What's the DOB?
The Department of Buildings.
Okay.
So we had to
most people don't know that, by the way.
Yeah. Yeah. So I had to like make it as if no one lived in the basement and get everything out, and then we would have to find a place to live. So, you know, sometimes friends will host us, sometimes we have a car, sometimes we go, you know, just stay awake. Staying awake was the best one, actually. But you stay awake until, you know, they got everything they needed to do or go back, etc.
Got it. So did you ever live like in the night, like you had to sleep on the streets at all?
I did sleep in a car for quite some time, my car.
How long?
Approximately 2 months. That was when I was actually a cop.
Wow.
Yeah.
Why were you living in your car when you were a cop?
Because my mortgage, I bought a house, which was the worst decision of my life when I was like 18. Before being a cop, I used to be a private investigator. So when I did that, I was able to pay for my mortgage. But when I took the job on as a cop, I wasn't able to pay because cops don't get paid a lot. People think cops get paid a lot. They don't. And they deserve, you know, a ton of respect for what they do for that pay. But I wasn't able to afford it. So I had to rent my room out and basically had nowhere to stay. So I was sleeping in my car most of the time. My girlfriend offered me to stay at her place. But, you know, as a man, you don't really want to, you know, go there and sleep at her place.
Got it. Okay.
Yep.
So that's your story on that. Okay. Yeah, a lot of people who are successful lived in a car. I'm actually finishing a book that I wrote about successful people, and the one commonality is they live in their car. Like Jim Cramer, Mad Money fame, lived in his car for 2 weeks. A gun was pulled on him, and I have stories like that. I've worked on this book like 7 years ago, and then I stopped, and then I brought it back out of the dust about 6 months ago.
That's awesome.
The reason I got into it because I lived in my car for a couple weeks at one point.
It's not that bad though. And I said, I actually was on a podcast the other day, and I said I'll never go back. Like I would do it again because it builds a different character within you. So.
Yeah, no, I prefer it. I prefer it. I'd rather live in my car.
No, you definitely don't prefer it.
I know. It's just the way Chad said it. It's not that bad. Yeah, I agree. I mean, it builds character. I mean, Chad, did you have the stories when the cop cars would come up to you? I remember one of the nights I'm in a parking structure and like the big light is pointing on the car, you know, then I'm in a parking lot and the guy wakes me up at 4 a.m. What are you doing here, sir?
You know, the worst part about being homeless is when you realize how much people hit your car while you're in the car. It would happen all the time. These people would hit your car or go back.
Well, that's because you're probably in New York. I was in New York.
Yeah. You're in Michigan. You don't have that problem.
The most embarrassing thing that I had, Shan, happen. I was in the car. I was driving through a parking lot. It was during the like 5 o'clock. It was at like nighttime. I mean, not nighttime, but you know, when you're living in your car, you have everything in your car. And literally, I had like things hanging from like I don't know. My car had it looked like someone was living in there. And I'm driving through a parking lot, and who do I run into? My ex-girlfriend from high school. Oh my God, was that embarrassing. I didn't tell her I was in my car, but I don't know what. She doesn't remember because I brought it up to her recently. Now that I'm not living in my car, I thought it was okay to bring up. I'm like, do you remember that one time when you were with your new boyfriend, current husband, and I had my car? She's like, well, not really. I'm like, phew, but that day was, you know, and my story was different. I was doing a startup. My parents said I need to get a real job. And so I said, F it. And I moved on out. So, well, Chan, what'd you say?
No, at the laundry part. Like whenever I like drive a friend, they're like, "Why is all your stuff here?" And I was like, "I was doing laundry, you know, because all my clothes would be like on the side in the bag, and they would just take it out as you go along."
Yep, I understand. I understand. All right, so can we have Chan come on again, Luke?
For sure. And check
great.
this one out. The Jay Towers in the chat. We got a lot of comments like these. Jay Towers in the chat said, "Just sold a covered call on UWMC after watching your HIMS trade. I love it. You know, like that's what Zinger Nation is all about. We're trying to help each other out."
So Chan, I have a bunch of stocks that are up like 200 to 400%. Should I sell covered calls on them for some reason?
That's actually what I love to do because
that's what I heard you say. So I own let's say I own GAN. It's up 70%. And I own 2,000 shares of GAN at up 70%. Okay, what would I do?
Yeah, so that's what I love to do because you want to be positive on your position, or even before. But when you're positive, you don't have that risk there as much because you're just limiting your gains. In the case that it does go above your strike price, then you're gonna assign the shares. But if it doesn't, you're just collecting premium, and then they'll slowly climb up, etc. So whenever I sell it, I would want to make sure that a move happened already. So like PLTR recently, it jumped up 10%. I went a little further out from there and then sold the cover call for that. So then now today and the days prior, it came back down a little. So now you're up on your cover call and then you're still keeping your shares.
Okay, but so my GAN is at $30. So I go to 35 strike. What strike should I go to?
GAN, right? GAN LTD.
GAN, G is in go, A is in alpha, N is in Nancy. Oh, and by the way, we have two guests. In 2 minutes, they're going to come on, I believe. Kayla and Chris. And is that right, Luke? In 2 minutes?
Kayla and Chris in 2 minutes. And then, you know, I can't turn down any opportunity to plug, guys. 2:30, Vivi, Biotech Queen, has a new stock for us. And then 3 o'clock, we're trying something new by popular demand. We are doing crypto. We're doing a 30-minute crypto trading session. I'll be there. I'll be hanging out with you guys. So stay tuned.
Hey, and Luke, I heard about your trade on Match.com and Bumble, but you don't even know my history in the online dating space. I'm like the best investor in the online dating space in the world. I mean, there are so many online dating sites 10 years ago. UDate, UDAT. I bought so many OTC dating sites. JDate was public. I made my most money in the stock market from Yahoo, which owned online dating at one point, from online dating. I'm an expert online dating investor. I would say I'm the foremost online dating expert investor. They should have CNBC, the New York Times should have called me, and I can pull the proof up. And I don't say that often. So all right, so I have the GAN one open. Chan, I'm on it. What do I do, dude? February, March.
I'm on it too. I see that your the recent all-time highs was at 31.35, and I think that might actually be that this is the all-time highs that you hit recently at 31.35.
Yes.
Me personally, I want to wait until it develops some sort of levels for you to look at, like a resistance or whatever. You know, stocks that are at all-time highs right now, you don't know where to base your strike off of. So I like to wait until some level comes out before you do it, because you know, you want to make sure you're not taking.
Well, Jason, do you want the truth, or do you want him to just lie to you?
Yeah.
I wanted to make a trade live on the show. He's giving me a bunch of filler. This is like CNN.
I did one. You got to find another ticker.
Wait, you guys know, are people buying Bumble stock right now and stuff?
Let's cut the Bumble real quick.
No, but you know that's a big mistake, right?
Okay, so you're bearish on Bumble.
No, I'm not saying that.
Oh, okay.
But when have you ever had a stock that only the girls can buy first? What?
Was that really something? That's impossible.
Chan, Bumble is about girls. Oh my God, I see Kayla's
women.
Girls.
Women.
Girls can buy the woman. I want to put Kayla live because she's reacting so big. I got to put her live. Kayla, what do you think of that?
I'm bummed I didn't get in on Bumble.
Because only girls can buy the stock first, because just like on the online dating virtual experience, they apply to the stock market. And by the way, I'm stealing that joke from a guy in this chat room from 1205. Whoever said it, that's where I stole that from, Luke. I've been waiting to say it all day. So,
that's so good.
Good. I'm glad you held on to it for, let's see, 61 minutes.
I did. And I get credit. All right. So Chan, come back on when you can teach me how to make sell a call on one of my stocks. Okay.
You got it. Have a great one.
All right. Thanks, man. Good catching up.
Bye-bye.
Options Kingpin. See you later.
Okay, bye.
All right. He's good. I like that guy. All right.
Chan's the man.
Yeah, Chan's the man.
Yeah,
That's,
and Chan's a Benzinga API user. Do you know that?
Well, he's just good. I like him. Nice guy too. That's why I didn't interrupt your interview. So, I usually do. But I brought the next two guests on, Luke.
Yeah, and Luke, you traded Match. I was in Match in end of November because I was like the COVID stuff. When I live in Boston, all my friends were using it constantly.
For
like,
what? What were they using it for?
It's like a wannabe bar. I'll be honest, it didn't work out too well, but they tried at least.
He needs a new friend group.
Yeah, right.
Can I tell you guys? Tell you guys all a secret of the online dating space?
Oh, please do.
All right. So when I was in year 2000, I had an online textbook store. It was like pretty popular, and I sold a lot of textbooks, but the margins per book were like $8 or $12 or $14 after shipping and stuff. So I wasn't making that much money.
Yeah.
So I was a senior in college or junior. I'm like, what would guys pay for? People pay for that you don't have to ship anything. So I started online dating sites, Motor City Singles, Chicago Jews, Michigan Indians, Los Angeles, whatever race and anything. I have 200 domain names of every ethnicity and city, big city. I have New York, whatever you can think of, I have the domains. And so, but here's the secret of online dating. Think about this. Whenever an online dating site is launched, why would anyone go to it? If you go to the site, there'll be no people on it, right?
Yeah.
Yeah.
Because it's a marketplace. It's like if you go into eBay or the new eBay and there's nothing on it, what are you going to do?
Nothing.
So I'm going to say to you,
single.
Stay single. Yeah. Stay single, but then Bumble knows it. So I'm going to say to you guys,
Jason, this is the best chat. Do you have farmers only?
No, I do not have farmers only.
That's the $1 million idea right there.
That's the $1 million idea.
Getting proud on farmers only.
Yeah, right.
My online dating thing morphed into pickysingles.com. It's like too picky for, whatever. So
too picky for farmers.
But so every online dating site, I'm basically saying, I'm going to guess 10% of the profiles are fake or more.
Oh, wow.
Or more, probably more. So
like legit fake or like catfish?
Like
Bots
legit fake, legit fake, like Friend Finder, or there's like they say 30% of those were fake. They're bots. An online dating site is only as good as the network in it. So when you first start sites, they all have fake and I know this because I talked to the executives of these guys because like it's that whole marketplace. How do you get your first 1,000 people? Now, some of these sites, there's some of these ones you have to apply to be in it. Those are more legit because you don't see the marketplace until you're logged in.
Yeah, I know.
Once you have that marketplace, then you're good. Like JDate did a good job because they had the marketplace. And
Jason, we got to get you on Raya. Do you know about Raya?
That's the one that you have to apply to, like your Ivy League guy.
That's the one that you need. Yeah, you got to apply to it. You need a friend to invite you. It's like a clubhouse for dating.
So I should get on there and not tell my wife about it?
No, you should tell her, but still get on.
Yeah. Hey, babe, just looking around.
It's good. You never know what else you can bring to the yard.
Education. It's for your farmers only. It's education.
Research.
But how did everyone find out that I'm an investor in OnlyFans today? Like I'm getting so many messages today. As Brian Penny just mentioned it. OnlyFans gets a lot of bad vibes. There's a lot of sexual, but there's a lot of conservative stuff too. You'll see stock market stuff's on there.
I mean, I'm building an OnlyFans for the stock market too. Maybe you should invest in us. You can get that buy it up a bit.
I actually got like 5 of those sent to me. Only chairs, only investing.
Yeah, that's that trending thing on Ticker. It's like your startup. If you want to be $1 million idea, it's OnlyFans for blank.
Yep, you're right. That's what they used to do. Uber for blank. Uber for this. Delivery for this. All right. I feel like I'm taking up too much time. So what's going on in your lives? Luke, should I disappear or what should I do?
No, hang out.
I mean, Jason, it sounds like if you're in the OnlyFans for finance, we might have a conversation aside from this. What I'm building is essentially.
I'm not an OnlyFans for finance. I'm an OnlyFans.
Yeah. Well,
all right. I'm in OnlyFans for finance, Chris. What is it that you're working on? Because I do want to hear.
All right, Luke. Then. So what we're building.
I'm not saying I wouldn't want to hear. I'm just saying I'm an OnlyFans. Okay.
True. All right, Luke. What we're building is we're building a social trading stock app, a broker agnostic one. where you can connect your portfolio and you can follow the trades in, portfolios, do whatever, of friends, families, and influencers all in real time. It's essentially building a social hub for the retail trader, and it's an index and a platform for retail traders to A, learn from each other, but also B, have some more fun trading. I mean, like Luke, you come on the show and or you host the show and you give out stock picks and everything. It would be pretty cool to get a real-time alert of when you do it instead of having to watch all day or
No, we want them to watch all day.
But when I'm at
and
work,
producer
and
Rohan, can I get a charger?
Yeah,
All right.
Kaylee, exactly. When you're at work,
Yeah.
how do you do it?
I'm at work, I'm like, okay, I can't watch the channel live all day, even though I want to. Obviously, Luke, I want to be watching.
We got the
this
replays
all day
Hey,
long. But if I want that real-time alert too, it pops up on my phone, so it's not the worst deal. I get the best of both worlds. I can watch you guys after I get off work and
then you get the real-time trade alerts of when Luke makes a trade, or if Jason comes on and puts his portfolio on and puts it behind a paywall. I would gladly pay $5 to follow what people that actually know what they're doing better compared to me. I would want that information, and that's essentially what we're building. We're building a social hub for the everyday retail investor to A, collaborate on ideas, B, follow the trades and portfolios of each other, and then C, learn from real smart money traders as well.
All right, so Jason wouldn't do well on the platform selling his portfolio, but what tickers have been hot? Like what have been some popular tickers?
Luke, if you want to have a stock contest to me starting tomorrow, I'll put up my house against your whatever. Okay, Luke.
Against my Dow 100,000 hat. That's my most prized.
I will not lose. In fact, any person that in the room wants to go against me on a stock contest, not using options, just using equities, because my options trading is piss poor, I will take on anyone. And that's it. But wait, I do have a question. What were you doing before this, Chris?
So I started my own, I'm a finance major, so I've been investing for a while. I've been using Robinhood forever.
Finance major where?
I went to Villanova University.
Oh my God. So you won the national championship.
I was at both of them. Yeah, I graduated in 18.
You mofo. 1 year I switched at the last second and I didn't. I would have won my pool.
I went to money and I was on campus for one and I was in San Antonio for the second one. Yeah, it was a lot of fun.
Oh, I was there. I was there. I'm giving you the middle finger right now. Did you beat Michigan that year?
I think we did. Yeah.
Yes, I was there. I was at the game when you beat Michigan.
I was sitting in the nosebleeds. We could have hung out.
Oh, I was sitting not in the nosebleeds. I was like 4 rows behind the bench.
Yeah, we went to Howl at the Moon right after. I don't know. That was in the Michigan bar was right next to it.
Yes. Yeah, we saw each other. You're the guy that pushed me. You were drunk and your beer spilled on my son. He's like 8 years old.
My team won. I had to celebrate. I did it. He
still remembers. My son Josh. If he was here right now, he remembers that beer you spilled on him.
Yeah. I apologize. I'll get the next one. I'll do the next one. But
by the way, people get mad that I swear sometimes. I honestly don't think swear words are swear words. Some words you should never say, but they're just words in the vocabulary that at one point in life we decided they're swear words. If we didn't decide that, like I don't want my kids saying it at school, but if somehow in society we didn't say the F word was a bad word, that F word can be used in so many instances for so many different things. I don't think swear words should be swear words. So Mr. Peace, who said, "Oh my God, I watch my mouth grow up," I disagree. I think you've been like anesthetized to the society that these certain words are swear words. That's just my piece. All right, so Chris,
motherfucker.
Thank you, Luke. Thank you, Luke. That was great. Okay, Chris, I'll shut up. Keep going.
Yeah, but Luke, I think you asked me what I was doing before this.
I did.
Oh, you did. I was a finance major and I worked in New York for a year. I started a business in college, and I was able to make enough money that I could quit my full-time job, traveled around a little bit, and then came back here. COVID hit and it kind of disrupted my old business. And I found a friend on LinkedIn. He was building this app called Iris, and I reached out to him and I was like, do you need a brand person, a user growth guy? And he was like, yeah. So I joined. It was me and him. We co-founded it. We launched it in September, and we're up to 25, 30,000 users after a couple months. We have partnerships with everyone. And the crazy thing is how I met Kayla initially was I saw her shopping TikTok video, and I was like, "This is
what you saw." What?
Have you seen her shopping TikTok video?
No.
Oh, Kayla, you want to tell them about it?
No, can you just reenact it?
Well, I think I could reenact the bull and the bear one for you guys
True.
quite fine. But the shopping TikTok was basically saying that if you're buying a call option, it's like calling up your friend at Ulta Beauty and putting something on hold. And if you decide that the price goes up, you can walk in, buy it for the price that you had, put it on hold for yesterday, and sell it on your way out. So
Nice. Okay, that's an awesome analogy.
Kayla.
Great.
Yeah.
Right? And
What's your TikTok name?
Girls talk stocks.
I was typing in. I was typing in Kayla.
Or you could also type in Robin Hood Kid, which is what I also go by.
But I found Kayla at what, like 4,000, 5,000 users. And I originally reached out to you to see if you wanted to work with us. It's like, hey, we're at 10,000 users. I would love to see if you want to bring your community on the app and also help us do it. And then I email a week later and she's like, yeah, 70,000 followers. I'm on this and I'm that. And I'm like, oh God, yeah, you're influencer status overnight.
Yeah, he's like, we're looking, for some faces. I was like, I'm not here to be an influencer. That's not my thing. This is not what I'm here for. And then he messaged me. I'm like, I hit 50,000 last night. I don't know what to do. I don't know what's happening.
Oops.
Whoops.
It's people want to connect and people want to relate to the people trading. But also Kayla she's brilliant in the sense that she took you don't have an experience in it, right? Like you haven't been trading forever. You know
Right.
of it, but
Right. Yeah, I started trading in November. I started learning about trading in November. So, to be able to have come January, what we were talking about with Iris is to be able to watch my trades, to be able to follow my own portfolio, to have other people, and I mean, even like the fun little graphics that you guys have. But I think being able to, when the group of girls that I chat with and the followers that I have, and they ask like, hey, what are we investing in? What can we do? Can we start a group chat? Can we do this? And I'm like, do you know how many apps I have to go to connect with all these? I'm like on TikTok, I'm on Facebook, I'm on Discord, I'll jump on Clubhouse, like the amount of apps just to talk about stocks. And so when Chris and Brian reached out, I was like, oh, one app that does it all? Sure. Yeah, that makes my life a lot easier. Yeah. And all of us can communicate. So it's fun for me as a user. And fun for my community to be able to touch base on that and to connect on that and share our portfolios and trades and whatnot.
So I'm going to ask you guys, what are some of the most popular tickers that you see flow through the platform, or what are like some of the trades that you guys have posted about that have been especially popular with the crowd?
Yeah, Luke, it's crazy. We can see, so we have a couple thousand portfolios already connected, and we were trading GameStop and AMC literally back in September, October. So we could see the ebbs and flows of, even with this whole fall, there was, I think, like $6 million made in our platform that we could track on GameStop and whatnot.
That's awesome.
Which is great, but a lot of people still get burned. I bought at 320, and then Robinhood said no more, and I lost. But you live and you learn.
Did you get in that day, that Robinhood day?
The day before the Robinhood day, that Wednesday,
If anybody out there in Zinger Nation got in that same day, hit the one. You gotta throw that one out there.
But I learned though. So but to answer your question, GameStop, a lot of the ones that are popular on Reddit and popular across the board are the ones that we see. But, Tesla has always been the most bought on our platform. SNDL obviously this week, but it's encouraging to see that everyone who got burned on the GameStop stuff, they didn't make the second, they didn't, repeat that with SNDL. A lot of us, we bought 3 days ago and then we sold yesterday and this morning. And then on top of that, I actually put in a post this morning saying, the puts look pretty cheap. Why not load up on some 15-cent puts and see if anything will change? And it tanked. But it all was we all could do it through being social. And we could do it by tracking each other's portfolios. And that's the beauty of it. Kayla, I don't know what on TikTok has been trending.
CCIV.
Yeah.
CCIV.
Yeah, that's
Lucid.
Yeah. Yeah, that's like the top one that I see. And actually, whenever I go live, it's like, SNDL and then, CCIV. It's like, what are your thoughts on these? What are your thoughts on these? I'm like, that and then.
Wait, do you have an opinion on them?
No, Chris, do you?
Not on CCIV, SNDL, I think that's an administration play. They just bought it because of the Biden administration, but CCIV, I think it's just been hyped because of Tesla. I bought CCIV. Yeah. I don't love CCIV, but I like the Chamath ones more. But
like SoFi, is that the?
Yeah, SoFi I think is going to be game changing because they have that social element of a public and of a Robinhood, but they also have a little bit of a wealth front betterment type of vibe with loans and whatnot. And I don't know if Robinhood's going to go public right now, but I think that space is hot.
Have you used SoFi?
I have not. I'm a Robinhood from the beginning, and I don't blame them for what happened last week. I think they got blamed because it was easy and it was funny, but I don't think it was their fault, and I don't think I'm ever going to switch. I love Robinhood. I think it's like an iPhone to me. Like I grew up with it.
I hear you. Yeah, I'm a fintechy, so I use every single one of these apps. SoFi has a decent amount of work to do to get it to be a little more user friendly.
But I like that Public Plug. The good friends of Benzinga over at Public. They have a really cool experience. If you guys are looking for brokerage and haven't checked that one out, check out Public. It's
they got to get options.
There you go, and tell them that they need options.
I think they think we're competitors with them, but
you're not.
I don't really
account.
All right, and we talked about CCIV for a minute. I've got a hot take on this
Chris,
one.
Chris, you're gonna find there's 20 people doing what you're doing, 20 people doing what Public's doing in the financial space. There are so many players, and what you'll find is there's so much market out there. Public, Public would say Robinhood maybe or Webull. I mean, you're not brokerage per se per trading. There's so many different players out there doing so many different things that if you just keep taking care of your customer, you'll win. That's the way I look at it.
We had a meeting yesterday with we had 50 of them on our call, and we were like trying to discuss how to go about like the verified idea, because everyone wants to. I had a couple of people Venmo me for this verified check.
No.
But why they Venmo you money that verified? Okay, yeah.
Yeah, you want to get on? I can verify. Kayla and I were verified because I don't think I should be verified. Kayla should be verified, but not me. But you two would be in that status. We can get you that coveted blue. That blue.
Coveted blue. Love it.
But Luke, you were saying about CCIV?
Yeah, I get asked about this one a lot, and I have the unpopular opinion, which is that I think the risk reward is off in this stock at $32, $34, whatever it's at right now. In that the language seems to imply that the deal is still likely going to happen, but it's a long way out. If that deal doesn't happen, I mean, this stock plummets overnight. Right. Yeah. I mean, it's already run from 10 to 34 or whatever it's at right now. I mean, how much higher could it go if a deal gets confirmed? Will it probably go higher? Yes, it'll probably go higher. But you're exposing yourself to some time decay while they try to work out the details. Plus, if that deal doesn't go through, you're going to get smoked on it. So that's my opinion on the CCIV trade.
What's your take on the sports betting industry? Because my biggest, I'm bullish on Penn and DraftKings mostly, but I've been seeing these other ones, Skills, because I don't understand how these states aren't going to legalize it in the next 5 years for the tax revenue. And it's only 4 states now. Like, what's your take on that stuff?
Jason's the expert here.
Yeah, you like Penn?
I like Penn. I own a lot of Penn. I've owned it for a long time. I like a lot of those players. I like the thing behind the thing. So I'm an investor in GAN. I'm also an investor in Scientific Games. So GAN I've been buying since 26 down to 16. Now it's at like 30. Scientific Games, SGMS, they enable a lot of the betting and they take a little riff on the thing. But I like Penn because they have a lot of the licenses in individual states. You're going to see they're going to launch 4 more states relatively soon.
Yeah.
That's not inside info, but
distribution too. I think that the name of the game these days, and I'm sure Kayla can talk about this, is whatever brand you're doing, if it's a consumer facing, you need distribution. The only way to do distribution is social channels. And then the social channels are run by the influencers. Like Kayla, you probably get hit up every day by a different app or company that wants to advertise because, that's why it's so valuable. And I think Penn is important with that because they have distribution already built out and they don't have to go after the influencers to do it. They have the Dave Portnoy.
But you heard he was retiring, didn't you?
I what?
You heard he was retiring, right?
Yeah. Then that stock will plummet. Who do you think is more important to their stock, Elon to Tesla or Portnoy to Penn?
That's a great question, man.
That is a good one. All right.
That is an
Eric,
article.
Yeah, put that on a
that's
Twitter
a great-
survey. That's a great one.
Aren't
Yeah,
you guys
no.
hiring writers? There you go.
Yeah, there you go. Right.
Yeah, you could be a writer. That's a great question, man. No, we just had Dave Portnoy in Michigan the past few
Yeah,
weeks.
he's
Hung out with
Michigan
him a few times.
Yeah.
Yeah, Luke,
All right,
when you watch him on video, look what watch he's wearing. Okay, Luke. He may be wearing a Shinola watch. That's a Detroit brand.
Best message of all time on the back. But guys, I have some sad or maybe some happy news, but I do have to bounce.
Sounds
I'm
good.
gonna leave you guys to it. Got to go hustle up some money.
Bye, guys.
Peace. Happy trading, everyone. I will see you back at it tomorrow. Actually, I'm going to be back at 3:00 doing crypto
All
trading.
right. So will you guys come on to give us more updates on Iris?
Yeah, definitely. I mean, the thing that's crazy about Iris is the bigger we grow, the more valuable the platform becomes. I'm a huge believer in. Yeah, I don't know where. I think Kayla, we lost her.
Because we were going. She thought it was like goodbye. Luke
Luke
doesn't know how to exit out
yes.
properly. He's a rookie at that shit, but it's all right.
Yeah. Then we can have the idea of the retail trader versus the hedge fund, the David versus Goliath story. I think that the retail trader needs a platform and needs a voice to stand up to some of this stuff. I think everyone's on the same side here, and like I was saying, the bigger Iris becomes, the more diverse and knowledge based we all become. For example, we talked about Penn. When Penn fell to $4, I went right to my dad and I was like, Dad, you got to put 50 grand into Penn at $4. Don't listen to what anyone says. That stock will not, if they go bankrupt, they go bankrupt. But that stock will fly. And I only knew that because I could.
Did you do it?
No, he didn't. He didn't do it.
Well, at the time, even Jim Cramer, who loves Penn, said there's bankruptcy risk.
But
it wasn't as easy of
a trade.
Yeah.
But another example though is like CRISPR Therapeutics. There's been people in our community that have been that's the wrong word, have been mentioning CRISPR because they work as a pharmacist or a technician in the labs, and they're like, this is what everyone uses. You wouldn't necessarily know that unless you're actually consuming it. The retail investors, we're becoming more and more important because we now not only consume the products, but now we're also buying the products as well. And that's where I think there's value in a social trading platform because now we're a double-edged sword.
I agree. So come on for more updates, man. Come on in the future, okay?
I appreciate it. Thank you.
It was
Thank you guys
good
for
having you on, Chris, from Iris.finance. All right, man. Thank you. Have a good rest of your Thursday.
Chris from Iris Finance in the App Store.
All right. Peace out.
Have a good one, guys.
Yep, you too, man. Thank you. Oh, I just removed myself. What the heck was that? There we go. All right, guys. Are you guys still with me? We had some good guests, great guests, awesome show, huge day of shows, biotech coming up, new guests, just awesome stuff. Anyway, do you guys see I have a different background today? Yeah, I stayed home. Remember, I was just like angry at things, and you guys were like, Jason, you got to get, you seem angry, you seem frustrated. I was. And so I decided to stay home and talk about things and get it out. So I'm actually glad Luke is gone right now. I'm glad Spencer's gone. I'm glad Rohan's gone. It's just me and you. And let's talk, because yesterday I was just super frustrated. Our Twitter links weren't working. I can't even log into our Instagram account right now. So I just needed a breather. And I find I get my best breather talking to you guys. Are any of you guys in MindMed, MMEDF? This morning they had news, but it's our Benzinga Pro. It's a OTC stock, so we mainly just cover NASDAQ, New York Stock Exchange. I found out we didn't have enough capacity to cover some of the OTC stocks. So what that means is we need another news desk person. On the news desk, you watch some of the wires. Wires are like press release services, tweets, and then you populate our feed so that our traders that are subscribing can be alerted to it first. Okay, the same thing that Reuters does or what have you. We need one more person for that, or maybe two. So if you think that you like watching the markets and you can report on it for our users, send an email to powerhour@benzinga.com with 3 bullet points on how much you love the markets and why you'd be good for the news desk. I was really frustrated we missed this item this morning. Then I see a lot of you guys are talking about UWMC in here. Is that correct? Yeah. Snap, Crackle, Pop has probably made over $100,000 using Benzinga and using like he saw it or she saw MMEDF when we had him on the small cap conference, FUV on the small cap conference, like 4 others. MVIS, I love Luke said he wasn't familiar with it. They presented at the small cap conference. If you bought every stock at that small cap conference, you're up 400%. Then I want to talk psychedelic plays with you guys. We need to talk psychedelic plays. We're going to do that in about 4 minutes. But I want to show you this. Don't show anyone. Right. Can you see? Those are my plays. Every day. See my plays? Because I was missing some of my plays, my setups. Got them right here on my arm. So now I can make my trades right there. I've been trimming some shares. I've been trimming some shares of stock, guys. I was at 294,000 in margin this past Friday, maybe 304 actually, around there. I am now $204,000 in margin. I have trimmed a lot of stock in a lot of areas. Some of the stocks that I have not trimmed as much, I own a company like Work, Slack. It's being bought out by Salesforce, but I want some of the Salesforce shares, so I'm hanging on to it. Luke also told you I have a new stock. I have a new stock. I will give it to you when we get another 50 likes. I have a new stock. This is Jason Brady. No, we'll talk about that in a second. We'll talk about this, okay? In this trading account, I don't know what else I have to do, but Upwork, guys, you guys keep selling too early. It's at $58. It's going to hit 60. What do I have to tell you guys? I mean, I bought 1,000 shares of it all the way down to $15 or $17, $18. I sold 200 shares of it. Fine. I sold 200 shares at 53. You're right. I did sell 200 shares. Okay. Sold a little bit. Okay. Scott Sundin, you're hired. If you want to write about the solar industry and you can write short little articles, like go to benzinga.com/electric space vehicles or /EV and look at that content. Can you write similar content? Join our EV team. Brent Sunderman, join the EV team. If you think you can join it, follow Aaron Bry's instructions. For any person we hire from a referral, it's $500 cash. iOS developer, whatever. Okay, so now we're going to talk psychedelics. Right now, if you're not here with me, we're talking psychedelics, you're going to miss out. You're going to find another trade here. I promise you guys. That's what I do. I make money for people. If I don't, then it's not worth me being here. For real. Okay, so we're looking at Numinous Wellness, LKYSF. That is what we're looking at. It is a pink sheet, but it has a decent market cap. What I'm going to do is I'm going to call the company. Okay, I need a phone number. I'm going to try to call the company, get them live on the show right now. Aaron, did you get what's his name on the show that Luke asked earlier? That company, Sundial, did you reach out? Sean Cruz, what? I really do what? Make money for people? Yes. That's what I'm here for. That's it. I would like you guys to be a member of Benzinga Pro. I keep trying to make it better for you guys and take it, but let's get this Numinous on the show right now. Hold on. Multi-year performance payroll payout of $800,000 in Numinous shares. Who's getting that? Numinous fund and complete transaction, $500,000 in cash on closing. So Numinous bought Mindspace Wellbeing by Dr. Joe Flanders. So now I'm going to look up Dr. Joe Flanders because they're giving him a lot of money. So I'm in Benzinga Pro right now. I'm not sharing my screen because I'm not sharing my screen. That's it. I'm just not. I just don't feel like pressing that button. I'm lazy. What am I tell you? I am researching this Numinous right now. It has 4,000 members to its podcast. They bought Mindspace, 800,000, 300,000, 100,000 shares. They got 500,000. So this is a small transaction, not a large one. So let's get Numinous on the phone. I'm on their website. Hold on. I'll share my screen. Okay, I see it, Caesar. You want me to share the screen? Caesar, if you want us to sell swag, why do you guys refuse to let me wear the swag? I don't get that. Just let me wear the swag. I don't know. Okay. There we go. My Med Truff. Okay. Mark Lavoie, we'll deal with you in 1 second. Okay, buddy? All right. We need a psychedelics watch list. I got you. But we want to call Numinous to see if this is something that you guys should own. Can we get a phone number on this? I need a phone number. I got a phone number. Okay. There it is. Now, who is the team? We're going to call the CEO right now. We are in this for the long run. Peyton. All right. Okay, I'm going to call Peyton, or I'm going to call. Do you guys want me to call Numinous live on the show? Can someone say yes or no? Ones or twos? What kind of teacher are you? Who said that? I need to see the team. They got a Stacy Wallen. Maybe I know her. Let's see. Nope, I don't know her. Okay, who else is on this team? Dr. John Fong. All right. I'm just going to call the CEO. All right, hold on. Even if you guys are bored, I would like to play some music, but I'm just not even going to try. I don't have a soundboard. I don't have this. I'm going to stop complaining, and I'm just going to do stuff. That's why I'm at home. I just don't want to be all right, I'm calling Numinous, guys. All right, 1-833. Come on. 686-4687. No, okay. I got to remember who I'm calling. I forgot the CEO's name. All right, Peyton. All right, here we go. Can we see your
Thank you for calling Numinous. Please leave a message and we'll return your call as soon as possible.
voice? Hey, this is Jason Raznick. I was looking for Peyton. I guess I missed you. I'm from Benzinga. We host the Benzinga Power Hour. A lot of the users, investors want us to interview you guys. We've had MindMed on before, Kevin O'Leary and the CEO. So I got your voicemail. If you can get a chance, give me a call back at 248-766-0000. It's again, 248-766-0000. Just want to ask questions about the company, future, all good stuff. We're, just trying to find out more about some psychedelic investments. All right. Thank you so much. Again, it's Jason Raznick from Benzinga, Benzinga. Thanks. Bye-bye. Elite Trader wrote name drop, whatever the fuck that means. Okay. Should I put Elite Trader in timeout, guys? What do you think? Should he get a penalty? Remember we put, a 2-minute major, or 5-minute, 2-minute minor, or 5-minute major. What do you guys think? I'll give it to him. Okay. All right. So we got to call. We're gonna do the watch list right now for the psychedelics. Okay, let's get this thing going. We need some music in the background. All right, if you can guess the song that I'm gonna play next, you win $1,000 from me right now. Name songs real quick. I'm gonna play it. Here we go. No answer. Okay, it's coming on. All right. Refined Warrior. You always say you're going to come on the show. Can you come on the show right now, Refined Warrior? Refined Warrior, can you come on the show? Or can you reach out for other psychedelic executives? All right. So let's go to other watch lists. How do I do that? Up here. I want to create a new watch list here. All right. How do you spell psychedelics? I don't even know how to spell that. You guys ready? Who wants to come on the show live with me right now as I'm doing this? I need to put. We're gonna call a couple more psychedelic CEOs in a second. I just need to know how to spell psychedelics. Clove is under SEC investigation. I don't own Clove. You guys all pressured me into club. I owned it for like 2 days and then I got out because I didn't understand the story. But I've been to Clove headquarters. Can someone tell me? Can someone type in psychedelics into the chat so I can spell it right? I don't want to go to Google. I need help on the psychedelic spelling. Someone type in psychedelics in the chat. No, Rick, you can have some music on in the background, but you can talk over it sometimes. I'll lower it if that okay. I lowered it. Thanks, Rick. CHEDEL HEDEL. All right. I got Peyton's direct line. He just reached out to me. We're going to call Peyton back in a second. All right. Type in the psychedelics I need to add to the list, guys. MMEDF. LKYSF. What else do we got? Come on, hurry up. Okay, Henry, if you've taken psychedelics, can you please come on the show right now? Truff. SNDL is not psychedelic, I don't think. You would know who Resigned Warrior is if she came on the show, but she's so scared. She's scared. So CNTQ is? Hey, what up, young investor? How are you, man? Don't get down on your stock. I know it's taken a beating the last couple days. SHRMF. All right, here we go. So OGI, what is that? All right, so here are my psychedelics. Now, I don't need the weeds. I need to Refined Warrior. You can't be defended. If you don't come on the show, we can't, you just come on the show. You can come on right now. I'll give you a link. You can come on right now. And then you can be defended. Defend yourself. I think you're being ignored. Who, Eric? All right. No, I'm going to call that guy in a second. Just give me a second. All right. That's my last stock I'm putting in here. Aaron, please don't put the symbols in the bottom right now. I got to do something with the team. Okay, here we go. Got to do this. We got to change this. I don't want the symbols in the car. Get that symbol off. I want to get a full screen. Why is there this blue background? I want a full screen. I don't want my face. I want the screen. Oh my God, I'm going to kill someone. I want the full screen of Benzinga Pro. What is this shit behind it? Remove this. Oh, why? Okay. Aaron Bree, why is my screen not being the full screen? The ticker stuff. Can anyone tell me that? I don't understand. All right, there's some technical thing going on here that I don't understand. Okay, guys, and it's pissing me off. But all right, it is what it is. They're trying. I can see they're trying to make my thing the full screen. No, that's me doing that. They're not doing anything. It's me. I am taking it easy. I stayed home today because I'm taking it easy. The ticker window is a different aspect. Okay. So it's me. I'm the one who's wrong on this. All right. Egg on my face. I'm going to go get an egg and crack it on my forehead. It was me. I made a mistake. Okay. So I'm going to go get an egg right now. I'm going to be right back. I'm going to crack it on my head. Can you guys wait, or should I call this next CEO? What do you guys want me to do? Want me to crack the egg on my forehead live, or do you want me to call the next CEO? You guys choose. Crack an egg on my forehead live for 1, or 2, call the next CEO. I made a mistake. It was me screwing up the screen, not Aaron Bree. What do you guys want me to do? Call or crack an egg? Because I fucked up. Egg, we got 1 vote for egg. I'll do whatever you guys say because I fucked up. It was no one else's fault except mine. That's the thing. You got to own it when you make mistakes. I made a mistake. No one else did, just me. Okay, so I'm getting a lot of people for calls. All right, we're going to do the call. Oh, we got 2 calls. All right, we got 2 eggs. I'll go get the egg and crack the egg on my head. Because when you make a mistake, you got to own it. I made a mistake. All right, so one thing I'm going to do here, guys, in Benzinga Pro, I'm going to zoom in, and this thing is so valuable for the notes, okay? So I'm going to write, what the hell? Okay, guys, I can't continue. So hold on. I got to call our developer. I can't type in my notes in. Zaid Nikshaka. I don't have his phone number. All right, hold on, guys. We're going to call Zaid in a second. Oh my God. Yep. We're calling Zaid. That's why you guys want to use Pro, because see how frustrated I get, and I'm sure you guys do too, but I'm not going to give up there for you guys. I'm going to do whatever I can to find out everything for you guys. No, I don't want it. Where's his phone number? I want his phone number. What is your phone number? 1 second. 1 second, team. All right, here we go, guys. We're calling Zaid. You guys are going to hear the behind. This is not a train idea. We're going to call the COA after this, but I can't do this without this working. I'm sorry, guys. But you're going to hear the behind the scenes at a company right now. If you want to log off right now because you're bored, I understand. Hey, Zaid.
Hey, what's up?
So did you last night you said you were going to put the word wrap on the notes column?
Yep.
Did that happen?
It's in QA right now. Waiting for Hamza to say okay on it, and then we ship it.
You said it was going to be shipped last night. You said
you said it doesn't matter, so I'm like, okay, if that's the process, we're gonna like go through the actual process.
Oh, well, you didn't tell me that. So, are you at your computer?
What is it?
Are you at your computer right now, by any chance?
Yeah. Yep.
All right. Can you go to YouTube?
Okay.
And then pull up the Benzinga live show.
Okay.
You're on the live show right now.
Oh, that's cool.
With my with Zinger Nation. You're live, and I'm trying to do something, and we're having some struggles.
Let's do it.
All right. Do you see the screen?
So get into it.
All right. When you're there, tell me.
Cool. Hello.
I'm here.
I'm there. Yep, I'm here.
Do you see the notes column?
Yep.
Because I'm trying to put notes in. I go put my note in, it goes away.
Where are you? Oh, there you go. There's a delay. Okay. Okay.
I'm zoomed in. If I go to 110%, goes away. What's going on?
Okay. Yeah.
Yesterday it worked for me, and today it doesn't. Why is that?
Okay. We made an update yesterday that might have caused an issue.
What kind of update?
It was an optimization update to the grid, so that like for calendars for it to actually load faster and stuff like that. Because if you notice, calendars is so much faster now. It uses the same grid that the watch list uses. But
I know, but
I guess
hold on.
something happened there.
Hold on. The calendars were a lot faster as of like a couple of weeks ago. So why are they making it again?
We're still working on them.
I know, but we got to move on and get to other things, and not just like for example, the advanced news feed was supposed to be out like a couple months ago. It's still not live. So like, why are we working on this? And then the notes, which worked great last night, except for the word wrap, now don't work. And so my question is, if we're keep making these changes and we don't know, like I was doing a demonstration because there's like 62 people that were going to try Benzinga Pro, and they wanted to see how the notes worked. So I literally was doing a live demonstration right now with everyone.
Yep.
And they don't work.
So here's a cool thing we could do instead. So the other place you can access notes, just in case you didn't know, is in the details view.
Yes.
So if you go to the details view, that's the other place you can access note as a workaround. And so
No, hold on. That's true. Hold on.
this change back. Sorry.
Hold on. That's true. But then I'd have to remember. Now, the other place, Zaid, if you mouse over, you can access notes right here on here. Look what I'm doing. You see that?
Yep. I added that.
I know, because John G gave you that idea, right?
Yeah, I guess. I don't remember. I think we've had a lot of discussions over it. Yeah. Let's just say
So to get around to that thing to fix there is to just do the mouse over, not to go to the details page. But then I can't even show. So all right. So now I put my note in. Let's see what happens. Okay, I put add, and then I'm here, and the notes column isn't populating. You'll see on your delayed YouTube feed. Do you see?
Yep.
Do you see how, I mean, YouTube's delayed. So, on the right side, the notes are supposed to show.
Yeah.
You guys got to figure out how to be get way more clarity on if something that you changed, fucks up something else.
Yeah.
And that's
yeah.
And then one more thing, on the where it says price change and all that stuff, how you can move those things and there's filters and all that. You know about that? On the top of the columns.
Yeah.
Top of the columns.
Yep. You're moving the columns around. Yeah.
Yep. It's hard to tell, Zaid, if there's lines there. Is there a way to make those lines clearer, like be like white in between or something, so you know where the line is?
Oh, you mean like a border?
Yes, a border on the column header. Is there a way to do that, man?
Yeah, we could probably. I can look into it. Yeah.
Just like a little line to know where to put your mouse to move it. You know what I'm saying? See? Yep. All right. So the notes thing, I did add the notes in, guys. They're not showing yet, but the note is showing right there. Calling the CEO today on NewMeds. MindMed's there, so you can put the note in. Although it says latest note, I thought I just put in MindMed. It was on small cap conference. Why is it not saving? All right, add. Is it not showing? How is it now it's showing? All right, so just look into that, Zaid, and try to figure out ways to figure out what the changes are. All right, we're calling the CEO. So Zaid, thank you for appearing. Guys, Zaid is a front end guy for Benzinga Pro that you're on right now. And if you're not using Benzinga Pro, he says, "What's up?" Say hi, Zaid.
Hey guys, hi everybody. Please let me know if you have any more issues like this. We're working on them. I promise.
Yep, little things can make a huge difference, and the inches are all right there. So, and that little thing that we just showed you how to enter the note with the mouse over may seem not important, but hugely awesome. So, all right, Zaid, go do your thing. They're saying, yo, Zaid. Thanks, Zaid. What up, Zaid? Keep him on the toes. Mouse or arrow? I don't know what he's saying, mouse or arrow. But guys, what's your email address, Zaid? If anyone has any feedback.
My email is zaid, ZAID @benzinga.com.
Okay, yeah. So ZAID @benzinga.com. Janet Lowe, you better be sending Zaid some emails. Janet Lowe has great feedback. So yeah. Bring it on. Alan Thomas, if you can help with those issues, send an email at powerhour@benzinga.com. We'll hire you yesterday. Sean Keen wrote, Zaid, I feel that Benzinga Pro may be too awesome for me.
Well, look forward to more awesomeness coming soon.
Yes, lots of stuff. We've hired like 7 developers in the last month. So, all right, Zaid, I'll talk to you. I got to call the CEO of this one company to see if he'll talk to me. Okay. Yeah. All right.
Good luck, guys. Have fun.
Thanks, Zaid. Thanks for being so available. I appreciate it. Thank you. Yep. Have a good day. Hope you had fun last night. Bye-bye. All right, guys, we're going to call the CEO of NewMeds now, the one that I told you guys about a minute ago. We're going to call him right now and see if he wants to talk on the air. If he doesn't, then I don't know what to tell you. That's, we'll get him another time, but just hold on. Let me save Zaid's phone number in my phone. I just got the CEO of NewMeds in my phone. Hold on. I'll mute you guys for a minute when I call. All right. So Aaron's coming through. All right, guys. I'm going to mute you guys for a second. Don't leave. I'm making a call. Here we go. This is CEO of NewMeds. Stock symbol and I'll LKYSF. I'm just going to mute you guys for a second.
Hi, you've reached Peyton Nyquist. Okay.
Press pound for more options.
Hey, Peyton. Hope you're having a good day. I called the main line, but it's probably the wrong line. This is Jason Raznick with Benzinga. Just reaching out to see if you're ever able to come on one of our shows on Benzinga. You can Google us and look up the Power Hour. We've had like MindMed on. A lot of our listeners were requesting for us to reach out to you guys. Usually I have a producer reach out, but one of our audience members said, here's Peyton's phone number. So I just reached out myself. Again, this is Jason Raznick at benzinga.com, or my email is jason@benzinga.com. Phone number is 248-766-0000. We have had CEOs of other psychedelics and cannabis to, Akerna, Jessica Billingsley on our show, and etc. So love to have you on in the next few days. Let us know when's a good time. And thank you again. And I know, and that's about it. Have a good day. Bye-bye. Yeah, I know we weren't muted. I turned the mute off when it was his voicemail. So when it was his voicemail, I turned the mute off. But I think I'm heading off because you guys have a way better show coming up than me. This is, Spencer Israel has a guest coming on or something like that, Mario, and interesting day in the market. Again, be careful, get bigger on positions that you're really confident in and trim ones that you're less confident in, or be risky. But like, here's our psychedelic watch list. Numismus is up 15%. HRMF is up 11%. And I think I'm gonna bring Isaiah Thomas on. He's the CEO of this company that's up like 80% this week. I think he's going to come on tomorrow for a little bit. So if you guys want to see Isaiah talk about his company, those are psychedelic stock symbols, Freddie, right here. I hope you can see them on the screen. I'll zoom in one thing, but I only have 48 seconds left. Again, Power Hour at benzinga.com. Twitter, we're at Benzinga. Check out Benzinga Pro. Check out Pre-Market Prep every morning from 8 to 9 a.m. It's our kickoff show. It's an amazing show. You get 3 great people. I come on the last 15 minutes. Tomorrow should be an interesting show since there was no like crazy moves the last couple of days. I guess there was in Sundial. But these are psychedelics. I'm going to start trying to do a lot more covered calls. No, Isaiah Thomas used to play for the Pistons. Yes. I was going to call him right now to come on, but Spencer has a show coming up. I'm good friends with Isaiah. I'm good friends with him. You want me to add those ones to the psychedelic list? All right. Spencer, do you want to come on so I roll it off to you so you can preview your show?
I can do that.
All right, here he is. You're Spencer.
How we doing, Raz?
Spencer, how are you?
How we doing, Raz?
How you doing? I tried to reach out to the CEO of a psychedelic company live on the show.
I know he didn't answer.
He didn't answer. I called a thing. I thought he would. I don't know. I was going to give him the option not to go live or to go live. And then I was going to do Isaiah Thomas, but then it got too late.
Yeah.
So what do you have coming up on your show?
You win some, you lose some. I've got Mario Stefanidis. He is the associate for equity research and a portfolio manager at Roundhill Investments. They just launched a new ETF literally yesterday. The first streaming ETF. The ticker is SUBZ. Subs, get it. We're going to talk all about that, all about streaming, the opportunity, what investors need to know. And we'll take questions. As always, we'll take questions from our chat.
So when you say streaming, you mean like investors like in Roku or Pluto? I mean, that's a private company.
Well, I don't know. That's the point. Mario knows. He's gonna be the one to tell me. But
okay, that's cool. I'm gonna listen in. Streaming is such a hot area, and I don't know enough. I don't know enough of the opportunities out in that space, to be honest.
So,
I do that. Okay.
As far as I know.
Well, I'll just say one last thing. Thank you, Ms. Shanigans. I'm going to add that in RV. And I'll put the notes that you gave that idea. That's the thing, guys. If I put them in my watch list, I want to give credit who gives the idea. So this guy, Revive, that's Shanat. What's his name? Okay. All right, Spencer, are you kicking me off?
I was going to, yeah.
All right. Have a good old day, man. Thank you.
All right. Thanks a lot, Rez. Okay, so as I just said, Mario Stefanidis, he is an associate for equity research and a portfolio manager at Roundhill Investments. Going to bring him on in a second. This is a new thing I want to try doing. I'm calling this fireside chat. It's what we when back in the before times when we used to have like real events, right? Like conferences where you could come and meet people. This was a recurring feature. We can't really do that now in person, so I'm calling this a fireside chat. It's going to be a nice little 20-30 minute conversation. I have this fun little video, so let's all relax. Let's all get a cup of coffee or hot chocolate or something, and we're going to learn about streaming together. And let me bring on my guest right now, Mario Stefanides from Roundhill Investments. Mario, thanks for coming on. How we doing?
We're doing good. And I love how you have Seinfeld in the background.
Hey,
is
thanks.
that because they're in Hulu right now, which is one of our portfolio companies, Disney?
No, it is not because of that. It is because we have a bunch of random. First of all, these aren't like fatheads, and they're not cardboard. They're like actual like hardwood. And we got them, and by we I mean our CEO Jason Resin got them at like a warehouse sale a few months ago.
Why are you lying to Mario? We got them because we knew you were coming on, Mario. Hulu is one of your portfolio companies. Exactly what you said, Mario. The rest
Exactly what he said. Exactly what he said. No, I prior to a couple days ago, Mario, I'd only had the 4, but I found a Newman like 2 days ago. He was like hiding in the corner, so I was able to add Newman. So that was fun. Real quick before we get started, I get made fun of this a lot. Pronunciation of your first name. Yeah,
it's a good question. So
thank you.
I call myself Mario. A lot of people call me Mario, but I think either works.
Okay? I just called you Mario, and I only did that because it's been beaten into me. But I always say Mario too. Okay,
I'm glad.
Thanks. So you're okay. You're from your lips to God's ears, Mario.
You're preaching to the choir.
Thank you. Okay, I'm going to tell everyone I know that I've been right this entire time. I'm going to play this video for them, so they'll never live it down. All right, let's talk streaming. Let's talk Roundhill. You've got this new ETF. I'm going to bring it up. I'll bring a chart up here on in a second. First off, the streaming ETF. How do you define streaming? Because I was going through the investor deck, and I guess you guys had a little bit of a different definition than I had considered before. So how do you define streaming?
Yeah, so in a nutshell, streaming is just the transmission of audio or video, or even both in some codecs, to an end user over the internet. And streaming really has taken on a lot of forms, and we're trying to capture all of those different sub-themes in our portfolio, not only across video, audio, health, even companies like Peloton, but also geographically as well.
Yeah, I hadn't considered. I don't know why I hadn't considered the audio aspect of it before. Everyone thinks streaming. They all think video, right? They think Netflix, they think Hulu, they think Roku. I hadn't considered audio, or really even like esports as part of that. But that's part of your universe.
Esports is not explicitly a part of our universe, but we do have streaming services that esports can be showed on. For example, two of our companies, Huya and Douyu, they're the 2 largest game streaming services in China, and they're both kind of doing the exact same thing, live streaming games to end users.
Right. So why create an ETF with specific exposure to streaming?
Well, we were kind of surprised when we were doing the research for it in the early stages that there was no other fund globally that just targeted streaming. And this is one of the hottest sectors, I think, in terms of people cutting the cord, in terms of people subscribing to services. You saw the launch of Disney Plus that caused Disney's stock price to single-handedly double. There's clearly a lot of momentum around streaming right now. So we wanted to be out of the gate with the first streaming product. And we did a lot of work. We came up with the methodology for what we wanted to include. And a few months later, here we are. We just went live yesterday. We traded just north of 1 million shares, which is, we couldn't be more ecstatic about it. And today it looks like we're going to do just north of 1 million shares again.
When you say you figured out the methodology, what goes into that? Like when you're doing research on creating a fund, what goes into that?
So first, we need to come up with a list of companies to include in our universe. And our universe ended up with maybe 2 or 3 times the names that are in the actual fund. And then the fun part is really taking all of those companies, deciding as a team if those companies are relevant to the theme of streaming, just how relevant they are, and if we're going to include them in the fund, what sort of weight do we want to assign to them? And all of that comes in the context of making sure we're diversified geographically and across, like you mentioned, audio, video, and all those other themes.
So let's talk about that exposure. Maybe we'll start with like the biggest names, the top 10, or maybe like how did you construct? Well, I guess it tracks the index, right?
It's an active fund.
It's an active fund. Oh
Mhm.
man. Whoa. Ring the bell, everybody. We got an active fund on our hands. All right. Now we're talking. So then let's talk about how did you go about constructing the basket?
So it's kind of active light in the sense that we're still going to continue to rebalance the fund quarterly, but I think being active really gives us discretion to add cool names intra-quarter into the fund to manage the liquidity of the fund. I think with some of the names we wanted to include, like Inke, for example, which is this Chinese video sharing company, they may not be liquid enough to facilitate the huge creates that we got on the first couple days, for example, but they are liquid enough to trade over a multiple day period. So that's something active really affords us the luxury of doing.
And just looking at like some of the largest names, a lot of them to be expected, right? Netflix is the largest, or Netflix and Roku, I guess, are the largest holdings right now, followed by Spotify, Tencent Music, and then you've got some Asia exposure there with JStream. Disney's in there, Billy's in there, Fubo's in there. So some names I'm sure a lot of people have heard of, and some maybe that they haven't. How conscious of an effort was it to get different exposure to different countries and different emerging markets?
It was conscious for sure, and just the way the fund is right now, it's about 50% US, it's about a quarter China, and the balance is in South Korea, Canada, Korea, and India, each with one name for each of those countries. And if we had it our way, we wish we could invest in other streaming services in other countries, but a lot of the US and particularly the US streaming services are multinational, so you are getting that exposure. Just to give you some example, Disney has Star, which is one of the largest streaming services in India. So some of the US names do indirectly give you that multinational exposure.
So you've got 35 holdings. Was that like the magic number? And you said you cut some out. What did you start with? And I guess why 35?
Well, I think the magic number is anywhere between 30 and 40.
Okay, why is that?
So you don't want to have too few names that you're not properly diversified and you're taking on a lot of idiosyncratic risk. But you also don't want to have too many names that your fund ends up looking like beta soup, as I like to call it, and you're not giving people targeted exposure to the theme. So when we narrowed it down, we definitely weren't going to include the same number of stocks that we had in our universe, but we also weren't going to trim it down excessively.
Yeah. When you're having conversations, I guess you've only just begun to have these conversations, but when you have conversations with investors, with institutions about the fund, or with advisors, what is like the main selling point?
So we haven't had conversations with institutions yet. I'm sure, as you know, our company strategy is primarily to target retail audiences, and we really saw that day one. The average trade size for subs was just under 300 shares. So we had a very large retail audience buying on day one. But if the conversations were to come up with advisors or institutions, the main selling point is people in America are cutting the cord. Right now, only about 20% of American households have cut the cord, and that's a number that's going to continue to grow, I think, exponentially. And as more and more people subscribe to streaming services, these services not only are going to increase their market size, but they also have a lot of pricing power. You saw Netflix increase recently the price of their service by $1, and the price of the stock kind of shot up by what that means for revenue, like 6 or 7%. So these streaming services, especially if they have really good content on them, they're going to have large followings, and they're going to have a lot of pricing power to increase their revenues going forward.
With a lot of these emerging technology funds, the argument a lot of times comes back to demographics, right? They say, "Oh, this is a demographics play. This is a planned demographics. This is the young people are doing this." Is this a demographics play, or is it just an everybody play?
I think it's an everybody play, but you're right. Especially the younger demographics are cutting the cord more than any other demographic. And as the older demographic kind of gets pushed out, that's another catalyst, I think, for streaming.
Yeah. So talk about the rebalancing. You said it's quarterly, right?
Mm-hmm.
So every quarter you're going to go in and do your buys and sells, but at the same time it's actively managed. So explain that, because we all know now, like the ARK Invest funds, they send an email out every day, right, with all their buys and sells. Is that the plan here, or still do the quarterly?
So we're exploring setting up some kind of system where we can notify people of our trades.
Yep.
But quarterly, I think, is going to be the primary cadence. But you can expect to see names trade intra-quarter as well. So quarterly, we're just doing to make sure everything is at the right weight. We don't want some stuff being disproportionately weighted to other things. But active also gives us the flexibility to make those decisions intra-quarter as well. I think it's just a lot more flexible approach for us to take and give our investors the best possible product.
Was it also like because there was just no index for you to track? I guess you could have made your own, but
yeah, we would, if we did go to the index route, we would have made our own.
Yeah.
Our other two ETFs, Nerd and Bets, are both self-indexed, where we come up with the names, but again, active is just more flexible.
All right, what names would people be surprised to see in the basket?
So one of my favorite names in the basket, which is in the top 10, is JStream, and this is a company not a lot of people know about, but they were the first company in Japan to offer streaming services. And by streaming services, I mean the content delivery network for companies to disseminate their streams, advertising services to monetize streams, kind of everything relating to the streaming ecosystem. And this is a really neat name because they have JStream as like kind of a holding company, and then they have 5 divisions that are all subject matter experts in different facets of the streaming universe. One of their subsidiaries, for example, is only keyed in on telemedicine. And this is a company that is currently exclusive to Japan, but I wouldn't be surprised if they start expanding internationally.
And this isn't traded in the US, right?
It trades in Japan, so we have a foreign holding in our fund.
And that right there is something that I haven't mentioned yet, but I would like to, is one of the advantages of ETFs is that if I wanted to buy JStream, I would have to go like set up a brokerage account in Japan and deal with like Forex conversions and it's a pain in the butt, right? Giant pain in the butt. Or you can get exposure to JStream via a fund like SUBZ, right? So it does the work for you in that sense. So yeah, I mean, you're not going to see JStream on your trading platform, on your Robinhood, your Webull, but there are other ways to get exposure, right?
And these are names that, since we've slowly become experts in these names over time, these are individual holdings that we can provide people. We can diversify our fund, and people might not be aware of them, but we think they're going to have outsized growth.
Yeah. So I mentioned you've got 35 holdings. I went through most of the top 10. Tell us like some of the other like lesser known names.
So Kuaishou was an IPO that just came out of China a couple weeks ago, and this is a really neat name. It's kind of like a hybrid of TikTok and Snapchat, where people are sharing short videos that they recorded to mass audiences. Snapchat is a neat platform, but in the end of the day, it's really one-to-one. You have stories, but they're really only being shared to your universe. This is a platform that allows short videos to go viral, similar to TikTok.
Yeah. Someone just asked in the chat if there's options. Probably not. I mean, the fund is 1 day old.
Yeah, the fund is 1 day old. Where
give them a break, people. Come on. It's been on the market for 24 hours.
It's a good question. I mean, Bets had options 1 week after it was launched.
Right.
Hopefully we followed the same cadence, but
Dear
we're
Lord,
working on getting options.
Come on. No options, but you're working on it? Okay.
Yep.
All right. Cool. What's the bear case here? For every bull case, there's a bear case. For every buyer, there's a seller. What is the bear case on streaming?
I think the bear case would be if cord cutting doesn't accelerate as fast as a lot of people think. If cable companies can somehow entice their users to not cut the cord, and they start expanding their offering somehow, I guess that's one negative case for the fund. But I think it's just unlikely to happen. I think the acceleration to streaming is already well underway.
What kind of and I know you're not giving specific investment advice, but like, what kind of allocation do you think is appropriate? If that's even
100%.
appropriate. No, in all seriousness, if that's a question you can answer, I mean, like what kind of allocation do you think?
No, it's a good question, and
wait, hold that thought, Lisa Marie. The ticker is up on the screen. It's SUBZ. Sorry, continue.
It's a good question, and this is something that we expect. This is something that's definitely a growth name, right? It's not a value ETF. It's not a high dividend paying ETF, and you can expect to see some volatility, but maybe like 10% could be something prudent.
Yeah. What about the cable traditional cable names, right? I mean, could there ever be a time when they get included in the basket if they, I mean, they're all doing it. They're all creating their own streaming platforms, right? So could there be a time when the fund also includes Viacom and Fox and Charter and others?
Well, I'll address Fox first. I mean, they sold most of their media holdings to Disney, so I don't think Fox would be included anytime soon. But in terms of some of the other ones, AT&T and Comcast are both in the fund, but at small weights. They're at about a 1% weight. And AT&T obviously has HBO Max. They're expanding HBO Max left and right. They just announced a push into Latin America. A couple months ago, they announced that all movies released this year would go on HBO Max and into brick and mortar theaters concurrently. And then Comcast is behind Peacock, which is another streaming service that's growing pretty fast. So we're going to include those names, but only on the basis of thematic relevance to streaming. And that's why you won't see something like Verizon in there.
Can we talk about what moves these stocks? Netflix just had a pretty monumental earnings report where they said, all right, we've gotten to a point, we're more mature, we're cash flow positive, we're spending gobbles of money on content, but we're not going to trying to raise new money right now or issue new debt. And they've gotten to that point where they were transitioning into more of a mature company. But in Netflix's history, what's always made of the stock go is growth, right? Growth. They've gotten to a point now where maybe the growth rate is not maybe, it is slowing down. So what moves these stocks higher, these streaming stocks? Is it just subscriber growth and that's the only number to pay attention to? It's primarily top line growth. You're right, these names are all being invested in for their potential. But I mean, you look at Netflix, they have hundreds of millions of users. They've already kind of made it, and all they really have to do now is continue to monetize that existing user base. I think internationally is something that's really exciting too. Countries like India, people that do subscribe to streaming services aren't paying more than $1 or $2 a month. Like Disney Star is, I think, $2 a month when you convert from rupees. But I think as those markets grow, the freemium model will also grow in importance as well. A lot of these services are ad supported in these emerging markets, but again, it's still a relatively small portion of revenue. So you kind of have a lot of tailwinds going. Yeah. Someone asked what the expense ratio is. I just had it up in front of me, but now it's 0.75%. How do you come up with that number? I'm just out of curiosity. I think that's competitive for other thematic ETFs, and our fund Bets, which is index, charges 75. So we're kind of giving you index plus like exposure for the same price. We're getting also questions about some of your other ETFs. Can you comment on other ETFs on like Bets, for example? Sure. So Bets is our sports betting ETF. So the specific question was potential catalysts. Sorry, potential catalysts for Bets. The big thing for Bets is regulatory loosening. So right now, sports betting in the United States is still not legal at the federal level. Individual states have begun to legalize on kind of an a la carte basis. And as more and more states come into this ecosystem, particularly states that really need to shore up their revenues post-COVID,
you're going to see the expansion of streaming. Even New York, which has been a key lobbying state for or sports betting, sorry. And I was going to say even New York, which has been a key state for sports betting, they just announced that both our governor and our state legislature was going to start looking at it. Although there is some disagreement there, I will note Cuomo wants a single operator model where New York is controlling everything, and then the legislature is more for a more traditional multi-operator model with 6 or 7 licenses being given out.
Let's talk, just potential downside, just so people watching know, ETFs don't necessarily stay on the market forever, right? Like what would have to happen? What's like the uncle point as far as timing and AUM is concerned for you guys where you to consider pulling?
So at this point, I can tell you based on the inflows that we've seen day one, which are not yet public because the funds haven't settled, we're not going to consider pulling this fund.
Well, I would presume you're not consider, but I guess it was more of a general question based on like prior funds. Like, is there a point?
The point is below the fund's break even for a sustained period, and different asset managers have different break even points. A lot of the larger players are able to keep ETFs open that are still close to seed, just because a lot of their costs are fixed rather than variable. But for smaller players, there is definitely a break-even point that it makes sense to possibly close an ETF. But even then, I think most give it 2 to 3 years before pulling the plug.
Yeah, sort of like the not fun part of the business to talk about there. Someone in the chat asked if it includes audio. Yes, Spotify's in there, Tencent Music, DME's in there. A big part of the fund. I think those two are like over 10%, I believe. Are there any upcoming IPOs that are on your radar for potential inclusion, or SPACs for that matter? I mean, I don't know.
We're always monitoring the universe, and we can't comment particularly on what we might include or not. But there are a lot of new services coming into the public sphere, and this is something that, again, we have the flexibility to add at our discretion anytime intra-quarter.
What are like some common attributes that you look for in a company for inclusion?
We want to make sure that they derive a substantial portion of the revenue from streaming. Okay. Disney is kind of a special one because streaming is not yet there, but the entire valuation of Disney, I think everyone would agree, is reliant on Disney Plus. So either current revenue that's being derived from streaming or prospects to continue growing an existing streaming business. But we do want to see that, and there's other metrics that we track as well. But we want to make sure that the fund is diversified and we can stand by all of the names that we're investing in.
Is there a target allocation as far as different countries are concerned that you want to stay with, or do you have no problem going to a more even allocation across North America and Asia and Europe over time?
There's no explicit target, but I mean, even now the fund is 50% US.
Right.
I can see it dipping further as new countries come up with their own services. I think it's really important to have a global perspective when it comes to streaming, because cord cutting is not a phenomenon exclusive to the United States.
Yeah, and then same question as far as market cap, right? Right now the fund is like 2/3 large caps, and I mean that's to be expected.
Mm-hmm. We define large caps as anything over 5 billion. I guess you have some leeway with how you call large and mid caps, but the median market cap in the fund right now is $10 billion. So it's not mega caps, but it's also not micro caps on average.
Okay. I'm going to ask you a question. I'm not sure if you can answer it, but if you can't, there's a workaround. Do you have a favorite of these? And if you can't answer that, do you have a favorite as far as content is concerned?
I mean, I like everything.
Okay.
But
as far as the content, give me the content.
I can tell you some of the shows I like.
Sure.
Queen's Gambit was fantastic.
Okay.
it's the most watched show on any streaming service ever. And it's kind of showing that Netflix is able to create one show for a relatively small budget that propels their market cap by the order of billions of dollars. So content is king, and we want to make sure that all of the companies that are content providers are putting out good content. But just to go back to one of the other names I mentioned, I think in terms of the technology companies that we have in here, so we have a handful of content delivery networks. We have a handful of companies that provide analytics to the large streaming providers, a handful of companies that provide marketing to the large streaming providers. But JStream, again, this is kind of a conglomerate in Japan that does all of those things that a lot of people don't know about.
That's an interesting point. How reliable is the information, the data on streaming, right? On viewership? Because I mean, I don't really think personally maybe that like the traditional cable viewership numbers are that reliable, like the Nielsen data. But how reliable are these numbers? Like when you say X million people watched Queen's Gambit, Netflix doesn't even disclose that stuff, right? Unless they choose to. So like how tell me more about this.
So it's kind of a mix of self-disclosures and third parties aggregating the data and putting forward their best guess, call it.
Yeah.
But at the end of the day, even Nielsen is really kind of guessing when it comes to linear TV.
Right.
So I think directionally, the numbers are very reliable. Maybe it's like plus or minus a couple million in terms of how many people actually watch the thing, but I think that they are fairly accurate. I mean, there's firms that are entirely set up to do this kind of thing.
Yeah, that's always been a question of mine. And then Netflix always says, gives these PRs where they give their viewership. I don't even know what a viewer is. Like, what counts as a viewer?
They have there's a few different metrics in the industry on how you define a viewer. Daily and monthly are the two most common frequencies. So you'll see DAUs and MAUs to refer to daily active users and monthly active users respectively. I think it's safe if a company doesn't disclose what they're using. They're probably using the widest metric. So someone who logged onto the service and watched a program once per month, call it.
You mean they watched it all the way through, or they just like played it and then 5 minutes later they
It could have been they just played it, but they logged into the service and actively participated in it.
All right, I'll have to do more digging because this always annoys me about the streamers. Netflix is like the because they don't disclose anything, right? It's all up to these third parties. But if you're saying the third party data is accurate, then I guess you would know better than I. But that's something I've always found frustrating about this. As much as I love streaming, I don't have cable. I have like 5 of these platforms that are in the fund, right? It's just like, don't know. I don't always know if we get the best numbers, but you're saying that the numbers can be trusted, so that's good. All right, Mario, as I'm saying your name correctly, as I would normally say it. Stefanidis is an associate for equity research and portfolio manager at Roundhill Investments. Again, the ticker has been up on the screen the entire time. SUBZ subs. Can I ask what some rejected tickers were?
Subs was kind of the first thing we.
The only one.
The second New York Stock Exchange said it was available, we jumped on it.
Okay.
I guess another one was STRM, but I think that's taken.
Okay. All right. All right. First time is the charm. I wasn't sure if you had any rejected candidates that, because hey, the ticker, the catchiness of the ticker can be a big part of this thing, right?
We also love our Z's at the end. We have bets which ends with a Z. We have subs which ends with a Z.
Yeah.
If we're going to do a 4-letter ticker, have it be catchy.
That's exactly it. All right, Mario, thanks a lot for the time. Super interesting. Again, to my knowledge, you said it, the only pure play on streaming, if you want to diversify within the theme, the SUBZ streaming ETF from Roundhill. Thanks a lot, Mario.
Yep. Thanks so much, Spencer.
All right. Let's go to our next show. It is 2:30. You know what that means. It's time for Biotech Buzz. Why is that banner still up there? Let's get that banner off. Biotech Buzz with Vivi, Bio Queen. Bring her on in a second. Let's bring her on now. Let's just do that. Vivi, how we doing today?
Good. How are you?
Fancy new headset you got there.
No, it's not. It's the same one.
It's the same one? Really?
Yes.
No, it's not. Is it really?
It is. Yes, it
All right,
is.
my powers of observation are incredibly weak. All right. How's your day? It has been an eventful day. For the second day in a row, we've actually had some action.
Yes. I've been watching the SPY. Every time it tries to recover, can recover. And I'm pretty negative on my account, but you know, like Yates on Twitter always says, the green days is the ones that you trim and the red days is the one you add. So there's just no reason right now. You got to trust the process. You got to trust what you own, you know?
Look, buying the dip has always worked. I say that with some level of sarcasm, but it's kind of true, right? Buying the dip in this market has usually worked. So
yeah. I have to say, I mean, even happens with the best people. So I decided to put a trade in. I was going to scalp Sundial, and I was at my boyfriend's house only with one laptop, and I got distracted. I went to do something. He called me in the garage, and next thing you know, I'm like holding a bag, and I'm like, damn it. But I believe it will bounce, but it happens with the best people. I had like to be on a minute chart nonstop, so I'll never do that. If I'm not at home with my double screens, I am not trading anymore.
Don't trade and drive, or don't drive and trade.
Yes, and then I was like literally checking my I had my son's money there, like a Weibo account, and I'm checking, you know, because I don't have the charts in front of me. I'm trying to drive and check the stock. It's really, really bad right now. I believe that, you know, it is gonna bounce back. You know, the shorts are having their day today, but it's okay. But everybody, you know, there's not everybody. It's one of those days that I'm not gonna cut. You know, I'm not gonna take a loss because I know it will bounce. It's pretty strong.
Okay.
So
okay.
But I wanted to tell you guys a couple of news. I don't know, people just like to sell everything, but KMPH just had they just had a news today that one of their patents got approved. FDA, you know, got one of the patents approved, not approved, just published. And this patent is to reduce the side effects of appetite and sleep. And so it's a patent that they can use in any kind of a drug development. So not only are we waiting for PDUFA March 2nd, but we are also just had some patent news. But unfortunately, you know, the market, it's not doing well. I do believe this is a great opportunity to add, if anybody, it's not on this company yet, because it's just going to bounce back. You know, like we said, you don't, the good thing about swing trading to catalysts is that you don't have to worry about the market. That stock is going to bounce because there's a catalyst coming, you know? So usually when I'm trading to catalysts, I don't even worry about the market. So I think it's a great opportunity to add over there. So, and looking, people are just freaking out a bit about ATNX. It's red. I mean, it's the PDUFA is February 28th. So we still have 17 days to go. So
I'm sorry, Vivi, what was the ticker?
ATNX.
Yeah.
So don't be scared, you know, to add more. I mean, it's short's gonna play games with you, and the MMs are gonna play games with you because everyone wants to get in earlier. So every time there's a PDUFA coming up, you see some commotion in regards to the price of the stock. Another one that somebody just updated with me on Twitter is the GTHX. So if you can open that one up. So the CEO just had a conference and said that they are expecting full FDA approval and on their lead candidate. And I am holding calls. I don't have comments on this, but I'm holding $20 calls, and the PDUFA expect on February 15th. So any day now, you guys, I expect a full approval on that one for sure. So, and then BCRX, I'm still holding, you guys. That's not going to change my sentiment about the stock. So I wouldn't worry about that. And then another one I want to talk to you guys about, because I saw in the chat, CBBT, I'm still holding full. My target price today is $1. And I'm still holding full on that account as well. And what are you up to, Spencer? In regards to, are you doing? Yeah, I hope you didn't trim on red days, right? Did you do some trimming today, or did you do some shopping today?
Unfortunately, my basket's pretty full at the moment. I don't have too much left on my shopping list. But no, I didn't do any trimming. Come on.
Yeah,
I don't let. I don't like, let's see what we're down today. I wouldn't know because I just lost one of my screens. So my screen with all my charts just went out. So I don't even know. But I'm not gonna. I don't let one little red day spook me. Maybe 4 or 5 little red days will spook me, but one little red day does not spook me. And I've seen this movie before, right? We've seen red days before in this market, and buying the dip has been rewarded every single time. So.
And again, I see the chat's going crazy. I will, we're just going to continue the format, you guys. We're going to talk about it, and at the end, I will try to answer as many questions as I can with you guys. But I wanted to talk to you guys about Inspire. I'm very inspired about this company, and there was some news that I just wanted to explain to the viewers, and some people might have some concerns. And so they just issue, I saw the SEC files, they are having a voting on March 17th, and they're going to vote rather if they are going to do a reverse split or not. And so a couple things I wanted to explain to you guys in regards to reverse split. Reverse splits is not always bad, right? I'm really, really concerned when you have a really, really big float and there's a reverse split. Because if you have a really, really big float and you do reverse split, you don't have the advantage of having some kind of a catalyst to push the price up as well as you would if you have a lower float. So if you guys look at Inspire, the float is only 34. So they're voting between 1.5 to 1.15. So imagine if you had a 34 million on a float, right? And you did, and that's how I usually do. I hold through reverse split, because all they want to do is, one, keep compliance. They want it to be more attractive to investors. So if you have a 34 million and divide by 5, all of a sudden the float's going to be 6.8 million. I doubt they're going to do 120, because 34 divided by 20, that would be 1.7 million float. It could be 2. So I am not worried, and I think that's why the price of the stock have not not suffer much today. So it's right now, you see this the chart is consolidating again at a 132. So I think that's is a very healthy looking chart, don't you think, Spencer?
I think I've seen worse.
See?
I've seen worse.
Yeah, I think it's looking. I mean, consider what the market's doing. I think it's looking pretty good right now. So I'm not worried about it at all, you guys, with the reverse split. The all the inside buys this week, they all they had a private offering of a 62 cents, and every inside guys bought in that offering, which it for me looks very, very bullish. And then when you have Gary Rubin, the cardiologist, that was a pioneer for stents. So somebody was asking me what interventionist is. Interventionists are the cardiologists that are putting stents in patients' heart when they have angina. And so he's the pioneer, and he holds 700,000 shares. And if there was a concern, they wouldn't issue a reverse split. So for me, that is a very, very bullish sign. Don't you agree with me, Spencer? Think about it. 700,000 shares from insiders.
Well,
So-
look, we always say there's a million reasons to sell. There's a million reasons for an insider to sell, and only one reason to buy. They could sell. They could sell because they're trying to buy a house, right?
Yeah.
They could sell because they're getting divorced. They could sell because they're bailing on the company. But why would they buy? There's only one reason to buy. And
Yes.
that's because they think it's going to go up. It is the only reason to buy. So
Yeah, and what I'm saying, I know for sure Gary Rubin, if you look at the SEC files, he bought up on that offering. So I know he did for sure. I didn't look at every single one of them, but these the offering closed, and then the reports came, and we saw that all these insiders, the CEO, there's like 3 or 4 insiders. So That's another suggestion, you guys. I know sometimes it's hard to read SEC files, but you want to read those SEC files and you want to learn how to read them, and you want to see what they report, and you want to learn how to read 10Ks, not in bio though. It's not going to matter much if a bio doesn't have a product, but you guys want to learn how to do that as well. Another thing I was going to show you guys here, I haven't sold any of my positions, so I'm still holding, HAJLI, even though I'm very, very in the red over here, but I'm holding a long term. And I'm still holding Trevina, TRVN, BCRX, ALT, because I do believe in the vaccine one day, so I'm just holding long. CRNE, I believe in the diagnostic area, so I'm still holding that. And so in terms of a catalyst, we're just really waiting for ATNX and GTHX and KMPH. So those are the three that I'm expecting that we're going to have approval. But like I said, you guys, you don't want to hold if you don't feel 100% confident, or if you have all your eggs in one basket, you might want it to not hold out through PDUFA. But I know my risk tolerance, so I'm holding them because it's a chunk of my portfolio. It's not the whole portfolio.
Wait, well, here's a good question.
Yeah.
How did you know that there was insider buying?
There's a SEC files, you guys. They just posted.
SEC filings. SEC filings is the answer to my question.
Yeah, yes. And I posted on my Twitter. You can see there. So and it says exactly when it closed and for how much. So it was the offering, because first I saw the SEC files talking about the offering at 62. Then I saw all those guys, the directors, the CEO bought at 62. Hello. And it was just like came out just right after the inside offering. And it's not the first time that Gary Rubin buys on an inside offering. So I think it's even more bullish than having, like BlackRock buying. Like you're doing an offering and you're raising money, but you having the people that work for the company that want to see the company succeed is buying that offering. And I think that's amazing.
You can find all SEC filings on the SEC Edgar database.
Yes.
We discussed this yesterday with one of our guests, but an invaluable resource. Let me bring myself on here. They're in Benzinga Pro, or just go to the Edgar database.
Yes, for sure.
The Edgar database,
valuable.
it's kind of a pain in the ass to search. If I'm being honest with you, it's much easier to search in Benzinga Pro if you have it. But the information is all there. It is all public.
Yes, for sure. For sure. You can't just rely on me to send you guys information. Come on. You guys got to do your own research. For sure. So I'm going to do this. So I'm going to go snowboarding in Park City. Am I going to have to bring my laptop and kind of show you guys the snow in the background? How's it going to be?
Wait, when are you going?
I'm super, super excited. I'm going on Thursday. Next Thursday.
What's today? Today's Thursday. Next Thursday.
Yes.
Okay.
I'm going to go. If anybody's there snowboarding at the canyons in Park City, hit me up.
All right.
And then I'm going to be going to Miami the following week. And so I guess I'll bring my laptop to Miami too.
Hey, okay, we said don't drive and trade. Don't snowboard and trade either. Okay, there's a recipe to either fall on your face or lose money, or both at the same time. Or do it and film yourself and send it to us, and we can all laugh at you. But,
I have a helmet.
You have a helmet. Yeah. Still though, don't board and trade. Don't do it. Okay.
No.
So people are asking what your Twitter handle is. It's up on the screen, guys. It's up on the screen at biotech_SD. I don't really know how else to make it easier for you to consume. All right. What else is on your watch list? And after we get through that, we'll go to the chat.
So let me see here. I am still very strong with the AKBA. So Kibia, I told you guys, I told you guys when it was $4 a share when I got it. So today is a $4.66, so which is awesome. So I'm still holding that one, and Arena, I'm still holding that, guys. AUPH, you guys have to be patient. They're launching their lupus nephritis. It's going to be an amazing medication. So sometimes you're just going to have to be patient. So one thing that I was going to tell you guys what I do as a strategy, especially if you have stocks on your Roth IRA. I usually, as soon as there's a PDUFA, like for example, with the Arena, I sold at 21 when we got approved. And I had 3,000 shares. I sold 2,000 shares right at the approval. Boom, and it went down to $15. So I went and bought those shares back. So that is some of my strategy, because people sell the news, right? So obviously you don't want to pay capital gains if it's in your account, but if it's in your IRA, why not? You know, you're not paying capital gains or capital losses in your IRA. So this is definitely something that I do it as often, and it's like textbook, you guys. Every time FDA approval, the price does not hold, unfortunately. So, but you want to leave a little bit, because what if there's announced buyout the same day as the FDA approval, and you don't want to miss the boat? But I would definitely recommend you guys to do that for sure. Are we almost at question time, Spencer? Do you want me to go over?
We can do some questions. We've got a few.
Yes.
Are you watching? Are you watching SNGX Sologenics? You know that one? SNGX?
No, I'm not watching that one.
Yeah.
Should I?
Someone says you should check it out. They have upcoming catalysts. I don't know anything.
Okay, so somebody just here, I saw get out of here. I bought BCRX at 10. Just add more. Like, you're not doomed. Are you kidding me? And just buy more. I mean, you guys have to calm your tits.
Not financial advice.
Down, okay?
Not financial advice. Not financial
yeah,
advice.
I know. I don't want to give you financial advice, but come on, guys. Then don't trade if you just like hold and trust the process and do your own DD, you know, and you'll be totally fine.
Yeah. That was great. Okay. What else? What other questions do we have here? Somebody asked, oh gosh, I lost it now. I have to scroll up and find the question. Bear with me.
I know there's so many questions. I see it here.
Did we talked about ATHE, right? Did we talk about that?
Which one?
ATHE.
No, I never heard of this one.
They have they have a drug for Parkinson's.
Okay, I'll take a look.
From the chat.
Yeah.
All right, so put that on your list. You have to have some notes for us tomorrow about that.
Yeah.
What else? Gosh, where do I find this darn question? Do you know anything about ADXS?
That looks familiar, but
Stacking says they have an upcoming FDA approval and they're a potential Merck takeout target. Okay.
Wow. Okay. Let me just type that down. ADXS. Okay.
All right.
I like any potential buyout candidates for sure.
What about VTGN? You know that one? Vistagen Therapeutics?
No, I do not know. I'll write that down too and see.
Man,
somebody said I should be snowboarding and live stream at the same time. That's going to be kind of hard.
They have VTGN has an antidepressant drug. That's the thing about biotech, man. There are so many of these companies.
Too many. There's but like I said, you guys, only 3 out of 10 make through phase 3. So it's like finding a needle in a haystack, literally, for sure.
Yeah. CYTH.
CYTA. Have not heard of this one.
Therapeutics. Okay. Hey, how you doing on your OCGN?
I never owned that one, you guys.
Oh, you didn't? I thought you were.
No, remember there was a huge trade. They bought it above the ask price.
Right.
Yeah, and I was like, I'm not paying $18, and I'm still not paying $11.
Okay, smart.
So yeah, no.
You don't have to swing at every pitch, right?
No.
Yeah.
You can have a foam on everything.
Yeah. All right. Again, what is your price target for KMPH?
I definitely at least 20 for sure. Yeah.
By when? 6 months? 12 months?
I would say by FDA approval. Again, you got to take in consideration that it's a low float, you know, so you don't need that many. If you have enough volume, it'll shoot the price up. So it's a very low float stock. So I definitely, and very slow, low market cap. So, and I would not be surprised if somebody buys KMPH. I'm holding shares on my E-Trade and shares on my IRA. I'm very bullish on this company for sure.
Who would be a potential takeover target? Who is someone that could theoretically, hypothetically, potentially buy KMPH?
Oh, Shire could be a potential buyer because Vyvanse is going out of patent. So if they still wanted to be an ADHD, any of those companies that are on a psychiatric side, they already have an antidepressant. Because what happened is, or an antipsychotic, companies want to use one rep to market 2 or 3 products. So they don't want to have to get a whole new sales force. So if you have a company based in oncology, they're not going to buy a product for ADHD. So it has to be, it has to flow with that company portfolio, So I would say any company that has antidepressant that they can add another one into the bag, for sure, or even an antipsychotic, because the psychiatrists are the main targets here.
Have you owned or traded any COVID plays? Like someone just mentioned Inovia.
No, I did. I had a list of a COVID plays. So
not
I
anymore.
had 5 or 6 companies. I lost my ass on IBIO. Jeez. It went all the way up. And then I made some money in IBIO. But I traded ADMA for their plasma. ALT I still own since $6, so I'm definitely I own this one. SRNE is still a COVID play for me.
Mm-hmm.
I'm holding CYDY is a COVID play. That one is long term, but I believe in their cancer drug, so it was not even a reason why about this company. And then I'm still holding Diamond Hands here with RLFTF. It's because they're still gonna read more of the data. They had a data release and it didn't reach statistical significance, but there is data on leaving the hospital earlier, so that can save billions to the hospitals. So I'm holding this one still, but I am definitely holding a bag. Hopefully it'll become a Gucci eventually, but it's a very heavy shopping.
Here's one, ears, Oris Medical.
I used to own this. I traded in and out. I don't remember the specifics of it, but yes, I've done that one.
What about the generic Teva?
I don't like Teva.
You don't like generics?
I just don't like Teva.
Okay.
I just don't like the company in general. I've met reps about that company. That company is a little shady for my liking.
Really?
So, yeah. So I don't touch Teva.
Interesting.
Teva got literally slapped with millions of fines, from trying to bribe doctors. It's just I just don't like that company.
All right.
Sorry, guys.
All right. Michael asks, what is the FDA fast track? What does that mean if a drug gets fast tracked?
Yeah, so there's priority review and there's fast track, and there's also orphan designation. So fast track is that they're gonna, the name says it all. They're gonna fast track it so it gets approved faster. So for example, with the Arena, it was fast tracked. So I think they approved within 6 months instead of like nine or 10 months. I don't remember exactly the dates, but yes, when it's fast tracked is they see a need to get that drug marketed as fast as they can. So, for lupus nephritis, there was nothing out there. So there was a fast track for that medication. Wow. Did you guys see here? SPY is trying to recover. Wow.
Buy the dip. We're almost flat for the day.
Yes.
We're almost flat for the day.
The chart here. Yeah. It's trying really hard. What else?
It's trying. Did I ask you about ear already?
Yes, you did.
Ears? I did, yeah. Okay.
I see here EVFM. People are hitting me up on Twitter.
What's that?
I have like some. I'm not completely sold. I know that you guys told me. So EVFM has a gel that prevents pregnancy. So it's like a 94 and it's not even 99% efficacious, maybe like 90. I would be wrong, I'm sorry, but it is an alternative for hormones. But here's my whole point is like, young girls don't want to wear lube, right? Lube is like for the really, really old women. So it's messy. Like if I have a teenager daughter, I would have put the implant on her, even if it is hormones, because when you have hormones, it's also going to help with their skin, with their acne. So yeah, you're going to have that niche of a patients that cannot tolerate any kind of hormones, don't want to do it. So yeah, there's got to be a niche, but what is the size of this niche? And I haven't bought it because my Planned Parenthood in San Diego never heard of it, even though they conducted trials all over the United States. So I'm still trying to dig a little deeper and just to see what kind of a market we're gonna see here. So I'm not 100% convinced, but I am is on my watch list. I'm trying to dig a little bit more about it.
Now the ticker is just starting to fly here. What about AIM? AIM.
Oh, I used to own that. It was a COVID play. Ooh. I lost money on that one too.
I would say most people have lost money on this one if you zoom out.
People are trying to get a lifeline. Like I took my losses, you know. You win some, you lose some. You can't win all.
Definitely not. Man.
I mean, think about it, like AIM, ADMN, they were all like COVID plays, but look at me. I hit ALT, I bought at $6. I had a 3,000 shares. It's at 21 now. So you're always going to have some winners and some losers, but AIM is definitely a loser for me.
Do a couple more and then we have to move on to our crypto show. What about CBBT? We discussed this earlier, so rewind to the show about 20 minutes. We did discuss CBBT at around 2:35, so 20 minutes ago or so. What about NVCN? Gosh, I don't know.
NVCN, I never heard of that one, guys. I'm sorry.
I'm not alone, man. All these stocks.
Okay, somebody's asking why CBBT fell. Have you guys not watched the market? I mean, OTCs are going to be a lot hit by it. There's no explanation. So here's what I do, guys. When I own OTCs, I always sell half on the high. When I have like a significant gains, I sell half. And then guess what? When it dips, I buy the other half. And then when it goes high, I sell. So that keeps my cost average down. So this is OTC. So don't ask me about OTC. You have to have the heart to handle because you're going to have ups and downs, It's not very stable. That's why you call pink sheet. So there's no new news. It's just the market, the market's been, red. So.
Yeah. I'm curious what tier of the OTC market CBBT trades on. They're on the this one is trade at your own risk. And this brings up an interesting point. Someone asks, why is my stock up? Why is my stock down? The first thing that I do, this goes for every day. The first thing that I do when I want to know why is the stock up, why is the stock down, first thing I do is I look at the overall market for that day. Is the S&P 500 up or is it down? Because if the S&P 500, there are days when the market sells off, correlations go to 1, right? Everything goes down. Usually, most things go on widespread sell-off days. Everything is red. Your company does not need news. It doesn't have to be news for your stock to go down with the overall market, right? On red days, correlations go to 1. Everything trades down. That's the first thing that I do. If I'm wondering, why is my stock up? Why is my stock down? Look at the overall market. You want to look at the difference between your stock and the overall market. If your stock is down more, then it probably led the way up too, right? And if your stock is down less, that's basically a win, right?
Yeah.
I mean, if the S&Ps are down 5% and you're down 2%, that's a win.
That's a win.
That's a win.
Yeah, you got. I follow SPY. My SPY chart is always on, always up. And so you will understand why are you down. I mean, don't worry about it. There's no news from any company. I mean, you would have seen SEC files or you would have seen press releases. It's just the market.
Yeah, sometimes you just have to know. like we deal with this with earnings too. A company reports great earnings and then it sells off the next day. Well, sometimes it's about timing. Sometimes timing matters more than the numbers. If like, so here's a good example. This is not biotech related, right? But Uber, actually, this is a bad example. No, it's not. Uber reported last night. They reported pretty good numbers. It's down today, right? The whole market is down today, though. It's coming back to flat. But point still stands. Sometimes it's just timing matters more than the numbers. All right, it's 3:01. We have to say goodbye. Vivi, BioQueen at biotech_SD. As
Bye, you
always,
guys.
thanks a lot.
I'll see you guys tomorrow.
We'll talk to you tomorrow.
Okay.
All right. It is time for a brand new show. We are experimenting here on Benzinga. We don't really know what we're doing half the time. We have new shows. Luke, what are you doing, man? We have new shows. Stop that. We have new shows that we are constantly working on, figuring out what works, what doesn't work. And here's one of those new shows. We're calling it the BZ Crypto Show. I'm going to bring on our host here in a second. Let's do this thing.
Hi, hello. Hi.
Hello. Yes.
Hi, hello, everyone.
How are we doing?
I'm great. How are you? Nice segment. I love it.
Thank you. I want to give Luke. I'll bring you on in a second. Don't worry. I want everyone to know just how dedicated Catherine is. Catherine, what time is it for you right now?
Okay. It's 11 p.m.
It's 11 p.m. Everyone.
Yeah,
it's 11 p.m. where she lives, and she's here with us. She stayed up way past her bedtime to do this. All right, let's bring on your co-pilot here, the noob to your expert, Hot Stocks Luke. How we doing?
All right, what's up?
Hi, hello.
Woo! We're
Woo!
doing this. First
We
crypto
are.
show, popular demand. We always deliver. That's what I like to say. So,
Yeah.
ready.
So I'm just take.
Yeah, no, I want to say this is going to be the structure of the show. Catherine's going to kind of walk you through what headlines she's seeing today, what's moving in the crypto space, and then I'm sure Luke has some dumb questions to ask.
Exactly.
And then Catherine's going to hopefully enlighten him a little bit. So with that being said, Catherine, I'm going to cede the floor to you and take it away.
Thank you so much. Okay, guys. Hey, hi, everyone. Thanks for joining us. We are actually trying a couple of things. So this is our first ever live show on crypto. Don't judge us too much because we're going to try things and see how it works. But the main idea is to sort of provide you with the latest insights, news, headlines, price movements, and to bring value. As I think it's our Benzinga's motto, to bring as much value as possible to our readers and traders out there. So as Spencer mentioned, I'm going to walk you through just a couple of headlines, and my dog is making sounds out there, so he's probably just want to join and talk about crypto, but he doesn't really look that good, so I'm just so
No,
I'm not-
I would be all for it if the dog wants to join. I mean, the dog noises are happy noises.
Okay, I'm gonna bring him on a little bit later, but we do have a lot of things to talk about. So first of all, today in the morning, Uber CEO was talking to CNBC Andrew Ross Sorkin about the fact that they are considering actually to bring crypto as payment. What would that mean? It would mean that you could pay for your ride and or to order to use Uber Eats with crypto. He does not specify which crypto it's going to be. He said crypto and or Bitcoin, which I think is it's actually a great sign of adoption. The thing that the crypto industry has been so eager about for such a long time. And to answer another question about whether they're going to add Bitcoin to their balance sheet, I'm just going to read this quote. We're going to keep our cash safe. We're not in the speculation business. So as you can see, the payment option, yes. Bringing it in the treasury of the company, no. Luke, do you have any comment that you would like to say? I know you want to say something.
I always want to say something.
Yeah.
But for the balance sheet item is what's super interesting to me, and not necessarily with Uber, but we saw it with Tesla. We saw Twitter's CFO said that they're strongly considering it. I have not been bullish on crypto before these past couple of weeks, and I haven't been bearish either. Right, I'm a stock guy. Right, I love stocks. You know, I mean, I eat, breathe, sleep stocks. That's my market. But we're hearing more and more of this chatter about companies adding it to the corporate treasury, holding Bitcoin on the balance sheet rather than cash. And this is like the first signal that I've really had where I'm like, okay, this market is interesting for me now. But I'm a crypto noob. I don't really know how to get involved. I don't know which currency to buy. So maybe you can help us with that at some point today too.
Oh, okay, for sure. As much as I can. You know, it's not investment advice.
Yeah.
So yeah, as you can see, Uber CEO is not that optimistic about adding it to its balance sheet yet. But the second, I think, biggest headline of today and yesterday is the fact that Twitter CFO went on CNBC last night and said that they are considering to add in Bitcoin and other cryptocurrency to their balance sheet. Why? Because they have been actually getting a lot of requests from clients, from vendors, and employers that work with them, employees, to pay them in crypto, right? So I think it's pretty exciting. And look, would you be willing to be paid in crypto?
No, not yet.
Okay, why not? Something is happening with my camera. Okay, better.
I don't really know the market yet. You know what I mean? It's sort of like I don't know. I just turned on to crypto, okay, like within the past 2 weeks, you know, to the point where, you know, okay, maybe I'll get into something, you know, look for some of these plays. But getting paid on it, the biggest issue that I would have, and the issue that I would imagine that brands have, we're actually sneak peek guys. We're working on Benzinga being able to set crypto as payment for our subscription products. But you know, me being sort of the finance, the money person here at Benzinga, right? I've got to make sure we've got enough cash to pay everybody. Money's coming in, money's going out. The biggest concern that I have from operating a business perspective is the price fluctuations versus USD, right? The 99.9% of the transactions that we do are in US dollars, you know, maybe less than that, maybe 98%, but there's other currencies that we interact with as well. But the vast majority are in US dollars. And so, you know, from, again, operating a company perspective, if the price is fluctuating versus USD a lot, it builds a lot of uncertainty into what I have to do, right? Like when I sent out payroll this morning, right, to all BZ team members, I sent that out in cash. You know, if we're holding a significant amount of crypto on the balance sheet and, you know, the price is fluctuating, then all of a sudden it comes time to send it as USD, you know, that's concerning for me.
Okay. So what do you think about the companies that pay in crypto, you know, pay salaries, pay other payments in crypto? What do you think about that? Are they in the speculative business? Are they mostly illegal? Or it's just like a good experiment to try?
I mean, I'm all for it, right? If the companies are choosing to do it, they're choosing to do it for a reason. And I'm going to think about this from a stock perspective, right? So one, it's a major PR play, right? And it sort of shows that they're futuristic and forward looking, you know. So I like that. And then two, I bet it helps them attract talent, right? So like as an example, the best engineers that we have here at Benzinga, the best software engineers are crypto nuts. Right, they would love to be paid in crypto. I've been asked that question many times. You know, and so if it works from a talent acquisition perspective, I'm all about it. And I imagine that companies like a Twitter have enough of a balance sheet where any sort of risk that they're taking on is minimal. You know, we're a smaller business. You know, so I've got to watch out for that and hang out for that. But I would imagine that they're appropriately, you know, managing that risk.
I personally was paid in crypto, but not for, you know, as a salary. I was hosting a couple of conferences and you know, my payment came in the form of crypto, which I am pretty happy about currently. I'm not complaining right now. Even though as a journalist, it sort of puts me in a little bit of a pickle, if you will. But I do disclose that I own just a fraction of Bitcoin and several Ethereums. Let me put it that way. But, you know, it's just as journalists, we are judged hugely if we own assets that we write about. But, you know, I'm just putting it out there. And I think the biggest issue for a lot of people who are paid in crypto, the first one is how to turn it into USD or any other currency, national currency, because unfortunately, you cannot pay everywhere with Bitcoin yet. if someone in a crypto maximalist is listening to us right now, we're gonna get there. I just don't want to offend anyone. Crypto industry is very sensitive. And then the second issue is like how to pay taxes, because IRS is very interested in your crypto assets and the fact that you have to pay taxes in them. So I think one of the biggest headlines of today, also the fact that Bank of New York Mellon Corporation has announced that they're going to offer Bitcoin and other digital asset custody service this year, which is this is actually pretty big. This makes the bank the country's first multi-asset digital custody platform to service both traditional assets and digital assets. I did not expect this news from Bank of New York Mellon. Honestly, I did not. But so according to today's announcement, the bank will form a new enterprise called Digital Assets until they will be able to address clients' needs in regards to digital assets, including cryptocurrency. Let me circle back 2 years ago when we have Jamie Dimon and other CEOs, including, unfortunately, this is personally breaks my heart, including Charlie Munger and Warren Buffett, who on different occasions called crypto, Bitcoin specifically, a rat poison. And then Jamie Dimon saying that trading Bitcoin, I believe he used the word only idiots would trade Bitcoin, and circle back to today, where Bank of New York Mellon is the first one to offer Bitcoin and other digital assets. I think this sort of this makes crypto looks good, and I think we've lost Luke. Look, are you there? No.
Yes. No. I'm still here. Spencer Israel just pulled me off the screen, but no, I'm still here. I'll don't worry. I'm not leaving.
Have you been mean to him? Honestly, did you say something?
A little, yes, always. But it's mutual.
Okay.
He's very mean to me too.
That's a
but I do want to set a baseline for our Zinger Nation crowd out there. That's all of you hanging out in the chat with us all day. If you guys currently hold digital assets, I don't. Throw me the one in the chat. If you don't, you're like me. Throw the two. I label myself as crypto curious and want to learn more about the space, which is why I'm here today.
Yeah, and then
but I'm curious where everyone's at.
If you guys have questions, just make sure to ask them in the chat. We're not seeing them right now, but we will be able to see them a little bit later today, and we'll try to address them. We're very interested in what you guys are looking at, what kind of questions you have, because again, we want to bring as much value as possible. So I want to talk about the person who is highly popular social media influencer. Let me put it that way. If you can call Elon Musk a social media influencer, which he is, and I think he's actually might be the biggest one so far right now. I've heard that Rock, the actor, is also very popular, but in our space, and I'm talking about business, crypto, finance, Elon Musk might be the biggest social media influencer. So I'm sure you've heard about the news about the fact that Tesla is investing $1.5 billion worth of Bitcoin. And they are getting ready to accept Bitcoin as a form of payment. But the news that I want to discuss with you guys is not this particular news, but the further developments and comments, which is surprisingly unsettling, I would say. Not a lot of people in the crypto space are actually happy with what Elon does. If you have been following him on Twitter, you might have seen him supporting Dogecoin a lot. With different memes and putting the fact that he's the CEO of Dogecoin in his bio. It might be just a joke for people who do not actually follow crypto that close, but all of his tweets, all of the tweets that were related to the crypto space have actually caused pretty big price spikes. And it's not the healthiest way to go, not for everyone. It might be used, you might use this opportunity as a speculative timing and, trade a little bit, but you also might lose a lot of a lot of your money and income that you've put there. So let me just sort of read to you several comments. So there's
Okay,
this.
wait, and hold on. I'm going to stop you really quick.
Okay.
So as a non-crypto person, right?
Mhm.
All the Elon crypto pumping that we've seen over the past several
Mhm.
weeks, I would have imagined the crypto community likes, just because it draws more attention from a lot of eyeballs. But you're suggesting that it's the opposite, that the crypto community wants them to like basically STF you.
Yes, I'm not. Well, I'm not saying that everybody's unhappy. What I'm saying is that there are concerns, and let me just explain a little bit. The cryptocurrency itself is not only about trading assets, right? So the entire idea behind it and behind the Bitcoin white paper is the fact that it was created. A new form of money was created to give people power, to build an infrastructure on top of blockchain that will erase middlemen, right? And that's why for people who are not into crypto that much, they might think that this is all about coins that are listed on CoinMarketCap or CoinGecko, whatever data platform you're using, or TradingView, but it's not. The fact is that almost every single coin that is out there that you can buy and trade represents a project and an ecosystem that creates certain products to make our life better, richer, better, brighter, what have you, right? So, and sometimes in this particular bull run and in this crazy trading craze that we haven't seen, you might forget about the fact that it's not all about how much money you can make trading this coin. And so I think there are a lot of, so as a disclaimer, I would like to put that there are a lot of Bitcoin maximalists, crypto maximalists, and they hold the views that I've just mentioned, right? So, and we have a lot of memes. I personally made a video making fun of people in the bull run and the bear run. When it's a bear run out there, you hear and you read Twitter on this is all about technology. We're gonna get there. We're gonna make the world a better place. And when it's a bull run, what you see is like, oh my God, I've made so much money. I'm gonna buy another house. So that's sort of the tweets that you are seeing out there. So let me just so Nick Carter is a very prominent person in the crypto space. He's currently a venture capitalist, and he has experience in software engineering. So he thinks that this particular, as I've mentioned, Elon Musk's tweets are a vehicle for speculation. And his quote is as follows: "Unfortunately, a lot of retail punters are going to lose money on Dogecoin in the long term because there's really not much there in terms of interest in technology, right? And the only thing that it can really do is the zombified and stick around and be an empty shell for people's expectations and for their entertainment." Not the nicest version of what I've just said, but look, you've asked me actually recently, right? Do I think that Dogecoin is going to overtake Bitcoin? What was your question?
I said that. Okay, I do own a little bit of Dogecoin. Just because I think it's funny. I sort of own it as as the meme. But if it gets to $10,000, I'll be able to retire. And I asked you if how realistic is that, and the answer was not at all. And can you address the question of is it a joke, right? Was it created as a joke? I am reading the questions as they're coming in, and it seems like a lot of people are saying like they don't really get it, right? Like why is this being pumped? Is it a serious thing? Long-term use cases, anything along those lines. Let's just address that head on.
Yeah, so Dogecoin was created in actually a very long time ago, if you count in crypto years. It was created in 2013 by software engineers Billy Marcus and Jackson Palmer. And they designed it just as a fun alternative to Bitcoin. Because as I've mentioned, there are Bitcoin maximalists who are crazy about the technology and the philosophy behind the technology, right? So, and Dogecoin was just a meme of this Shiba dog that was popular at the time, and memes that were popular at the time. And it doesn't necessarily have any other meaning besides just being a fun alternative at the time. And for a very long time, it was traded not higher than $1. It didn't really reach $1 until very recently, right? So it was for almost 8 years, it was below $1. I think it was like last year when Elon Musk tweeted recently all of a sudden about Dogecoin, and it went up, but it just quickly went down. So you have to be very careful. Actually, I'm gonna say it out loud. You have to be very careful, about investing in general, but investing a lot of money into cryptocurrency. Please do not be like my dad. Because he called me last night and was like, he has his own business. He's like this very old school guy. And he called me and said, I want to quit my business and I want to trade crypto full time. Teach me. And I'm like, yeah, no, okay, bye. Because you have to be very careful about putting your money out there, and because you have to read. You actually have to read a lot about the project behind this coin, because there is a project, there is team. They are building something. There is a product that they're spending your money on. So you have to be very careful about what kind of project you're doing. And when it comes to Dogecoin, there is no project. It's just a coin that is out there. So you have to be very careful. And
so like, is like the in short answer when you say that there is no project, does that mean that there's not really a practical use case, or do you mean something different by that?
No. There's it just exists for fun. That's it. There are no use case so far. Okay. If you can call, this particular trading craze might be the use case, the only use case for this coin, but nothing else. So you have to understand that when Elon stops tweeting about it, the price will eventually go down, and you can lose a lot of money. And I know for a fact, one guy from our team from Benzinga told me that he put $50 there, and right now it's 47. So he's very sad. He lost $3 on Dogecoin. Oh my God. Yes. And so to your question, why it has been going up. Remember the time when the GameStop scandal, let me put it that way, when the GameStop Reddit thing happened? So that was actually a couple of days after that. Several Reddit users just said, let's pump Dogecoin. I'm not kidding. This is exactly what happened. Someone on Reddit said, I want Doge to go higher than $1. Let's do it. Yeah. And so it just happened at the same time. So, and a lot of attention was put into that. But let me just give you as an example. Even though Elon has been supportive of this coin, he has put his money into Bitcoin. Can you hear me? 1.5 billion in Bitcoin, not in Dogecoin. I think this is, this has to be an example of how he thinks. And I've actually heard from the people that I talked to in the crypto space, I've heard the theory that he's just been downplaying Bitcoin, because it has gone down a little bit while he was tweeting about Dogecoin, and all eyes were on this meme coin. Bitcoin did go down a little bit, 5-6%, but in the crypto space, it's a little bit. So yeah, be careful. Just to anyone out there who's thinking about investing in cryptocurrencies, please be careful and choose wisely.
There you go.
Yeah.
And
go on. Yeah.
Okay. I was gonna say I've been jotting down some questions out of the chat. Okay. Can I rapid fire you some of them?
Okay. All
right. There's only four. I only have four right now. And guys, again, like Spencer said when he introed us, that this is a new thing that we're trying. I'm dropping an email address in the chat. It's powerhour@benzinga.com. If you like the show, you didn't like the show, you have other topics you want us to cover tomorrow with regards to crypto, let us know, and we'll deliver for you guys. That's what we're doing. We're in this together.
So I won't lose my job. Thank you.
Yeah. All right. So first question came in at the top of the segment is what creates valuation? Or I guess value. I think is what the user meant when it comes to these cryptocurrencies, right? How is there value to it?
That's a good one. That's a very good question. So as I've mentioned, there are different data platforms. I'm personally using CoinMarketCap. So if you go to coinmarketcap.com right now, you could see on the main page, you could see names. There is an entire list of cryptocurrencies that we have, I think, 8,000 cryptocurrencies right now. So you can see name, price, market cap, volume, and circulating supply. So what creates value is actually trading, to be honest. So how it usually happens in the crypto space, there is a project that puts a white paper out there. White paper, it's a document, an online document usually, that describes the entire idea behind the project or the product that this company and this team is going to build, what they're going to achieve. And they issued coins, right? Coins to trade. And so people just buy them. So that's basically what we're talking about. This is the same thing as going public. And like you're issuing your coins the same way as you issue stocks, only you don't have to go through SEC and 80 other, different activities. So you just issue them online so people could buy it. And the more people buy it, the more the price goes up. The more people sell it, the more the price goes down. So, as easy as that.
It's just a supply and demand line.
Yes.
Okay. All right. Next one. I think I'm going to pronounce this right, but I don't know. Celo, CELO. I think it's a specific currency that somebody's asking about. If you have an opinion on that at all.
I have not heard about this one.
All right, come back tomorrow. We'll do some research on it.
Can you spell it again? Is it C or S?
Charlie Echo Lima Oscar.
Okay. No, I have not heard about it.
All right. Well, there you go. We got a little bit of homework. Okay.
But they're at 8,000. Just 8,000.
Yes, exactly. All right, there's 5,000 stocks. We have 4,000 of them, but no. All right, best apps or websites to trade crypto.
To trade or to learn how to trade.
To trade was the question.
Okay, so to answer your question, you have to understand where you are, right? Basically, it depends on your location, but I'm assuming that we're talking with a person who's US based, right? And I hope that nobody in the crypto space will, criticize me afterwards, but there are different crypto exchanges out there. I think one of the most popular and the biggest exchange in the US is Coinbase. Obviously, the company is actually going public this year, which is a very good sign for the. It usually means that everything is pretty cool with the company. They're clean and clear, and they're willing to take this step. Yep. So Coinbase.
Fast audits.
yeah. Woo! So trade there. It's not investment advice, not at all. Yeah. So Coinbase is pretty great. Kraken is also one of the biggest exchanges that is available to the US customers. Binance is actually the biggest exchange in the world. The company was founded in Asia, in Hong Kong and in Shanghai. They expanded into Asia, but they did open Binance US last year, and so they're pretty great guys. And the CEO is a very nice guy, so you can follow CZ. His name is CZ, so you can follow him on Twitter. He always sort of keeps you updated on what's going on with your money, and I think this is actually a great thing to do for a CEO to keep their users updated about what's going on with the exchange. So Coinbase, Kraken, Binance US. There is also OKEX, which is both San Francisco based and Hong Kong based. I think they have different entities there. So these are top 4 in the US, and these are like the biggest name in the crypto space that we trust, and they work very well with journalists. Just putting it out there, which is like, all
right.
This is a good sign. Yeah, this is a good sign. But yeah, this is pretty much, you have a lot bigger list of them, but the 4 that you can trust is I've just mentioned. So hopefully this is useful.
That's useful. All right. And I just got a note. I tore it in half. But I did get this note from Spencer Israel saying that we have 2 minutes left. I have 2 more questions. There's like I have 18 more questions on the sheet, but I'm just gonna pull the questions that have been asked the most. Cardano, any opinion on that?
Oh my God, Cardano has the biggest community ever, actually. So Cardano is a cryptocurrency and ecosystem that was created by Charles Hoskinson, the person that is greatly valued and appreciated in the crypto space. He's one of the co-founder of Ethereum, which is the second leading cryptocurrency out there. Ethereum is actually very much liked by its ecosystem. You can use Ethereum blockchain to build other coins on top of that, which is like, it creates bigger value for the currency. So Cardano is a peer-reviewed platform of cryptocurrency. It has, it is very much liked in the space. That's what I'm going to say. It's just there was a recent a conflict between Cardano and one of the media companies. So I'm not going to go into that. That might have thrown a little bit of shade on that. But the technology itself is very, very trustworthy, and the coin has been going up pretty steadily. So
it's interesting. Okay, and then the very last one, Spencer Israel is nagging me right now. Is it wine? Is that wine that you're drinking? We got a lot of questions about that.
Yes, it is wine.
Go to a break. It's 11:30 p.m. in Catherine's part of the world right now. She's hanging out with us. Look at this. It's only 3:30 for me, so I'm still on Diet Cokes. But all right, guys.
Of being overseas, apparently. Yeah. Yes. Oh, so that was the last question, right?
That was it. We got to pass it back to Spencer. Guys, I'm dropping the email address in again. It's powerhour@benzinga.com. Again, it's powerhour@benzinga.com. We want this to be the most useful segment possible for you guys. We always deliver, or at least we try to. So send us any feedback. We want to hear it. We got so many awesome comments. But tell us how we make it better. And yes, it is wine o'clock, baby. Frank M has got it spot on.
Yeah.
Thanks a lot, Catherine and
Thank
Luke.
you so much for having me. Yeah. Okay.
All right. I think we all know that that's not really Diet Coke in Luke's can, but that's quite all right. All right. It is time for pre-market prep at the close. I forgot my soundboard, my sound effects board, so I'll just bring Joel on with very little fanfare. Joel, second day in a row, we've had some excitement out there.
Yeah, good afternoon, traders and investors. Boy, we got some stuff to talk about here. Some pretty wicked sell-offs in the marijuana sector that actually started during our show. Just a quick check under the hood.
Oh, wait, show us those charts.
All right. S&Ps did dip again under 3,900. Caught a bid ahead of yesterday's low, which is a good thing. Yesterday's low, I believe, was down at 34.78. This time we stopped at 38.84.50, back in the 3,900 handle, heading into the final day of the week. Crude snaps at 9-day winning streak, down 77.76 cents here at 57.92. Big run for that. So a little pullback that's really nothing in comparison to the rally that it's had. Gold running the problems at $18.50. It's down $18.40 at $18.24.30. Silver, that's down 3 cents at $27.05. And Bitcoin itching its way towards 50K, up $4,195 at $49,110. Spencer, what would you like to cover today?
So many things, Joel. So many things. Well, first off, I mean, you already mentioned it, but what about those cannabis stocks, right? I mean, how many times we talk about it? What leads you up leads you down.
I don't know. I mean, ran out of buyers. I mean, that's all you could say in this. I'll pull up the pre-market action. They were up there. They had a big reversal off the close yesterday, trading higher in the pre-market, and then someone said enough is enough. Uninitiated 2-for-1 stock split here intraday in Tilray. You get the profit taking, starting to fill the gap from a couple days ago. But once again, you get the overhead supply issue and things start to come down. So it's hard to sell when it's going up, but man, oh man, when it turns, it turns. Tilray, to fill that gap that you had, I believe in Monday's session, that would come in at 30.60. CGC, that is deep in the red too. I think that got up to like $55, didn't it, in pre-market trading? Let me see. Yeah, just about over 54, now down at 40. So if you were looking for a pullback in this one, you're in the area from where it launched, 38.92 and 40.50. A couple levels, psychological $40 level, but coming down pretty hard and pretty fast. APHA, that was a little bit late to get going, but it's participating on the downside here. Full participation. This one got over 30 yesterday, so that peaked yesterday. all these stocks are just coming in, folks. Maybe wait for them to stop going down. I see some lows at the $15 area, 15.15, 15.16. That was the launching, the lows before it launched on Tuesday, Wednesday, and part of today.
Joel, we have to mention Aurora Cannabis. They do report earnings tonight. Here's the silver lining, right? It's been a really bad day for ACB, right? It's down 22%. That being said, the bar is low. Now the bar is lower for ACB.
Yeah, this one a little bit more in check than some of the other ones. At least on the upside, this one did give you almost gave you a look at yesterday's high, 1898. Only got to 1893, and now trading on the lows of the session. Just don't know how the street's going to react to this report. I would anticipate on a pop here, the way you came down hard in that red candle, I think some people will be willing to sell the pop. On a drop, we got a couple lows in this area. Let's just call it 1260, and then it drops to the lower $11 handle. But after the few days of action, and then especially today, overhead supply once again in ACB.
All right, somebody's been tweeting at me about Hyliion. I don't know if you saw. So obviously, like the stock is up big today, but Joel, if you want to look at the daily and just look at the volume that Hyliion had today, Hyliion has, I think, like almost 58 million shares have traded today. That like trumps any volume from any point last year from the SPAC merger. This thing got to $58 last year, but the volume was a fraction of today's. So we are just seeing some insane action. I get it that it was it's been by and large a lackluster day, and Hyliion's been like the shining star today. Yeah, they had good news. Well, no, I shouldn't say. I mean, they had news. They unveiled some new battery, right? Like a new kind of battery module. I guess that's good news. Is it worth 6%? Probably not. Well, yeah, because the market says so, but in reality, probably not. Still, though, the volume today that stood out to me. That was like the main thing that jumped out.
You had just 1, 2, 3, 4, 5, 6 days in a range. Let's just call it 15.5 to 16.5, right? So when you get a consolidated range like that, boom, then you get a catalyst, and it cleared 1650. The machines kicked in, started buying. They didn't stop until they got to 22.25. Over $2 off that high. Now it's gonna be a little tougher sledding going up, but yeah, just a breakout. Good old fashioned breakout instigated by news at 1650.
Yeah, I mean that's your big winner of the day. So back to the overall market. I mean, Joel, we sold off there for a hot second. We're back to flat, right? The S&Ps are flat. The Russell 2000 is just a smidge in the red, and the Nasdaq is just a smidge in the green. But I guess is that a win for you?
I mean, it's the market. What day was it that we had a pretty good day? That was actually been a pretty quiet week. I mean, you have a move like you did the prior week, and the market has to digest some of that move. So,
right, exactly.
I mean, it sure doesn't seem at this point that it wants to go down. Did you take out Monday's low? Yeah, you did take out Monday's low, but once again, you got to buy the dip mentality here. You made a lower high.
Always.
Yeah, but a lower high at 2050. So just some selling, some consolidation. But if you look at the move ahead of a 3-day weekend too, sometimes you get some from fireworks over a 3-day weekend.
That's true. That's a great point. Markets are closed on Monday. You can get some volatility ahead of longer weekends. We'll see if this plays into tomorrow at all. But yeah,
there's the futures will be trading Sunday night at 6 p.m.
Right. Okay. Yeah, it's not a full. The bottom market's open, right? Or am I wrong about that? I could be wrong about that.
I don't know. Just the futures trade from Sunday at 6 p.m. until 1 Eastern, and then they close on Monday, and they reopen at 6 p.m. Eastern. But on Monday, but all of that is considered Tuesday session. So you can see some fireworks.
Wait a minute. Sunday night is considered Tuesday session.
Yeah. Yes.
Oh my god, I hate the futures. All right, Albert's asking us to explain what the heck's happening with Tesla. This is a victory. Tesla's up today. Tesla held up today.
Up 264.
Tesla held up. That's a big win.
Yeah. Look at you got an interesting area here, and it had that last little run from 650 to 900. What was that high right there? Was that 900 right on the nose? I think it was like 9004 or something. What was it? Yeah, 90040. I would just say for this one, I mean, this stock has just been on an incredible move, right? And I would give it a little bit more room, maybe down to 785 before I worry about any more of a sell-off. You haven't been below 785. I'm not sure what the news was on this day. Came down, tested it again. So it's going to be the third time down to this area. Actually, 800 is standing up ahead of that. 8002 is your low today, and 801.73. So it's still, I mean, it looks heavy, but it's hard to bet against this stock until it breaches 785. Full disclosure, I do have a small long position in Tesla.
Wait, new position? Is it new?
No, same one.
Oh, okay, all right.
From like whenever, I can't even remember where it was.
But
not a new one. No,
all right.
not a
All
new
right.
one.
Overall, slightly more red than green on the screen, but really not by much. All things considered, it's going to be a pretty flat day. I think I see like 51% of the S&Ps in the red, 47% is in the green. The rest is pretty much flat. So we're going to end up right where we started, but it was an eventful day. It was an eventful path to get there.
Yeah, it certainly was. I noticed this one, and Uber. I'm not really thrilled about the day that it's having. It made me look bad. It was holding up the same low area as yesterday when the pre-market prep stock of the day. I thought that might low hold up because it was trading near 64 when I wrote the article. Made a new all-time high, but just a run here. If you look what it did in the 10 sessions ahead of the report, I mean, this thing ripped from 47 to 64. So could be, the earnings are out. I'm not sure if you're going to get any ratings changes or any, analyst action on it, but it has to be a little bit concerning here. Trading in the red, 237 on earnings day when it made a new all-time high. So this could be a key reversal. You are well below. We'll see if we close below yesterday's low, but this line is breached. So boom, we got to get rid of that line, and we got to get rid of that tax because it is no longer valid.
Hey, by the way, did you see the headline from Reuters about GameStop and why they didn't raise money?
No, I did not.
Yeah, this was out this morning. They didn't raise money because they were afraid of regulatory concerns, which seems like a prudent concern to have, right? They weren't sure what was going to come down the pipe, and they just thought, let's just sit on our hands and do nothing, which I guess is kind of smart.
Yeah, quiet range in this. So you just get a little bit of a pop here. It's funny. Yeah, you're looking at this, and it has what's the range on it today? And it's a 7-point range. 7-point range, and it just looks like it did absolutely nothing. I didn't notice this. You put in a pair of lows, and is that 46.52? Yeah, two lows in the same area, 46.52, 46.55. So hey, you found some support in here, at least an area to lean on. I just once again. You get this thing going to the upside, and another issue of overhead supply. It's not going to be the same ride the second time going back up. That's for sure.
All right. Jay Towers is asking my thoughts. I guess because I own Disney,
Okay.
but my thoughts on Disney heading into earnings. As far as holding it, yeah, I'm not gonna. Again, I own Disney as like an investment. If I had it as a trade, it'd be a different story. But I don't. I had it as an investment, so I have no intention of selling Disney at all today. Of course, I'll be watching the report. I'm always curious to see what they say about Disney Plus subscribers. Any guidance about when they're going to be opening their parks, but I mean, we all know that the valuation of this company is based purely on Disney Plus at the moment. So I have no opinion. I have no opinion on whether it'll be a good report or bad report. I really don't.
Holding up near the highs of the session, new all-time high for Disney, 191.25. Looks to improve on that all-time closing high. Previous all-time closing high was 190. So Street's leaning long into the report. Nothing up here on 91.25. So keep an eye on that one. Perhaps if it goes above it and then comes back down, it might be a little bit of weakness. But Street is definitely leaning bullish into the report.
So we talked about Disney reports tonight, Aurora reports tonight, Cloudflares tonight, Datadog, Dexcom.
Wow.
That's pretty much it. I mean, I think there might be one or two more that I'm missing, but as far as the big names, let me go into Benzinga Pro. I think that's pretty
Probably nothing in the morning too, right?
I haven't checked. Let me check. Probably not much. Let's see. Tomorrow morning is the 12th. Vroom. No. Dominion Energy. No, that's not confirmed. I want to go to just confirmed. No.
Nothing special
really,
on.
No, not really tomorrow morning. Sorry, Newell Brands, NWL.
Rubbermaid, the old Rubbermaid.
We don't really care about that. No, tomorrow morning is super light. So we're coming into the end of earnings season. We'll have retail start reporting. I believe next week is the start of the retail earnings season, and that's sort of like the last hurrah of the earnings parade, typically.
And Bumble's having a good day, right?
Oh yeah, I haven't looked at that since like noon. Let's take a look at that.
I don't think it. What I think it opened later than that, didn't it?
When did it open? It opened at 12:30. So I think I looked at it at 1, and that was the last time I checked.
Pretty hard to give technicals on it. Looks like it just got a little carried away off the open here.
These first day pops or something.
Actually, that's interesting. That was in the first 15-minute bracket that you made that high.
This right here is why everybody hates IPOs, because who wins in this situation? So if you're a Bumble insider, the IPO was priced at 43. So they got they issued their shares at 43. And then it went to almost 80 right today. So Bumble didn't get the most bang for their buck. If you bought the IPO, it opened. What was the opening price? It opened at 76, right?
Correct.
So it opened at 76. It moves higher almost immediately, and then heads lower within a few minutes. So if you bought it and you were thinking you get the first day pop, you didn't, right? So like who wins here? The people buying today didn't win. The insiders didn't really win because they could have got more bang for their buck. I mean, the banks won. The banks running the IPO, they won, and this is why people hate IPOs, because for stuff like this, where the opening price is just it was almost double the IPO price. IPO price 43, opening price 76, right? I mean, this is the problem. I think this is the problem.
I mean, it's hard to do technicals, obviously, on just only one day. I mean, if you're in that early, I mean, that was a quick move, but technicals, fundamentals are hard. I thought, to me, it seems like there's quite a few dating apps out there, right? I guess this one is.
Joel, I took a screenshot today. The Bumble IPO reminded me. I took a screenshot back a few years ago. I had a folder on my phone here. I'll show you all.
Okay.
Let me take these charts up here. I had a folder on my phone before I deleted them of all the dating apps that I was on. Wait a minute. Here it is. So that's a screenshot from 2017. This is, why can't I get there we go. That's all the dating apps that I was on. That was the day I got rid of all of them. But I thought it was fun. So that's 8 dating apps that I was on at one time.
Holy mackerel!
There are a lot. Bumble was one of them. Oh, actually, I found out like a month ago that my account was still active because I still got like their marketing emails apparently. But okay, 3:50, 10 minutes left in today's session. That's enough of a dating app discussion.
Yes. S&P's just had a little bump here. I'm not sure. I didn't see the imbalances go by yet. They've been pretty muted as of late. The number of interest here for me is 3908. And that was Monday's close. That was your all-time closing high. So that's what you need. You need to get above 3908 for a new all-time closing high, and we still have a little under 10 minutes to go into session. So definitely within striking distance.
Just for everyone in the chat, as a matter of fact, it did work for me. Hence why I deleted all of them. But again, that's enough. That's really enough conversation about that for one day.
Yes.
Just want to I want to preview after Joel and I are done here the Benzinga Cannabis Hour, which is every Thursday at 4 o'clock. Is today. We got some good guests on today. We've got Joe Neuwirth from Monotech, Alvaro Torres from Chiron Life Sciences. They're a publicly traded company. And we've also got, KHRNF is the ticker. And Michael Auerbach, he runs he's the founder of a SPAC, Subversive Capital. They're the firm that bought the parent company of Jay-Z's cannabis brand. So got a great show coming up on the Benzinga Cannabis Hour. That is next at 4 o'clock Eastern time.
They should have a lot to talk about today.
It's been one of those days for sure. It's been one of those days. Okay, what else did I want to hit on here? There's a few other things, and I'm kind of blanking on them right now.
I noticed the autos were weak. Ford and GM are both a little bit. I know who wants to talk about them. That pesky $12 area. I mean, it hit it on earnings day, hit it on yesterday, and that's it, man. There's just the big boys are lining up there. They don't want to get through 12, and GM is a little bit weaker today too. But that, had a run from 47 to over 56, a little double top there. So, U.S. autos a little bit weak today.
Joel, can you give us some analysis on KWeb, which is an ETF that I'm long? It's a Chinese internet stocks, Alibaba, Baidu, Tencent, et cetera, et cetera, et cetera. KWeb, KWEB.
You can't argue with the price action here. I mean, how many up days in a row has this thing been? Holy moly. Boom, boom. They say there's no such thing as a 10-day winning streak. What do you got here? You got those are the lows. I know, Spencer, you got yourself in this one. Maybe you can
I'm not trying to get out. Somebody from
No. It looks great. Who are the top components in that?
Oh, don't test me, gosh!
All right, I'm sorry.
Throw me under the gun. Probably Alibaba and Tencent. But
how's Baba doing? I know it was tussling with that 370 area. Still there. Sneaky. Trying to decide here. Trying to made a new high for the move, so that's good. That 50% we talked about, that was right to 266 area. So. Hanging in there. We might have to start getting rid of sell the news on Singles Day's results. Haven't heard much out of the regulators on this.
Singles Day, that was months ago.
It's still on the chart though. That's the number. They sold it on the Singles Day results, and before you had the bad news. Twitter. How's Twitter doing today? Twitter. Ooh. Let's keep it on 69.25. Yesterday's high, 69.02. Big drop off in volume. Let's see if it has the wheels to get through that. It's kind of hard to call it. It is a double top. It's 23 cents away. Not much here for Twitter, but what the good news is but it did give back any any of those monster gains from yesterday, and it's higher today. So still buying interest in Twitter up at this elevated level. Full disclosure, I do have a long-term position in Twitter too, and no plans of selling it.
Joel, did you see Space today, Virgin Galactic?
No. Did it blast off?
Just a little bit.
Yeah, it came back down to earth out of this world rally. This is just a very storied stock. People have been piling into this. Only one number only to look at tomorrow if the rally continues. 62.60. No, excuse me, 62.80 is the all-time high. But what's important today is you got nice volume here, nearly almost double the volume from yesterday, and you are closing at a new all-time high, not by 1, not by 2, but it could be possibly 3 points. That all-time closing high came on Tuesday at 56.72. So Virgin Galactic looking good on the charts. Almost gave you a look at yesterday's low, 51.15. I got to 51.57. So good day for SPCE.
And then here is the stock I wanted to bring up from the chat, Rocket.
Okay, everyone's waiting for this one to blast off too. How are we doing today in Rocket? Little bit heavy. 2 lows in the same area. Looks like, you got a little accumulation going. I can't remember what happened, if this was earnings day or what was that day? I cannot remember. But the low on that day was 20.08. It doesn't look like it's in any big hurry to get there. Still making the low in the area of yesterday. Wow, you took it out. 20.55, 20.61. So seeing some buying interest at the 20.50 level. They've already had earnings. So, I don't know what kind of catalyst. I know Kramer's talked about it and stuff, but need a catalyst to get a lot of red candles here in the midst of one green candle. So it's definitely due for an update.
All right. How are we doing? 3 minutes to go in the session, Joel. How are we doing?
3 minutes to go. We are above that magical 39.08 close from Monday, currently trading at 39.10. With all the movement and everything, we are very close to last night's open at 39.07. So a lot of chop and slop, but perhaps heading into a Friday, into a 3-day weekend, and ending on the highs for the week. It's a possibility. That high yesterday, 39.28.50.
Couple more here. Rapid fire. Beyond
Rapid
Meat.
fire.
I'm looking Beyond Meat for I haven't, at least for like a couple of weeks. How's that Beyond Meat doing? All right.
Let's see here. Ooh, it's getting ready. To me, this is getting ready. I don't want to say anything, full disclosure, no position, but all those lows in the same area, poking its head above yesterday's high, just digested that move. Did you get a gap fill here from that crazy day when they announced something 164 and a quarter was your high on that day? And you got to 163.02. Actually, you filled the gap on 2 different occasions, caught a bit in that area. Now moving forward. What do you got? The next day, you got 2 daily highs to contend with. If you see something in the after hours of the pre-market, 178.43, $2 away, and then 181. But good day for Beyond Meat. Not sure if there's any news associated with that.
You know what? These days, I don't even. I almost
doesn't need news, right?
Doesn't need news. I don't even check anymore because it's just like Yeah, it looks like there actually was some news today. No, there wasn't. I stand corrected. See, that's my point. You don't even need news. All right, we'll do one more.
One more here, then we'll wrap up.
We talked about that like 3 days ago. Let me see. There was one that was in here that we don't talk about a lot. Let me see if I can find it. Okay, here's one. Micron. We talk about this one, but not too frequently. MU.
Micron. Boom. Just high to deal with, and that's it. Then you get a breakout, another new all-time high, 87 and a quarter. I believe that is the all-time high. That's your January 20th high, and couldn't quite get there today. Got to 86.64 though. The good news is you're doubling the volume from yesterday, which was a which was a little bit of a down day, but you're getting the good volume on the up day. So that's all you need. 86.64 as the current high, and then this high here, 87.25. Now that's an all-time high. AMD, someone mentioned, that's just that's trying to get through here. You had that sellers. Wow, there's someone at 93.40 that just doesn't want to move here. 3 highs in that area, backed off. Maybe fourth time will be the charm. We're close, folks, and we did it. Post another all-time closing high.
We did it. I don't know how we did it. We did it. We did it. All right. Thanks a lot, Joel.
Okay. Good luck at Cannabis Hour.
Thanks. All right. I want to bring on our host of the Cannabis Hour right now. And spoiler alert, they're related. Okay. Patrick Lane and Elliot Lane. Yes. They're brothers. I know it's crazy.
Insane, Spencer.
We look alike even.
I look alike. It's wild.
Spencer, you can be an honorary Lane if you want.
You
man.
can be.
We'll take you.
All right. I'm going to hop off and let them run with it. Guys, enjoy.
Thanks, Spencer.
Thanks, Spence.
Awesome. Welcome to another Cannabis Hour. Pumped for today's show. Legitimately tons to talk about. Thank you so much for sticking around. Thanks for tuning in to Joel and Spencer. Let's kick it off, Aaron. Who do we got today? Hey, I love that.
That was awesome.
I love that. It gives me
that was
pumped
so cool.
every time. Oh man, we are
Who
here.
Are we?
What?
Who are we? Aaron
I don't
Thomas
know.
with the graphics out of and the music.
Yeah,
I'm
big
pumped.
shout out to Aaron Thomas. He's the man with the plan. He does everything behind Cannabis Hour, helps us out a bunch there. We love the guy. Huge show today. We have some awesome guests. We start with Jill Neuwirth. We'll ask her exactly how to pronounce that in a second. We all know my trouble with names. So we'll have her soon from Monotech. She works with R&D tax credits and some other activations I'm super interested to dive into. After that, we have the president of Chiron Life Sciences and the founder or the CEO of Chiron Life Sciences. We have a big Chiron Life Sciences executive, and then the founder of Subversive Capital Acquisition Corp. So, I mean, how can you not stick around for that? Couple things I do want to shout out before I ask you your opinion on a few things here, Patrick. We have Benzinga Cannabis Hour swag. Support us. Go wear that stuff in Telluride, Colorado, and Los Angeles, California, wherever you live. Rep us, y'all. We love you. We hope we give you some great education here. Secondly, killer week next week. I do want to shout this out for anybody who may not make it through the entire show. Next week, we have Tilt Holdings, Gage Cannabis, Mystic Holdings, and Charlotte's Web. It's going to be a killer show. Please make sure you tune in next week. Very excited about that. But Patrick, I got a few things we got to run by you, man. First of all, I'm crying about Sundial. I don't really know why I'm crying. I just know that I should be crying.
Yeah. Yeah. I mean, listen, the volume has been so ridiculous as of late. I'm opening my brokerage account now because, I mean, listen, I got murdered a little bit here today, but but my God, the volume has been so high for so long, and now you're starting to see it come down a little bit, right?
Mhm.
With the roller coaster volatility here. But it's a cool story, right? They've got a lot going on that's good. I mean, none of the cannabis stocks did well today, but you know,
Nobody
we have
did
hope. We have hope.
Yeah. Well, and what was it? They took advantage of it. Closed $74.5 million raise from this. I mean, come on. Like, if that's not worth a hold, I may or may not own them. Full disclosure, I do. We are not a financial advisor. Secondly, Tier 1 MSOs are trading right now at 7 times financial year 2021 sales. That seems like a positive to me.
I think it is. I think a lot of people are ready to see some movement in the regulatory environment. I think probably we'll have some guests that want to talk about that today. I'm also interested, I'll just say this, given your quote there about MSOs, right? there's a lot that's happening and a lot of groundwork that those MSOs are doing right now that's going to make it really interesting for those international companies once they're ready to come into the US, right? And so this is going to be an interesting show because we're going to talk about that US market with Subversive and Monotech, right? But we're going to talk to Chiron and learn a little bit more about the international market too. So we won't be incredibly self-centered when it comes to the US market, but obviously there's a lot of things happening in the world of cannabis, and we're going to talk through some of the different investment opportunities and figure out. I mean, 7 times multiple. That's great. That's great. I'm sure they wish it was higher, but that's a hell of a lot better than it used to be.
24 times EBITDA. I mean, it's awesome. Right now, what's happening in the industry. Honestly, Chiron and Subversive have 2 of the more unique landscapes out there. So we're going to hear from them soon. First, we do need to touch base with Jill. I do want to touch on one other thing. I'd love your opinion on what's going on right now with crowdfunding. Within cannabis. I mean, it's starting to take off in different levels.
Yeah. So what's funny about crowdfunding? Because Benzinga has been kind of in this ecosystem for a long period of time, right? We've been around for about a decade now, right? And I can't pinpoint exactly when crowdfunding really started, but we were around. I remember bringing Ken Nguyen in from Republic to present at one of our very first Benzinga Global FinTech Awards, right? And I know Seed Invest is out there, and Thumbraise, and all these other platforms for people to raise money from these sort of crowdfunding, co-investing platforms. So I think it's really cool. You're starting to see a ton more Reggae Plus offerings, which used to be very taboo. Anybody doing that, you're like, what the hell are they doing? They're probably not a good company, right? But you see Gage Cannabis doing it. Yeah, Gage is huge. They're probably the biggest Michigan operator and definitely the brand in this market, I think. I'm going to get in trouble for saying that. But there's so many companies doing that now, and it's a big deal. Reggae Plus, who knew?
Yeah, so keep an eye on that. I think there's some awesome opportunities out there. One other one I think to keep an eye on there is Emerald Pharma. An interesting play for sure. Last bit of news before we get to Jill, I want to call out because I think how this played out is super interesting, especially off the heels of our special with Valens a week or 2 ago. I love this news because of that specifically. Selfishly, Neptune acquired Sprout Foods. So 50.1% stake in that. Sprout was a portfolio company of Morgan Stanley Expansion Capital, which makes Neptune now a portfolio company of MSEC. So they're on the NASDAQ, everybody, in EPT. Awesome company. Definitely one to keep an eye on. Company. Sprout is the 4th top selling organic baby food brand on Amazon with 28 million in annual revenues. So I think a very interesting piece of news with what Neptune just did on a couple levels.
Yeah, very, very true. Very true. I'll also say this too. I don't know if anybody is watching, but that also has young children. I have a 1-year-old, right? We're weaning her off the pouches, the little baby food pouches, right? And there was this report that came out, and I think it was from Reuters. I'll have to find it, but crazy amounts of metal and other minerals being found in baby foods from. I won't name the specific companies, right? I don't want them knocking on my door, but yeah, it's insane, right? So some of these baby food companies, I would imagine, are already feeling that, and if not, I'm sure they're about to. So a little word to the wise there.
Yeah. All right. So I think we covered some fun bits of news today. We always want to keep you updated on the world of cannabis. Some great companies to keep an eye on there. Let's get started.
Let's do it.
Aaron, can we please bring Jill over? Jill, you're already here. That's the fastest transition I've ever had.
Much better than last time, right?
Always. But how are you? It's been a bit.
Yeah, I'm okay. Just surviving the cold winter here and guys that matched the ground of snow.
Now, please correct me. Jill Neuwirth or Neuwirth?
Neuwirth. You're right.
Neuwirth. Okay. Jill Neuwirth. Fantastic. So Jill, let's dive right in. Let's hear who Monotech is, what you do, and how you help the cannabis space.
Okay, so Monotech is an R&D tax credit firm. We're a boutique consulting firm. All we do is R&D tax credits. We're Michigan based, but we do tax credit work all over the country. US, it's a US tax credit. It's federal and state in some states that have the tax credit. That's all we've been doing for the last 18 years. So we help the cannabis industry the same way we help all the industries that we work with in the country, whether that's manufacturing or software. So, or, the list is really long on the in the cannabis industry of the types of companies and industries that qualify within this industry. So we can get into that in a minute. But really, what we do is the federal research tax credit is a very technical area of the tax code. And so our studies are performed using engineers and other technical personnel to help identify the activities that qualify under the tax code for these credits, and then identify the expenditures that go with these activities to be able to do the calculations that are required by the tax code to claim these tax credits, and also refunds. So we're looking at tax credits in a year that is current. Like, for example, right now we're looking at 2020 in tax credits, and then we're looking at 2017 through 2019 for tax refunds, which also come with interest, which is nice. So we're looking at usually a 4-year period at the same time. If you're, so right now, for example, 2017 tax credits are open until this spring, or sometimes a little bit later, depending on when the taxpayer filed that 2017 return. In terms of industries or company types within the cannabis industry, which are kind of companies that we've worked with for 18 years. We're looking at packaging companies, nutraceuticals, pharmaceuticals, cosmetics, bath and body, distillation equipment, extraction equipment, software. Software is big because every company is using software now. So, even if you are a finance company and you have a big software platform that people go onto to do transactions, you have a software initiative that you've invested research and experimentation dollars into that would qualify for the credits. So if you're a company that is a non-traditional R&D company, but you're, say, an investment company, but you have a big software platform that you paid an outside or consulting firm to develop, those activities and expenditures might qualify for federal and state tax credits. So we look at kind of the whole company to see if there are qualifying activities and expenditures that have been undertaken in the relevant tax years. And we do an estimate phase, which we call a phase 1 estimate, which we do at no charge to the taxpayer, to see what the net potential federal and possibly state tax credits are. When I say possibly state, there's about 35, 36 states that also have an R&D tax credit. And often plays off the federal tax credit. So we always do an estimate that includes both. And in terms of the actual cannabis industry, regarding parts of the cannabis industry that are actually touching the plant that are, not traditional manufacturing or software technology, then we're looking at state tax credits for those. Not so much federal, depending on how the entity is structured. There are circumstances where a company might have their R&D part of their company set up differently and structured differently as a separate entity, in which case then there could be federal tax credits taken for that entity. So it's really important when we look at specifically in the cannabis industry to the companies that are actually working in the cannabis itself and the THC companies, that we look at them on a case-by-case basis to see if any of those credits can be currently claimed while there are still the federal legal issues with that. But there's plenty of also industries within this industry where it just already qualifies and we don't have to worry about that.
That's what sorry, Elliot, go ahead.
Well, I was just going to follow really quick, and then I'm going to let Patrick ask it because I'm sure we'll want to go further in there. Welcome to the Brotherhood.
Right.
The 4 years, is that meant to kind of reflect presidencies and their different tax codes and tax restrictions and things of that nature for corporations? I'm curious, like, where that time frame came from, and if moving ahead, follow-up question to that, moving ahead, what does the new administration mean for a company like you all? Does it mean anything?
Okay, so the 4 years I was talking about, the open years, are because as a taxpayer, usually you have your tax returns are open to amend them for 3 years following the filing. there's different exceptions, but that's the general rule, right? So that's what I talk about for 4 years. So in other words, when we look at a company that wants to claim tax credits, say in 2020 on their return that they're filing in the spring, we also want to look at the 3 prior years to see if there's anything that is worth amending for. That's where those 4 years come from. Now,
nothing to do with what I said. It's fine.
It's okay. So the other thing is, so in terms of your question about administration and things like that, this credit's been around since 1981, and the intent of the credit is to, encourage manufacturing, technology, those type of jobs, innovative activities in the United States to keep, to make us competitive on a global level, really. So we have, this has been around since 81. It's always been a bipartisan thing where both political parties want the credit for, to spur innovation and encourage it, and to encourage, jobs. So it's not a partisan thing. It was a credit that was always renewed every couple of years. It was never permanent. And it was just kind of one of those things that no one wanted to, in their administration, carry on the book for 10 years. So they would just renew it every couple of years. But at the end of 2015, I think it was, yes, the end of 2015, they made the credit permanent so that we don't have to renew it anymore. So,
that's cool.
So it is not changing for the worse with this current administration. The last couple the Obama administration made it permanent, and every couple of years the percentage kind of goes up. Not every couple of years, but I think they're anticipating that the percentage goes up again in terms of what the calculation does to increase the percentage of what can be included, or not what included, but the actual calculation for the credit. So it's improving. It's always been a good credit, and in 2003-ish, it was improved even more to make it more available to companies that were more medium-sized and smaller. So it's always been something that's been on the radars, improving and keeping and maintaining in the country, because it really does help companies. It really helps with cash flow, especially this year, where a lot of companies, especially during the spring and summer and through this pandemic, were wondering how they were going to how they were going to fare. It was nice for them to know that they were going to have a tax credit, they were going to get refunds, things like that. So sorry, that's my ice maker making ice.
Wow, that's impressive.
Yeah, that thing's working for you.
There's an earthquake wherever Jill is. There's an earthquake.
It just decides to have ice being born whenever.
No,
so
it's hysterical.
R&D. So anyway, that's where the history of it is, and the 4 years comes from, and things like that.
Cool. So I'm going to jump in here for a second, because I think for the investors watching who are interested in cannabis stocks, I would imagine there's a couple things that will be interesting to them. Guys, throw in the chat too if there's things you want to know about how this impacts cannabis businesses. But Jill, let's jump into this for a second. So, the types of R&D that cannabis companies are doing that would qualify for this tax credit, I think that's something that I'm sure we all are interested in learning. All right, what is it that actually qualifies? We've got cultivators, we've got brand managers and licensees, right? Let's call it that. All software companies. We've got all kinds of stuff in this industry, right? So what qualifies and what doesn't? And then second part, why is a tax credit helpful to a company? Does it help their balance sheet? Does it improve cash flow? Give us a sense of what exactly that does for a company.
Sure. I'm just going to look at a list because I have a pretty long list. I'm going to just try to pick some highlights off of it. Go for it. Types of activities that you're looking for. Since we already mentioned the types of companies that would be, qualifying, which is pretty, vast. But, we have developing or improving seed structures, developing or improving planting or harvesting techniques, irrigation system, automation techniques, improving speed, reliability, consistency, new fertilizers, minimizing environmental impact, reducing pollution, reducing greenhouse gas emissions, developing or improving filtration methodologies, improving or developing testing capabilities, increasing yields, moisture and temperature through packaging or controlling that through packaging or processes, cultivation techniques, new soil blends, pH, mineral content, nutrient density, etc., developing or improving software. I know there's a lot of software companies that are in this space in terms of the manufacturing capabilities, automation, things like that.
And so I'm sorry to interrupt you, but just out of curiosity, when it comes to, let's say, software development, right? I create an app. Maybe it's Akerna, right? We've got folks interested in Akerna in the chat. KERN for those that are watching. They have a seed to sale platform, right? So any sort of fixing of their code or any sort of development work in terms of improving their code, does that count?
So the companies that wrote that software or developed that software, those companies are really the developers of the software. So those are the companies that are going to have the tax credit. However, if you are a company that is using software and you have to then do work to integrate that software to your systems and processes, and there's time spent on that, whether it's outside consultants or your internal employees that are integrating a software into your manufacturing processes or improvements and or processes or products, then you have that component within your own company as R&D.
I see. Okay. Okay.
Yeah. So another way to look at, there's a couple ways to look at software, and software is a big thing for research tax credits, but you could have a company that's just not a software company at all. Say you have a company that does companionship for the older people that comes in and plays checkers with you or takes you to your doctor's appointments and things like that. So you think, okay, there's no technology in this, right? But then this company spends, say, $10 million on software that basically links all of these franchises around the world and all the scheduling and all the days off and all the things they have to do for time and attendance and everything like that. Now this company that is a non-technology company has spent $10 million on technology for its company to run its company. That's an R&D expense. Whether they use it whether they did it in-house, whether they used consultants, whether they used a combination. That's an actual client of ours. So, I mean, that's an example of how software can come into play where it's not even obvious that it's part of an actual technology company.
Real quick, I'd love to dive in more to just the cannabis side of you specifically. And actually, a good question in the chat that I want to build on from Kevin Grotowski. Experience with industrial hemp producers or companies on the federal level. And can you differentiate maybe versus federal versus state? Specifically, I think with cultivators and perhaps addressing Kevin's question with industrial hemp questions.
Okay,
companies.
so the difference between federal and state for right now, I mean, there's a big difference being that there's not federally legal activities going on for the most part. So what we would look at is on a federal side is we really would look at each client on a case-by-case basis without making any blanket statements. On the state level where things are qualified and the state credits can be very good and very lucrative, we can look at state credits for those companies that are both in states where it's legal and in states where there's an R&D tax credit. So there's an overlap of that in several states. So for example, in Michigan, it's legal, but there's no R&D tax credit in Michigan. So it's kind of—
Oh, come on, you guys.
I know. They tried it years ago and it just kind of went, I don't know where it went. There should be
apparently
with so much manufacturing, but it could come back. But anyway, so really it's really a case-by-case basis in terms of the federal tax credit. And there's also ways to structure the activities so that the research and development is taking place in an activity separate from the part of the company that is distributing something.
Fantastic. Real quick, I do want you to be able to dive into where people can find you. If they can reach out to you, apply for what you're doing, do you offer consultations, so on there.
Yeah, of course. So all of our assessment call, everything we do is essentially up until like we actually start working on an actual project is at no charge to the taxpayer. What we do is we always do start with a call and make sure that we're like on the, that it makes sense to go forward with an estimate phase. And our estimate phase is really detailed, but we do it at no charge to the client, no charge to the CPA, whoever is calling us. We want to get a very good net credit estimate of federal and any state tax credits that's there because we want it to be something where we know, okay, this is what we're looking for, this is what we expect, so that it makes sense for everybody to be involved. And And it's important that it's net and not just gross, because we don't want to say, oh yeah, we can find this pile of credits. Oh, sorry, you couldn't use any of it. That's what net means. So we're looking at the tax implications and the tax situation of the taxpayer to make sure they can use the credits, whether it's at a corporate level, if it's like a C corp, or if it's a flow through entity that the shareholders can use the credits. And another thing, just so for especially for these smaller, younger companies, is the credits are can be carried forward. The federal credits can be carried forward for 20 years, and in some states they can be carried forward 20. Some states 5 or 10, depends. But they're useful for a long time. And I know that Patrick had asked a question about what is the benefit for like investors. You have, you have the cash flow, so it improves cash flow. The other thing is that, having the credit, and I've seen this in other companies and clients of ours, is that when they go to sell, it just makes their company more valuable because they have this history of claiming the credit, and they also have what's called the base period already. So when we do an R&D study, we have to also do a base period because by statute, it's a credit increasing over a base period. So when we do a first study for a client, we are looking at the 3 prior years, earlier than the study years. So for example, if we're doing a 2017 through 2020 study, we're doing actually 2014 through 2020. So we're looking at those 3 prior years. So that's their base for each of the, consecutive years. So that's done already when you go to sell your business or do some kind of, succession. So that's also valuable too, because now that's done for them. There's historical base in there.
That's great. I hear some of that's probably happening this year in cannabis. So.
Yeah, I'm sure there's a lot of, and that's another thing. There's a lot of, there's going to be there's going to be a lot of M&A activity. And it's really also good. I encourage our clients always, when they're going to sell or buy a business, that they talk to us first to put in certain language in their buy-sell agreements that talk about the credits. And because if you sell, then say you sell and it's effective October. Well, now you have from January 1st through October, or October 1st or whenever, that the credit is yours because it's not sold until October. So now you sell the company, and you want to go back afterwards the year later and do your tax credit for the coming year, because now you can offset the gain on the sale of your business with tax credits, because you're going to make money when you sell your business. So now you have to pay taxes. So now a tax credit's really valuable, but all of a sudden you don't have access to your prior employees to do the study because you sold your business. So it's good to set that up in the agreement to say, hey, we're setting this up and you're going to get the base from us and you're going to get the history, but I also want to do the study for me after the sale. And so I need access to the employees or, and information so I can get my tax credits also that I'm entitled to.
Hey, Jill, we do need to wrap up here. I'm so sorry. We do need to wrap up here. Okay. Is it monotech.com? Can they email you directly to find out more? Yep. That's M-O-N. Nope, there it is. Perfect. Monotech.com. Obviously, Jill is a wealth of knowledge. Love hearing about this and appreciate you being on with us, Jill, and looking forward to hearing more soon.
Okay, thanks a lot.
Thank you.
Thanks, Jill.
Awesome. Fantastic. So, I think a ton of interest there for those, in companies, no matter what stage. You should reach out to Jill. And honestly, if you're investing in companies, encourage them to reach out to Jill, because I think there's a lot of value there. Patrick, who's up next, my friend?
Yes, Aaron, let's go ahead and move him over. This is Alvaro Torres, CEO of Chiron Life Sciences. How are you, my friend?
Hi, Patrick. Hi, Elliot. How are you doing?
Hey, good to see you again.
Very good.
Nice to see you
Very
again.
good. In a crazy day for cannabis stocks, the ticker here is KHRNF. And these are the days I like, right? These are the days that I get in and I start looking at companies that I don't have enough of, right? Or companies that I'm not in yet, right? So for those of you investors watching, we're going to learn a lot from Alvaro today and figure out what the international market looks like. I'm super excited to learn more about that. Why don't we start there? Alvaro, tell the folks here what we need to know right off the bat about Chiron and what you guys are doing.
Well, again, thank you, Patrick. Thank you, Elliot, for inviting me. I think you nailed it on the head. We're talking about international markets, which are just really starting. Let's call it 9 months ago. The purpose of the company of Chiron is to do medical cannabis all across Latin America. region of 650 million people, and also looking to Europe. When I look at what's been happening the last 9 months, I would say I think we are where Florida was in 2017, right? So we are really just looking back at, able to look at the future today, where you're seeing this in the United States, but being able to get in today. We started sales in Colombia in March of last year in the middle of the pandemic. We have been growing 50% month on month on prescriptions in Colombia. We got insurance coverage in Colombia in December by the government of the country, and that has spiked tremendously the number of people that actually can get their prescriptions. So we look at the growth that we've been seeing here in Colombia, starting here and now growing to the rest of the region. I'll talk about that. And, it's exciting to think that, 4 years from now, we'll be talking, like the MSOs today. So, I think that right now is the right opportunity, because international, everybody's focused on the US. Right? So that's good news for me. So the more people focus on the US and Canada, there's going to be less folks trying to figure out the international, because it is a little bit more complex. There is a lot more regulation. I think that's where the first mover advantage plays. And we've been doing that great job. We're looking at Colombia. We are very soon entering Mexico. Very soon starting Brazil. Already started selling Peru, in UK and Germany. And we're doing it through a very vertically integrated model, because we cultivate our products in Colombia. We sell them in our clinics in Bogota and the rest of cities. We just announced that we're going to open 2 new clinics in the rest of Colombia, and I'm planning to open as many as possible. And I think that's the opportunity right now.
Awesome.
So cool.
Can I ask a quick follow-up question to that? I was on your website today, and I saw what I thought was an insanely amazing number. It said 450% quarter-over-quarter growth. That's Q3 over Q2 2020 in medical prescriptions.
Yeah,
that seems like an insane number to me. Were you ready for it? Obviously, hearing you talk about, the fact that you came online, in the midst of the pandemic, you were probably expecting a large number there, but was 450 within that realm?
Well, I would say that I wish it was higher.
A true businessman.
Well, we started on March 19, and one of those bittersweet moments, because the day after the country of Colombia shut down, right? So you don't even know how to celebrate. You got the first permit to start selling Colombia. We got the patients. Now you have to adjust all your strategies because of the pandemic. We had to go into telehealth, try to reach out as many patients as possible. So, we actually started pretty slow. So that Q3 number, was pretty good. But, I'm very interested in sustainable growth, right? Because we're used to having very quick results 1 month, and then next month you go down. So, all the question for us is, how do we acquire new patients? How do we retain them? How do we expand that? And so, yeah, it was happy, but I think we can do better, because we're just really starting. If you think about Colombia, there's 6 million people that have pain and epilepsy, anxiety and depression and sleep disorders. And, we're just in our 10,000 prescriptions. So, that's when I keep saying about Florida 4 years ago, that I really mean it, because we are just really starting on that, first part of the S curve. And, the fact that we actually own all these clinics that are ours, and we actually have that retail presence, and we sell it to the patients. We sell those 30 milliliter bottles for $60 Canadian, and it cost us $5 to make, right? So how do we keep growing on that?
It's a great margin.
To be honest, let's say October, November, you start also seeing that, how do we get the patients to continue to keep purchasing the products that they need? It is expensive type of product, but we've been working 9 months to get the Colombian government to cover it. And now Colombia is one of the 5 countries, I think, that has a coverage program for medical cannabis. Not as a third line or a second line, but any doctor in Colombia today that wants to write a cannabis prescription, that patient gets it for free, right? So you can imagine that explosion. So if we had that earlier, maybe that would have been more than 450%, but I'm not complaining. We still have 4 years to go. So if I keep growing at 50% or just 10 or 20% over a long time, it's going to be tremendous business. And now it's all really about how to take that model of the clinics and take it all the way in Latin America and then into Europe. But just Latin America alone, think about Mexico. Mexico is I think, one of the top 5 consumer markets in the world for any product. And so, Now it's a ability to expand it, to keep thinking about service, branding, customer loyalty, and it's funny for me because the entire let's call business that we do is more focused on service than really on the product. Anybody can make cannabis, anybody can make it for cheap, but how do you connect with the consumer and the patient and the doctors? That's what it's all about.
Yeah. So, and I was going to ask a quick follow up to Elliot's question of that 450% expansion, right? I know you guys have the clinics, and is it Zerenia? Is that the name of the clinics?
Yeah,
okay. So I know you're expanding clinics. Do you anticipate, as you start to expand globally, right, this international market that we're talking about, whether it's Mexico, I'm not sure how much you guys are talking about Europe and things like that, right? Canada. When it comes to that expansion, what do you expect the number one product to be, right? When it comes to what's most popular or what has the most traction globally? And then I wonder if you think that clinic model is also going to carry over into how you expand. Just love your feedback there.
Well, so on the product, Patrick, we've always, or at least I've always been sort of conscious that we are introducing a new molecule to the industry in Latin America. And I know it sounds crazy to think that Colombians don't really know much about marijuana, but think that we've been selling to you guys for the last 30 years. We haven't really consumed it ourselves now. So we're starting with very basic products, high THC, 1-to-1, high CBD on oils. I believe that we have to really be really good at selling the iPhone 1 before we come out with the iPhone 10. And so we have to get people on that, and there's a lot of evidence, and we're going through that. It's crazy how markets work, right? Because in Colombia, for instance, high CBD sells more than 1-to-1. But in Peru, for example, 3 months later, we have more sales of 1-to-1 and high THC than CBD. So I guess each market is different because there's little different perceptions of cannabis, like in Peru and Colombia. And I still don't know what that will look like in Mexico, but it's probably going to be also a little bit more THC oriented. So that's on the product side, and I think we'll continue to do that. But the data that we're generating today, I told you 10,000 prescriptions already. That's a lot of information that lets us know what the next product should be like, and that's what is exciting about it. In terms of the clinic, I would tell you that certainly, absolutely convinced that our growth is going to come from those clinics. And that was also always part of the plan because we acquired some big health centers in Bogota a couple of years ago. But to be honest, when we started this in last year, we're always looking at that pharma approach when you're educating doctors, external doctors, going with visitors, and then having our clinics. But I think the pandemic also created a lot of problems for external doctors because they are not able to see as many patients not in their house. And so we started looking at how our clinics are becoming really those that funnel in which we are able to acquire and bring patients. And so we did an exercise in a city called Medellin, in famous Medellin, now very famous because now it's one of the most beautiful cities in Latin America. And we opened our first small format satellite walk-in clinic, what you would consider a walk-in clinic in the United States. And the response has been tremendous, even though they have lower capacity because there's one doctor, one nurse. 80% of the patients that have been gone there in the last 6 weeks, 80% have received a prescription. So that just tells me right away that, the more we expand, we have to go to the clinics because we have the data, we sell it at retail price, we have that information, we connect with the consumer, with the patient. And that relationship that we've always talked about is extremely important because eventually, Patrick and Elliot, everybody will probably follow suit. There will be more cannabis clinics, there will be more companies trying to do this, right? So we're not going to compete on how low you can sell your product. We're going to compete on service. Like today, 95% of our patients get it at home. You have a follow-on call 2 days later. You have doctors on site be able to answer any questions you may have. We have the insurance coverage. We deliver the product within the next day. If it's in the city, 3 days, even if it's in the Amazon jungle, which we have actually delivered there. So the more we think about that service and the more that ecosystem we can build, that's going to be great. Like today, for example, every Friday, our doctors meet on a virtual meeting so that the doctors in Medellin can talk to the head doctors in Bogota and start discussing cases that will eventually then return into a better prescription for the patient. And so the way I imagine that is the more, now that we're getting to Mexico and Brazil and Peru, you're building an ecosystem of those type of know-how, right? And so, I think the market is just Colombia alone is going to be very big the way we're building it. Multiplying and adding on top of that this network that we want to build on, let's call it satellite type of clinics. That's the way we want to grow it. And in that way, if I may say, and it may sound a little bit, you're trying to sort of get away from the competition, because everybody else in Latin America is thinking about cannabis as a commodity business, as a B2B. How do we sell the cheapest cannabis possible to the other guys who are going to sell it into a finished product? But I believe that the local demand for cannabis, for medical cannabis, is very big. So just think about the opioid business in Latam and the non-opiates and analgesics. It's more than $15 billion. And most of these things are produced abroad. So, when you have a population of 65 million potential patients in Latam, and you're able to give them the opportunity to be able to pay for it and a really good service, that's I think where we actually headed at. And it's very exciting, very exciting.
Yeah, we have a quick question in the chat that I also want to build on from Ian. So, if you all were to do another capital raise, you all have a presence in what is it, 3 continents at the moment? Yeah. I'm curious, A, to respect Ian's question, what that would look like for you when that would happen, and B, where would those funds go? Obviously, operational growth here, but it seems like you all could expand in just numerous different directions.
Well, yeah. I mean, when you think about the type of business that we're building, we're actually building a service business that, that's where we get most of our cannabis. So you look at the investments that we have made today, which are one of those things that people don't see. So on telehealth, call centers, services, production, the things that have to happen behind so that you get your medication delivered at home, right? So those are the type of the background systems that we need to build to be able to get this ground. We're not looking for cash right now. I think we did a raise last year, and we are comfortable with that. That being said, of course, when you're thinking about growth in Mexico and Brazil, you can think slow or you can think big, right? You're trying to think about 100, 200. We've never actually, we have a very transparent balance sheet. We have no debt except a lease back from some of the buildings that we acquired 2 years ago. And we've always been sort of conscious that unless we can start showing that growth, it's hard to think about financing that's less, dilutive or less, strenuous for the investor. So anything that we're going to be, if we're eventually going to think about it, it's for additional growth in those type of countries. And it's going to be based on the fact that now we're producing revenues and that those revenues are reducing that cash burn. And, that's sort of the story that we're telling investors as well. And that's what we're seeing every day.
Yeah, I love your website. Real quick follow-up question, Patrick, then I'll let you jump in. Your website gives some awesome numbers, and it was saying 30% of sales through digital means. Is that the type of service, and where do you want that number to be?
Well, I think when we started, the pandemic, we had to change very quickly and adapt, right? Because as you know, most of the countries, and there's still some that have very big lockdowns. And most of the patients that we have on medical cannabis, we talk about chronic pain, are above 65 years old in Bogota and Colombia. If you talk about anxiety and depression, they're 25 to 45, right? So you start to see that with the pandemic, we need to come up with new digital media so we can actually reach as many patients as possible. So we developed our own telehealth solution. And for the skincare line that we sell in Colombia, we're going to be selling soon in other countries, Latam, people stopped going to the malls, as you know, probably in the States as well. So we developed our own, digital presence, quidaskincare.com. And we started then, working a lot on digital advertising so we can get more consumers there. Luckily for us, the brand is already well known, so those repurchases happen a lot. And for medical cannabis, then the way we always think about it is our mission in life is to make the people's lives easier. And that is not just about the cannabis and how you feel, it's about the service that you get, right? So if you are in the pandemic and you're feeling pain and now you cannot leave your house and all these cops are around you because you're not leaving your house at the right time, and you can go online and try to find a solution that's on your iPhone, Android website or the phone, because not everybody's that technologically savvy, and you get that delivered next day and you get an easy payment system, and the company works a lot to get those things a lot better. That's the type of relationship that we'll build, and that's something that's going to be very hard for somebody else to try to take away from us. Also, that's sort of the way that why we put out so much effort on the digital channels. And what that will happen in the future, I will say that, it depends on the age group. And I know I'm being a little bit specific on this, but for patients who are above 70 years old, technology is not necessarily the strongest suit, right? So that small format that we've done with the satellites, it helps a lot of these patients to go to a doctor and see somebody. And particularly because, in this pandemic, a lot of the patients that are above 65, the only excuse they have to leave their house is to go to a doctor. But when we talk about anxiety and depression, those channels will increase. I don't know yet what the mix will be, but certainly digital has to be part of the strategy overall, right?
Awesome. Well, so we have about 1 minute left, Alvaro, and so I want to give you a chance to tell the investors where they can find you, right? Where they can reach out to Chiron. And then one last thing, just maybe 1 or 2 words on Mexico. Mexico, obviously, we've had some interesting news out of recently about legalization and what that means, and timelines around that. So the opportunity for you guys there, you alluded to earlier, but clearly it's a big market just waiting to pop online here, right?
Well, Patrick, so the first, you can find us any questions at investors@chiron.ca. And we trade on the Toronto Stock Exchange and the OTC, KHRN and KHRNF. Regarding Mexico, we just have to say, we've been waiting for a long time, and sometimes people may be disheartened by all the wait. But I do believe that with the last regulation that came up, it's not just legislation, but actual a step-by-step approach on how to get that done. I believe Mexico is going to happen this year, sooner than later. I believe from our point of view, in terms of the medical, it's going to be all about capturing the demand, right? There's a lot of patients, but they need to be learned, they need to be taught. And so I think the clinic strategy of being able to be in as many places as possible and doing what we do in Colombia is going to be very successful in Mexico. And as for the adult use, that's going to come maybe a little later. Again, if Mexico is one of the top 5 consumer products countries in the world of any product, I have no doubt it's going to be the same for adult use, in those type. And I think it's going to be about finished product and branding, and it's not going to be about rolling a joint and see how many you sell. It's going to be about what has made successful MSOs successful. Sorry for the double word, but it's about branding, it's about retail, it's about presence, it's about quality. And if companies are thinking about that, that's great. And that's why I'm so happy that everybody's so focused in the USA, because that helps the rest of us who actually speak the language, right?
No, that's great. Alvaro, listen, thank you so much for joining us. Guys, if you're interested to learn more, it's investors@chiron.ca. Alvaro will also be speaking at our upcoming Cannabis Capital Conference, February 25th and 26th. So obviously tune in there. But a cool company, international story, a service-based company for their clients and medical consumers. So Alvaro, thank you again for joining us, man.
Patrick, Elliot, thank you so much. And have a good day.
Alvaro. You as well.
Have a great day.
Thanks so much. Awesome company. But let's keep moving. Let's get Michael Auerbach over here, the founder of Subversive Capital Acquisition Corp. We all know who Michael is. We all know SCAAC. I'm pumped. Michael, how are you?
Oh, we may have you on mute, Michael. It may be muted. Just a quick heads up there.
Oh, apologies. Well,
all
thanks,
good.
Elliot. Thanks, Patrick, for having me.
Of course.
It's our pleasure. Yeah, just a little bit of news you guys are making lately. I mean, just a few things happening in your world.
Yeah, so we've got we've just announced our second SPAC transaction, second business combination. We're buying Intercure Limited, an Israeli cannabis operator operating as Candoc, fastest growing, most profitable cannabis company, not only in Israel but outside of North America. So we couldn't be more thrilled about that transaction.
Crazy cool company, by the way.
Thank you. And we closed the parent company, which we launched about 3 weeks ago. Closed out on January 15th. Successful de-SPACing. $381 million left in trust. California super state. We're really, we got Jay-Z and Rock Nation.
I hear he's kind of a big deal.
He's a big deal. Big deal.
Yeah.
I think Jay-Z's got you, Michael. I think it's the other way around, my friend.
Oh, okay. I didn't know. Michael's dropping an album, I guess. Here we go.
Not competing with Jay-Z. But yeah, no, it's super exciting.
Awesome.
And so I've been sort of knee deep in the roadshow since we announced the second SPAC transaction with Intercure, and the feedback from the market from the roadshow has been really exceptional. So we couldn't be happier with what's happening. I'm happy to go into sort of more details on what it is.
Well, just one quick thing, and correct me if I'm wrong, but it's the former Israeli prime minister that's leading this company. Is that correct?
That's correct. So I've been traveling to Israel most of my life. My wife is Israeli. My son was born in Israel, and so for the past 7 years, I've been trying to identify an Israeli cannabis company to acquire or invest in. And so I've met every single Israeli licensed producer. I've met every Israeli medical cannabis startup over the past 7 years. I've spent months and months and months doing diligence on Israeli companies, and I even have a small office. Subversive has 2 full-time employees in Israel, fielding inbounds. And so my relationship began with Intercure Canndoc a number of years ago through my friendship with Ehud Barak. And so, Ehud not only was the former prime minister of Israel, former defense minister, the most decorated veteran of the Israeli military in the history of the country, and just a real close personal friend. And, he reached out to me a few years ago around Canndoc and trying to find a way to import cannabis into Israel. And that's as my role as a director of Tilray introduced Canndoc to Tilray, and Tilray did the first ever export to Israel for Canndoc back in 2019. And since then, Canndoc has continued to import cannabis from Tilray and Afria, Organigram indoor flower, but also Canndoc did the first export for Tilray to our Portugal facility, where we use that product for the German market. So really just best in class operator. With a great management team, with Alex Rabinovich as the CEO, and Ehud is a seasoned investor in his own right since he's left government, and it's just a very, very talented operator and investor, and very good with public markets. And this has been a dream for this company to be a U.S. listed entity with access to U.S. capital markets. And so this SPAC transaction is really creative because we're going to de-SPAC in Canada and close on the NASDAQ. And so, from an incentive perspective, we anticipate limited redemptions because people are going to wait for that NASDAQ liquidity and the ability to trade on the NASDAQ, which will happen post-close.
Now, Israel is medicinal, correct? Is it recreational in the near future, though?
Yeah, so Israel is one of the oldest medical marijuana regimes in the world, older than California. What some people don't know is that Dr. Raphael Meshulam of Hebrew University was the scientist that discovered THC back in the 60s. And so cannabis was actually discovered in terms of the molecules, both the THC and the cannabinoids were discovered at Hebrew University. And so there's no stigma in Israel around the use for both medical and adult use. They have one of the highest per capita rates of use, both licit and illicit, within the country. And even just, talking to people of all ages, all genders, there's a real appetite to substitute alcohol and prescription drugs for cannabis within the country. And so unlike other jurisdictions that have legalized, where there's lots of education and lots of convincing, and is this safe? Is this something, it's been illegal, like I shouldn't touch it, it's a vice. Israel's the exact opposite. The population in Israel is very welcoming of cannabis as both a recreational product, as well as for medicinal purposes for multiple indications. And so it is truly a medical market today. The cannabis is sold through pharmacies. Canndoc there's 2,000 pharmacies in Israel. 128 pharmacies, I believe, currently sell cannabis, and Candoc's products are in all 128, and they're growing their own pharmacy footprint as well. And so they command about a 15% market share, and rapidly growing quarter over quarter in Israel. It kind of reminds me of Trulieve in like 2017. So it's like the Colorado market by size. and TrueLeave as an operating platform with no 280E. So all the EBITDA goes to free cash flow. And their EBITDA margins are in excess of 30%. Their gross margins are in excess of 50%. Like it's a beautiful, beautiful thing. Beautiful company.
Wow. Apparently Florida in 2017 was like a bookmark for us.
There you go.
Kyron. Sorry, Patrick, I didn't mean to cut you off.
No, I think that's really cool. And you kind of answered my question there, Michael, that in terms of where the company is, being cash flow positive, having those margins, I mean, they were the perfect candidate for you, it sounds like.
Yeah, I mean, they're the only profitable company outside of North America, and certainly one of the only companies, if not the only company, where EBITDA goes to free cash flow. Like I don't think any of the Canadian LPs are there yet.
I don't think anybody can claim that. That's crazy.
And with 280E, I mean, when 280E goes away, like obviously that's going to change. There will be lots of EBITDA positive companies in North America that will be able to flow through cash flow. But currently, with 280E in place, I think we're the only ones in the world that have this. And the coolest part about it is that in November of last year, the Israeli justice minister came forward with a plan to legalize adult use, which has, overwhelming support among the Israeli government and the Israeli population. And we've modeled that as a 2 billion plus market. So it's I'm fairly confident we'll get upwards of 50+% of the medical market, and we have a real shot of commanding over 50% of the adult use market when legalized.
Wow.
That's incredible. I'm curious, and this may lead us into a little bit of the parent company discussion, but I'm curious what consolidation strategy, is there a single strategy that you all would use when looking at Israel for CanDoc and California market? I mean, California is a jungle, but I'm curious, what that looks like for you all when approaching this.
Yeah, I mean, in both markets are similar because vertical integration is so important, and you can really capture margin with vertical integration. In like in a perfect world, you wouldn't need to be vertically integrated. That your input would be agricultural, and be the race to the bottom, and this would all be around brands and marketing. We're not there yet. We'll get there at some point. So in Israel, they're vertically integrated, one of the only vertically integrated players. And the ability to grow at cost, some of the cost metrics that they're able to grow at, that margin expansion is far superior to what others have been able to do in North America. In California, I think the same opportunity exists. Having a truly vertically integrated platform at scale, like the parent company, allows for margins that some of the other players within California aren't going to be able to compete with us on. And so when I think about consolidation and domination, I think about controlling the entire supply chain, seed to sale with DTC, and being able to put your own brands through that. And then with the parent company, I've got the echo chamber of Jay-Z, Rock Nation, and all of the artists that are going to be associated with the company, so that that social media presence, since we can't do traditional advertising, is really going to lead consumers to our products. And since we're going to own the margin from seed to sale, which is fantastic. Same thing goes in Israel. The Israeli market's a tad different because they're thirsty for North American brands. And so, one of the brands that they have a licensing agreement with now is Cookies, which is a very popular California brand that's done a great job in expanding
I was going to ask.
their brand outside of California. And so they have an exclusive with Cookies in Israel, and they're going to be launching Cookies branded products in Israel in the next quarter, as well as a Cookies branded pharmacy in Tel Aviv, which is going to be like literally off the hook. Super exciting.
Yeah, it's such a popular brand. I went to the opening of the Cookies dispensary here in Detroit. Berner was there, and Bruce Linton, and all these other folks. It was really, really cool. But I could not applaud that more. Two things for you, Michael. Sure. First, a quick shout out to Steve Allen from the parent company, who's going to be keynoting our conference coming up February 26th.
That's awesome.
He's going to give a keynote. We're super excited about it. Already thousands of people have signed up for it. So I really look forward to that. And then secondly, just a question about partnerships, right? You mentioned a couple blue bloods here. You've got Cookies, you've got Tilray, right? With the Afria money and management coming in. Do you foresee a company like CanDoc, expanding existing partnerships in order to scale initially? Or do you foresee more partnerships with other companies? What's the strategy look like there?
Yeah, so I think, we'll have a very strong balance sheet, obviously a lot stronger than anything that exists currently in Israel. For any company, regardless of cannabis, it's if we have limited redemptions, we've already raised $65 million in our pipe. And with limited redemptions, we'll have, $200+ million on the balance sheet on closing. And we're going to use that capital to finally, expand at scale the two cultivation facilities. They have one in the north of Israel and one in the south of Israel for both domestic use and for export. And they'll continue to sort of ramp up that export as well because it's a very high quality, low cost flower. And then pharmacies. So right now they've got 4 pharmacies, and they want to rapidly expand their own pharmacy network. And so similarly, if having a cookies pharmacy in Tel Aviv and a lemonade pharmacy in Jerusalem, we'll start launching additional pharmacies throughout Israel with a real focus on cannabis. And so these will be cannabis branded pharmacies. And so we'll take some of that capital to expand that. And then there's some M&A. There are some other smaller players in Israel that could be accretive to Canndocs operations in Israel and potentially for operations outside of Israel. And so I think that they'll do some strategic M&A over the first 2 quarters after we close. And then in terms of the international partnerships, Tilray and Aphria, that transaction closes sometime in April. That partnership, I think, will expand. OGI is still exporting into Israel that very high quality indoor flower that they grow out in Moncton. And then I think sky's the limit in terms of other sort of very popular brands within the US going into Israel, not just cookies, but, other brands that either I'm personally associated with through my other investments or, other popular brands within the country.
So cool. So cool. Well, listen, there's so much news that I know we're going to expect out of you. I'm sure you're gonna start to get to know us really well. You're gonna be a staple on here, Michael. So thank you for joining us. I really appreciate it.
Yeah, I'm happy to join anytime, and thanks for having me. And I got off the phone with Steve Allen before I got on, and he's excited to keynote your conference. And
all right,
and I'll be in the audience listening and cheering him on. So thanks, guys.
Fantastic, awesome, Michael. Really appreciate you being here. You have a great evening. We'll talk to you soon, my friend.
Our pleasure, man.
Cheers.
Awesome. Also, I think I saw a Peloton in the background.
I was going to say, you guys need classes together.
I got to follow him, or I need to get him to follow me. We'll take a ride.
Well, I'm the odd man out. My Peloton tread has not arrived yet. I got another month.
I told you to get a bike.
I didn't want the bike. I wanted to run.
No, you will want a bike.
No, I won't. No, I won't. No, lies.
Right, on your face. Welcome to our relationship. Another amazing cannabis hour. Subversive Capital making just tsunamis, not just waves, tsunamis in the cannabis space of recently. Chiron Life Sciences, kind of a staple, if you ask me, in terms of cannabis. But at the same time, like, they're not even close to being, I think, at the peak of what they're going to be. And then Monotech, some major education in terms of how companies can save some money within the U.S. cannabis space. So ultimately, loved our conversations today. Patrick, always love it when you join, my big and shorter brother.
Always fun. Well, and you guys, listen, the pay attention to the international scene, right? We're talking a lot about the MSOs. We're talking a lot about the LPs that are gonna eke it out and survive, right? That market and come into the U.S. market. But that's generally that North American corner of the world is a lot of what we're focused on. But look at Canndoc, man, they're killing it. They've got the right partnerships in place. The margins are crazy. Definitely one to keep your eye on.
That NASDAQ is going to be exciting.
I'm getting in that.
Also, please come back next week. Awesome show. Gage, Tilt, Qualcan, and Charlotte's Web. We will be grilling them all with our smiles. It'll be a great week. Again, thank you all so much for sticking around with this pre-market prep audience and those who are just here for cannabis. We're here to bring it to you every week. There is Cannabis Hour swag. None with my face on it. Maybe we can fix that. Regardless, we will see you soon. Thanks again, y'all.
Take care, everyone.